requirements. So one is a general requirements. General
may indicate optimistic expectations. If a company has a high PE ratio,
companies are required to comply with the certain laws or rules in relation to meeting.
A higher price is being paid.
Now,
future profit.
There are fundamental principles that must be adhered to regardless of the meeting type. That's what we want to analyze here. But later on, we are going to analyze the specific requirements for different meetings, like the annual general meeting, the board meetings, the creditors meetings, extraordinary meetings, and so on. Before we get to those different types of meetings, let's first of all analyze the general requirements for all meetings regardless of the type. You understand? Now, the first requirement is proper notice. Proper notice.
Whose earnings are subject to
proper notice. Before any meeting is held, before any company meeting is held, there ought to be a proper notice that is given out. This is the most critical requirement. The notice must be given to every person that is entitled to attend the meeting, and it must be in writing, right, which can be in hard copy or electronic form, and it must specify the date. The notice must specify the date, the time, and the place of the meeting, as well as the general nature of the business that is to be transacted in that meeting. So the first general requirement for holding company meeting, regardless of the type of a meeting, there has to be a proper notice that is issued to those who are required to attend the meeting. That's number one. The second general requirement is proper authority. There has to be proper authority. Proper authority. What do we mean by proper authority? Now, the meeting must be convened by a person or a body with the legal authority to do so, as stipulated in the company's articles of association or in the Companies Act. Not anyone can convene a meeting. The laws are very clear on who can convene a meeting, be it an annual general meeting or a meeting of creditors or an extraordinary meeting. The Companies Act and the Articles of Association of the company stipulate clearly who is to convene such meetings. So that is the second general requirement of holding any company meeting. The third requirement is in relation to quorum.
Particularly for the companies
Quorum.
that are listed on the stock
Quorum.
exchange.
Now, a valid meeting cannot proceed without a quorum. A quorum means the minimum number of members or directors that are required to attend or to be present during the meeting. And this number is typically specified in the company's articles of association. There are meetings that require a minimum number of members who are to attend such a meeting. So if the members are not present in that meeting, then that meeting cannot be held. That meeting cannot be held. And if a quorum is not present within the specified time after the schedule starts, then the meeting must be adjourned. The meeting has to be done what? The meeting has to be adjourned. That is the third general requirement. Now, the fourth general requirement is in relation to chairman or chairperson. The chairman or the chairperson. There has to be a designated person. There must be a person, a designated person. In other words, a designated person must chair the meeting to ensure it is considered an orderly and the meeting is held in an orderly and fair manner. You understand? That's a requirement. The meeting must be chaired by a designated person.
If a company is not quoted on the stock exchange,
and this person ensures that the meeting is held in an orderly
method
and fair manner.
Understand?
Chairman.
So we take the PE ratio of a similar quoted company
5
or even just
minutes.
the average PE for the industry. And
That's another requirement for holding a meeting.
Earnings
Minutes.
available to the shareholders. That is
There
profit
ought to be
after tax
detailed minutes of the proceedings
of the company
that
is
must be kept, and these minutes,
So if you are
The minute.
valuing an
Okay.
unquoted company,
the business that is conducted in the
use
meeting
the PE
must
ratio.
be documented.
and arrive at a lower value, in order to
Detailed
reflect
minutes
fact
of the
that
proceedings
shares are
must be kept.
currently not
And these minutes are a legal record of the meeting and must accurately reflect the decisions or resolutions that are made during the meeting.
Then we
They
have
should be
earnings
signed
yield
by the chairman. These minutes must be signed by the
Earnings
chairman of the meeting
yield
or
method, the earnings
the
yield
chairman of
method
the
or
next
approach.
meeting.
Cost
Minutes.
standard, whereas the PE
That is
ratio
general requirement number 5.
value,
And these are the general requirements of holding
or
meeting regardless of the type of meeting. So first of all, I said we are studying the general
market
requirements,
value
the first one being
and the
proper
EPS
notice.
value.
Number 2, proper authority. Number
We
3,
know the
quorum.
earnings
Number
yield
4,
is just the
chairman.
inverse of the
Number
PE
5,
ratio.
minutes.
You understand?
That is the first part of this lesson.
So we take
Then
the
number 2,
earnings yield
you want to
of a
study
quoted
the
company
specific
and apply
requirements
it to the company that
for
is-
different
that is
meetings.
being
Specific requirements for
That is
different
being
meetings.
valued.
Specific
So we may have 3 approaches. Market value
requirements
on the stock exchange when valuing
for different
a target,
meetings. There are
especially the companies that are
different
quoted
kind
on
of
the
meetings that a
exchange.
company can
If a
hold.
company is not quoted on the
One
exchange,
such meeting
we may
being
use the PE
the
ratio
annual
method,
general meeting.
or we use
Number
the
1, we
earnings
have the
yield method.
annual
Now let's
general
have an
meeting.
illustration.
The annual
This is again
general
August
meeting.
2023, question 4.
What are the
The statement of financial
requirements
position of 2
for
companies,
annual
ACO
general
Limited and
meetings?
Bureau Limited, as at
Annual
31st
general
December
meeting
2022 are shown
or
below.
AGM.
So we have
Now,
the
an
statement,
AGM
additional information number
is a
1.
formal meeting
ACO
of the
Limited
company's
is
members
proposing
that
to
is
acquire
held
Bureau Limited
once
by
a
means of
year.
an issue
That's why
of
you are
its
referring to
ordinary
as
shares in exchange
annual
for the
general
company
meeting.
shares.
Companies are
Bureau
required by
Limited.
law to hold
Number 2,
an annual
the management
general
of the 2
meeting.
companies have availed the following information to assist
So,
the takeover.
in
They have
studying the
obtainable
requirements
annual
of
plans after tax,
holding a
suitable
general
to
meeting,
shareholders,
then
current
we
market
need
price
to
per
ask ourselves
ordinary share,
who
you
must
have the
hold
current earnings per
an
share.
AGM.
The tax rate is
Who
30%.
must
Using
hold an
earnings per share
AGM, an annual
basis
general meeting. Now,
and
every
market value
company,
basis,
except for
and
a
assuming no
single member
synergy
company,
effects accrue from
every
takeover,
company
determine the total
must
number of
hold
shares the
an
directors of
annual
ACO Limited will
general
have to
meeting
offer
each
the
year.
shareholders of Bureau Limited.
And we have even public companies that are required to hold their annual general meeting within 6 months of their financial year
So
end.
let us
Understand?
answer it.
Private companies are not legally required to hold an
Calculate the
AGM
number
unless
of
the
shares
articles
based on
of association
EPS
say so. But
based on
public limited companies are required to hold an annual general
EPS
meeting.
earnings per share.
Private companies are not required by law to do so. But if the articles of association states that there ought to be an annual general meeting, then such an annual general meeting
Illustrate.
must
This
be
is KASNEB past
conducted.
paper question.
So then number 2, we need to
August
study the
2023,
notice.
question 4.
Remember we
Using
said that
earnings per
one
share basis.
requirement for holding any meeting
Using
regardless
earnings
of
per
the
share
type
basis
is having a
and
proper
market
notice.
value basis. Those are 2 approaches.
Now,
so
for
let's begin with
A
earnings per
private
share
company,
basis. The earnings
the notice
per share
period must be at least 14 days
basis. Using the
or
earnings per share
21
basis.
days
What
as
is the
per the
question?
Companies Act.
The question is,
But for the
determine the
public
total number of
companies,
shares the directors
the
or the
notice period
acquirer
is
would have to offer to the
at
shareholders
least 21
of the
days.
target
The
company.
company articles
So
can
here we have to
specify a
calculate the
longer
number
notice
of
period,
shares to be
but the Act
issued
specifies
to
that
acquire
it
the
has to be
target. That's the
at least
question.
21
The
days.
number of
So that is the requirement when it
shares
comes to notice of an annual general meeting.
issued.
Then number 3,
will be
the third requirement when holding an annual
exchange
general meeting
ratio
is in relation to the business transacted. Business
times number
transacted.
of shares of the target.
Business transacted. Now, an annual general meeting typically deals with routine matters,
Exchange ratio.
including
Not have
approval of the company's annual financial statements and reports, Another routine matter could be declaration of dividends. It could be the appointment of the directors or appointment of auditors,
First of all, we need to
or appointment and fixing the remuneration of auditors. These are routine matters that are transacted during annual general meeting. So the law is also clear on what businesses or what business ought to be carried out or conducted during the annual general meeting. So that's the third requirement in relation to the meeting we are referring to as the annual general meeting, the A. Then number 4, we can study the procedures. The procedures. Now, to comply, the company must ensure all required documents are circulated to members along with the notice. Now, to carry out candidates an annual general meeting, there are procedures that have to be followed. For example, is ensuring that those who are to attend the meeting have access to the required documents like the annual report, like the financial statement, that ought to be circulated to members along with the notice. So these are the requirements of an annual general meeting. Let's now analyze the requirements of the extraordinary meeting.
So we come here and plug in 1.25
ordinary
by the number of shares is 5
meetings. This is another type of meeting that can be held by company. Now, an extraordinary meeting is a meeting of members convened to discuss special or urgent business that cannot wait until the annual general meeting. That's why it's called extraordinary. So the question we need to ask ourselves is, who must hold or who can convene such a meeting? The first requirement, who can convene such a meeting? One,
market
who
value or basis
can convene
the number of shares,
an extraordinary meeting.
Formula, number of shares.
Now, the directors can convene an extraordinary meeting
issued
whenever they deem it fit.
Equal to, again, the exchange ratio.
You understand?
We take
the directors can convene an extraordinary meeting.
But
members also have a right to requisition such a meeting. Number 2,
of the target.
Members' right.
So this is working 1.
To convene.
Working 2.
The shareholders, apart from the directors, the shareholders may also have the right to do so. The Companies Act gives members a right to convene an extraordinary general meeting
of the target.
You understand? Members holding a certain percentage of the company's voting shares can compel the directors to convene or to call a meeting. And if the directors fail to do so within a specified time frame, and this time frame is 21 days, then the members can call the meeting themselves at the company's expense. So the directors can convene this meeting. The members can also convene the meeting. We are calling extraordinary meeting.
1.125.
Yes. Then let's discuss the notice in relation to extraordinary meeting. Notice.
1.125
notice
times
notice
500.
notice. Now, the notice period for an extraordinary meeting is generally 14 days. So the notice here is 14 days.
Exchange ratio
14 days.
equal to 5.
Then what of the business that is to be transacted? Business transacted?
500.
Business. What business
This is the number of shares
is transacted
issued to the target. 500
during an extraordinary meeting?
shares.
Now, an extraordinary meeting deals with specific
that
non-routine matters
to an end,
such as altering the company's articles of association, approving major
a target
transactions,
using the
or
market.
removing a director, and so on. These are non-routine matters, as opposed to the annual general meeting that deals with the routine matters like the appointment of directors, auditors, and so on. So that is a business that may be transacted during extraordinary extraordinary
Welcome
meeting.
to Manifested Publishers.
Understand?
My name is Mr. Mariga.
And it is important to note
I
that a resolution that is
be
passed
teaching you
at an
advanced
extraordinary
management,
meeting is
accounting,
often a special
which
resolution.
is in the advanced level.
If resolutions
Today
are
we will talk
passed at an
about
extraordinary
a
meeting,
topic
it is
known
usually a
as
special
cost estimation
resolution.
and interpretation.
Special
Cost estimation
resolutions
and
are issued
interpretation,
at an
which
extraordinary
is a
meeting,
topic closely related
which requires
to
75%
cost estimation and
the majority
forecasting
of the votes that are
that
cast.
was covered in the intermediate
And the notice
level.
must clearly
So
state
what
that
we're doing here
a
today
special
in this
resolution
lesson and
will be proposed at
for
the
this particular
extraordinary
topic
meeting.
is simply developing that
So that's all we can
what
say
we
about
learned in
extraordinary
intermediate
meetings.
level under
This
cost
is the second type of
estimation
meeting.
and what?
The first type is
Forecasting.
the annual general meeting.
Now,
Candidates,
cost
we are studying
estimation
the
here
special or
simply
specific
is
requirements
study
for different types of meetings. The first one is the annual general meeting. The second one is the extraordinary
variables.
meeting. The fourth one is the
Dependent
board
variables here are your costs
meetings.
and
Board meetings.
independent variables.
Now,
and independent
board meetings are
variables,
meetings of the company's directors
which
to
are
discuss
what?
and make decisions regarding the
Your
company's
activity
management.
level.
So what is the frequency of this meeting? So the first requirement is in relation to
Activity level or
frequency.
your output.
How frequent are these meetings
Okay.
held? Now, the
Then
company's articles
once you
usually
have
specify how often board
identified
meetings should
how
be
they
held.
relate, how the
It could be
dependent and
2 times in a
independent
year, 3 times.
variables
Depends on the
relate,
articles
or how
of
the
association
cost
of the company.
and your activity relate.
What of
The next
the
thing
notice?
is forecasting. Where forecasting
Notice. Now, are there notices that are
or
required?
cost
Yes. The
forecasting,
company's articles of association
simply it is an
typically also
attempt
sets the notice period for board meetings,
to
which can
predict
be
future costs,
much shorter and
to
less formal
predict
than for general
future
meetings.
costs,
Then number 3, we have
using
quorum. Are there any requirements in relation to quorum
the
of board
cost
meetings?
relationship obtained.
Yes. The
Using
quorum
the
for a board
cost
meeting is usually specified
relationship
in the articles of association of the company.
obtained.
The article of association of the company will
Using
specify
the cost
the quorum
relationship
that
obtained.
is
So
required
simply,
for board
it is
meetings to
using
be
this cost
held.
estimator equation
Then
here,
lastly, we have
or
minutes.
relationship. Then you use it to predict a future cost.
Minutes.
You use it to predict a future what?
Minutes. Now,
cost.
the company's
Then
act
interpretation
requires that
here simply
minutes of all
is
proceedings
how
at board
you
meetings are
interpret
recorded
or how you
and
further
kept at
analyze
least
whether
7
the
years,
cost
for at least 7
estimator
years. The minutes must be kept
relationship
for at least
is good
7 years,
or
and
whether
these
it
minutes
is
are a key
significant
legal
or not
document and can be
significant.
used as
We have
evidence
two
of
main
the
methods
board's,
of cost estimation.
the board's decisions. You understand?
We have two
Yes.
methods.
Then lastly, we have the
First
directors.
method is linear
What are the directors' duties in
relationships
relation to these
or linear
meetings?
methods.
Directors'
Linear methods. Under linear methods here,
duties.
we normally
Directors'
assume
duties.
that cost when
Directors'
plotted
duties. Now, at all
or
times,
the
directors
equation
must comply
or the cost
with
relationship
their
is linear
fiduciary
in nature.
and
So here the
statutory
assumption
duty
is
to
that
act in the best
the
interest
cost
of the company.
relationship is linear in
So
nature.
when dealing with board meetings, there is a
saying
requirement
the
that
cost
the directors
relationship
to be loyal.
linear
The
in
directors
what?
are required by law
When we
to
say it is
comply
linear in
with their
nature, we
fiduciary
basically mean
duties
that
and statutory
the
duties,
equation
and
can
these
be
duties
expressed
require that
in
these
the
directors
form
act in the best
y
interest
is
of the company.
equals a plus who
And their deliberations
b
and decisions
x.
at board
Can be
meetings
expressed in the form
must
y
reflect
is equals
these
a plus bx,
duties. They
or
must
your
reflect
cost is either
fiduciary
fixed
and statutory
or
duties.
variable cost. Your cost is
Understand?
either fixed, which is f,
Yes.
plus a variable cost
So
VQ,
this is
where
the meeting we are referring to as board meeting.
y
Then lastly, let us analyze
is your
creditors meetings.
dependent
Creditors
variable. Your what?
Creditors
Your total costs.
meetings.
That
This
is
is
your
a meeting
dependent variable
of
or your
creditors.
total cost.
Creditors meetings.
A
Apart
or
from
F is
the
your
board
fixed
members,
cost,
apart
is
from
your
the
slope,
shareholders, the auditors
slope,
may
but,
also convene
the y
meeting.
intercepts,
And these are meetings that are held
which is
during the
Y,
company's liquidation,
when X is who,
administration, or
Zero.
restructuring.
which could
When the
also
company is
be
restructuring,
mean that
when the
this
company
is
is
your
facing liquidation,
fixed
then
cost.
there may have
That is
the
your
company may
fixed
have to
cost.
conduct what we are
Then
calling
B
the
and
creditors
V is your
meeting.
gradient.
So
or
what
your
is the
slope,
purpose of this meeting?
which is your change
One,
in Y over change in
purpose.
X, meaning it is your
What is
variable
the
cost
purpose
per who,
of
per
creditors
unit.
meetings? Now, the
B, which is
purpose
V,
of conducting a creditors meeting by a
this
company
is your slope
is to inform creditors
or
of
what?
the company's
Gradient.
financial status. It may also be to approve
Slope
the
or
scheme
gradient,
of
which
restructuring or
also
arrangement,
means
or to
that
appoint
it
a
is your
liquidator.
variable cost per
When a
unit,
liquidator is to be appointed, then the creditors must be
which is your
involved,
variable
and they can only be involved when a
cost
creditors meeting is called. So
per
I've identified for
unit.
this the purposes
Remember,
of creditors
your
meeting.
variable
Number one
cost changes with
is
output. It
to
increases
inform
with
creditors
increase in
of
output,
the company's
decreases
financial
with
status.
decrease in
The
output.
second purpose is
X or
that
Q.
the meeting can
X
be
here
held
is your
when approving a
activity
scheme
level
of
or your
arrangement
independent
by the company.
variable. So
Or
this
number
is
three,
your independent
when
variable,
the company seeks to appoint
which
a
is
liquidator.
also your activity level,
So these are part of the requirements we are discussing.
which
You
could
understand?
also be your output.
Then let's
Then
analyze the legal basis. What is the legal basis?
the product of your
Of holding
variable
a
cost
creditors
per
meeting.
unit and your activity
Now the
level
process
will give you your
for creditors
total
meeting is governed
variable,
by the
total
Insolvency
variable
Act
what?
of
Cost.
20.
Your total variable costs. Right.
So that
So with
is a
linear
requirement.
methods, the
When
relationship is
conducting a creditors
in the form
meeting,
Y is equals
then
A
the
plus what?
meeting has to be conducted in line with the
BX, or
Insolvency Act
cost
of
is equals
20.
to favorable plus to fixed plus
Plus.
variable costs.
The
We
administrator
have examples
or
of
the,
methods of linear.
Liquidator
Examples
must
of
comply
linear
with the
methods.
strict procedures and
Examples of
timelines
linear
that are outlined
methods
in the Insolvency
of
Act,
cost
including
estimation.
sending notices to all non-creditors,
Examples of linear
including
methods
preparing statements of
of
affairs,
cost
and
estimation.
also conducting the
The
meeting
first
in
method
a manner that
is high-low
allows
method.
for a
Then
fair
we have
vote.
ordinary,
So these are the requirements for holding
least
a creditors meeting.
squares method.
And that's the end, candidates, for today's lesson
Ordinary
on
least squares method.
complying with the
The
requirements.
third
Complying
method
with the requirements of various
is
meetings.
accounts analysis.
At the beginning, we did state
Accounts
that
analysis
complying with the various
method.
requirements of various meetings
We also have
is the
industrial
cornerstone
engineering
of
method.
good corporate governance. We did also state
And
that
lastly is method of scatter graph.
failure to comply with these requirements can have serious consequences, including invalidation
Scatter
of
graph
resolutions that are made during the
method.
meetings, including legal action
So let's
and
start
also fines and
with the first
reputational
method
damage.
known as the
We've gone
high-low
further in
method.
this lesson
So
to
the first
analyze
method
the general requirements
is the high-low
that
method.
companies are required to
Estimation,
comply with, regardless of the type.
Now, this method,
There
known
are
as high-low
fundamental
method,
principles that
requires
companies must adhere to, regardless of the
a user
meeting
of
type.
management accounting
And
information
one such is
that
proper notice,
you form
proper authority,
cost estimator
forum,
equations
chairman,
that are of
minutes.
the form
Then we've
Y
analyzed the
is
requirements
equals
for
A
specific
plus U,
meetings.
B,
The first
Q,
meeting type is
or
annual
BX.
general
So we should
meeting.
call
We've
that
studied the requirements
BX.
of extraordinary meetings.
That way.
Then number
Such
3
that
is a
this
board
equation
meetings.
here
Then lastly,
will
we
be
have
of
the creditors
costs. Remember, Y
meeting.
is your cost,
Creditors meeting. The
A is
requirements
your
for
fixed cost,
creditors meeting.
B
Now,
is
in
your
closing,
variable cost per
we can
unit,
state that
and X or Q is your
compliance
output. X or Q is
with
your output
meeting
or your activity
requirements
level.
is
So using high-low
a
method, we
detailed
start
process
by selecting
that
your
requires
dependent and independent
understanding
variables.
of the Companies Act,
Dependent
the
and
Insolvency
independent
Act,
variables
Articles
is
of Association,
Y and
and
X,
the
or Y and Q.
various
And how do we do that? We select
laws
the
that
highest
pertain to
value
meetings.
of the independent
And that
variable
requires the
X
company secretary to be
and the
quite
cost incurred.
skilled.
Then you
A
select
skilled company
the
secretary
lowest value
here
of
becomes
X
an
and the cost
invaluable asset
incurred,
in ensuring that
such
these
that
requirements are
now
met,
you will have 2
which
points.
then
You
protect
will
the
have 2
company
points
from
that you
legal
can then
and
use
financial
to
risks.
form an equation.
So that's why we are studying
And I want us to look at a
the
question of December
subtopic on
2024.
complying with the requirements of various
December
meetings. So as a company secretary, you need to
2024,
understand
question
what are the
1B.
requirements of various company
The
meetings,
company name
which
is
include
known as
the
Mario
annual
Processing.
general meeting, what are the requirements for the extraordinary meeting, what are the requirements for the board meetings, what are the requirements for the
The saying of the stating,
That's the end of today's lesson.
the
on
management
complying
of Mario
with the
Processing
requirements of
Company
various
Limited
meetings.
wishes to
Bye-bye.
obtain a better
Bye.
cost estimate to evaluate the company's operations more effectively. The following information
I
is
welcome you
provided
once again to
you
the Manifest
for
e-learning platform.
analysis.
The
You
subject
have
is
your
principles
year
of marketing and communication.
and the month,
Today,
the
we
equivalent
are
production
proceeding with
units
the
in
first
thousands,
chapter, and we
your
are going to
overhead
learn
shillings
the
in
importance
thousands.
of
You
marketing.
have the months
That
is
is our
from
focus
January
for
all the
today.
way to the month of
We will be discussing the
December.
importance of marketing. And
In
therefore,
the month of
by
January,
the end
you're
of this
producing
lesson, you should be able
1425,
to
incurring 1285.
explain the importance
February
of
producing
marketing.
950, incurring
If you recall, in our
9875.
last session,
March
we
1130,
defined
cost of
3
10
key
for
terms
50.
of marketing.
April
One being
1690, a cost of
market,
15 to 80.
number 2,
May
marketing
106,
and market
1006,
We
a cost of
defined
9915. June
a market
834 is your
as
units.
a group
Your
of
cost is
all
9150.
the actual and
July
potential
982 units,
buyers of a
overhead
particular
of 10
product or
133
service.
shillings.
Went ahead
August
to define
1259 units,
marketing
a cost of
as the process through which
11981.
organizations
September
identify
1385
customer needs,
units, a cost
engage
of
customers, and also
12045.
build
October
strong
1420
relationships
units,
by
a cost
creating
of
value for customers in order
13180.
to
November 1125 units,
earn value
your
in
overhead is
exchange.
11910.
So that's the meaning of
December 980
marketing.
units,
Today we want to
with an overhead
discuss the
cost of
importance
10
of marketing.
for
And
31
marketing, we know,
required.
is
Using
vital
the
to
high-low
both the
method,
business
formulate the
organizations
overhead cost
and
function
also
in the
the
form of
economy,
Y is equals
and it
A
performs
plus
various
B
roles.
X. Using
And the first role or importance
the
of
high-low
marketing
method,
is
formulate
identifying customer
the
needs.
overhead cost function
One,
in the form of Y is equals A
identifying
plus BX. Let me start by listing
customer
down all these costs.
need.
You'll have the
That's
month,
one reason why marketing is important.
you have your units,
Identifying customer needs. Marketing
your
helps
units there, and you have
organizations
your
understand what
overheads.
customers want through market research and feedback.
I want to list them
For
down.
example, by providing or studying customer preferences
Why?
or income levels,
Show you
or by studying tastes and
is
buying
happening
behavior,
clearly.
organizations are able
Have the month
to
of
design
January,
products and services that meet real market needs rather than
Feb,
guessing. So instead of
March,
guessing, a company can,
April,
through marketing, identify
May,
customer needs.
June,
For example, an institution like Manifest
July,
Publishers, which offers
August,
KASNEB online tuition,
September,
may survey students
October,
to
November,
know their preferred
and December.
study times and course formats. And the course format could be online format or
Your units
physical
is
format.
1425.
And that ensures that
With a
services
cost of
meet
12,
students' needs.
185.
So instead of just guessing what
February,
students may want,
950.
marketing may help the
With a
organization
cost of
to first
98,
identify the needs of the customer,
75.
then develop products that
March,
meet the needs that they have
1130.
been identified.
With a
So
cost
that's
of
one reason why
10,
marketing is important. Identifying customer
April,
needs.
1690.
Number 2 is
The
creating
cost of 15,
awareness.
180. May,
Marketing creates
1006.
awareness. Marketing
99.
informs customers about
June,
the existence, the
834.
features, and even the benefits of products and services. And that can
Cost
be
of
done through
91,
advertising, through
50.
promotions, through social media, and marketing
982.
with the products of the company.
10,
Creating awareness. You
33.
recall we did mention that marketing
August,
is
12,
very broad in
59.
scope, and it includes
11,
not only identifying customer
980.
needs, but it extends
1.
to promotion, to
Then
distribution,
September,
and so on, including
1385.
customer relationship management. So through marketing,
That is
the
205 as your cost.
organizations or companies can create
October
awareness
is
of their products.
1420.
They can create awareness of the features of the products, the
1318.
benefits of the products, and so on.
November
Understand?
11.
For example,
25.
advertising the
This
KASNEB
11.
online tuition or classes on social media
910.
platforms help students become aware of the available courses
980.
and the enrollment
Lastly,
periods.
10.
I know some of you
430.
have to know about manifested
One.
through marketing.
10
Manifested may
430.
have
We
done
have listed down
marketing
all
on
the
social media,
costs and the units
which
that were
force you
produced.
to
Now,
know the
after
existence of
we've
the
listed
product
down
at
that,
manifested
or using
published.
this data
So
now, we
that's
need
the
now
one
to
reason
form
why
equations
marketing
of the
is
form y
important.
is equals a
Creating
plus
awareness.
bx. But
Creating
for us to
awareness.
do that, we need
Number
to
two
ask ourselves,
or three,
what is y and
marketing
what is x?
promotes.
Y is your cost, or
Marketing promotes
the dependent
profitability
variable. We say it is
and
dependent
sales.
because it
Promotes
can only be incurred when you
profitability
do what? When the independent variable
and
is incurred. So
sales.
the y,
If you
which
are
is the
running a
dependent
company
variable,
and
it
you want to
is
increase your profits,
dependent
that
on
can
the
be done through
independent variable.
marketing.
And in this case,
Effective
y will be your overhead
activities
cost.
stimulates
Y
demand.
will be your
Effective
overhead cost.
marketing
So that will
activities
give
can
you y.
stimulate demand.
Then that automatically means
You understand?
x is your who?
Yes.
Your output.
Marketing
Or your unit
activities
produced,
can stimulate
so
demand,
this is x.
leading to increased sales, leading
Your
to increased
units
profits.
produced is x.
Effective
Your units
promotion,
produced is x.
pricing,
Why are we saying
effective
that?
distribution
Because
strategies encourage customers to
the
purchase
overhead
products
costs were incurred as a result
which
of the
then
units being
improves
done what?
revenue
Produced.
and business growth.
Then what did you
The
do?
company
You
may
select
offer
the what?
discounts
The highest
on
independent
say
variable
television
x,
on
and
if it's a company that is
its
selling
cost.
televisions,
You
the
also
company may
select the
offer
lowest
discounts on the
independent
televisions or any kind
variable
of product which then promotes
x
profitability
and its
sales.
cost. So from the month
Number
of January
4,
to the month
marketing
of December,
facilitates
I can see
exchange.
the highest units produced.
Exchange.
The highest.
This is exchange of value.
The
Marketing
highest
links
units
producers
I can
and
see the month of
customers,
April,
which then enables
which
the
is
exchange of goods or
1690
services for money.
units. And when you produce
The
1690
value
units,
that the
did
customers get from the
incur
product would be from the
overhead
companies
cost of how much?
it's a
You
product or service.
incurred an overhead cost of 15.
The companies sell
280.
value in form of products or services,
280.
and the
That is
companies
the highest
receive
points.
money or
Then your
loyalty in
lowest
exchange
units
of the
is the
products
month
that are
of when?
sold to
June.
the market.
You
So through marketing,
produced 834 units.
there is that
ended up
exchange
incurring
of
a cost
value
of how much?
between producers
91,
and the consumers.
50. A cost of 91,
Understand?
50.
Through proper distribution
Once
channels,
that is done, you
through
have successfully selected the highest
pricing and communication,
and the
marketing
lowest
ensures products reach the right
units
consumers
and the cost
at the
incurred
right
as a
time.
result of those
The
highest
products reach
and
the
lowest
consumers
units being produced.
at the
The
right
next thing we do
time.
is we then
That is
form
one reason
two
why marketing is
simultaneous
important.
equations
Because you know
of the
there are
form
times
y
when
is
you may
equals
have products
a plus what?
and
bx.
the products may
By now
not
we do
be
that,
needed
we
at certain
simply
time. The
substitute
product may come late
the values
or
of
even
y
later
and
when
x.
the need has
So
already been
we
met
form
or when
equations.
the times are not
And the
for the
equations,
products to
remember,
be
should
consumed.
be of the form y is equals a
For
plus
example,
what?
online
bx. You have your values of
platforms
y
allow
and
students to register,
x.
to
We
pay,
simply
and also
substitute
access
now
study
and say
materials,
15 to
which makes the
80
exchange process very smooth
is equals
and
to
efficient.
You don't know the value
So marketing
of b,
facilitates
but you know
exchange
x
of
is
value.
16, 90.
Number 5,
The second one will be 91,
encourages
50 is
innovation.
equals to a plus 8.
Marketing encourages innovation. And how does marketing
34
encourage
what?
innovation?
B.
Now, marketing feedback
Okay.
drives
That is
product
that.
improvement.
Then what then do we need to do?
It drives
we then
product
solve for the
development
value of a
of
and
new
b.
products.
To
understand?
solve for the value of a and
When
b,
you get
we know b
feedback
is
from
said
the
is your
market,
gradient. So what does it mean?
because
We simply take
marketing
the change in y
involves
over change in
also
what? X.
studying the needs of
B
the customers.
square change
When the
in
company
y
studies the
over
needs of the
change in what?
customers,
X. How
the
is that
company gets
possible?
ideas on how to
Your
improve their
y
products,
is
and that
15 to
encourages
80.
innovation. product
minus
development
50
is made possible
divided by
through marketing
X
because of the feedback
6090
that the company gets from the
minus
customers.
8.
The company may also receive
value of
complaints
B,
from the customers.
the value
Customer
of
complaints, suggestions,
B,
and also the changing tastes may guide the business
7.16
in improving existing products or introducing new ones. For example, students
7.161
requesting
to
recorded lessons may lead to the introduction of pre-recorded video lectures.
What do you then do? You then
You understand?
substitute the value
A company
of B
may introduce
in either the
pre-recorded
first or
video
the
lectures
second
as
equation,
a
so
way
that
of
you
responding
determine the
to
value
feedback
of
from the
A.
students.
So that
So
you
that
can use it to
encourages
determine the value
innovation
of
in
A.
form of coming up
Say
with the
15
pre-recorded
to 80
lessons.
is
Then
equals to
the sixth reason why marketing is
A
important is that it enhances
plus
customer satisfaction.
1690.
Marketing enhances
But the value of B, we've just
customer
obtained it as 7.1612.
satisfaction and customer loyalty. Through marketing, customers may become loyal to a company, or they may be satisfied with the products or services that are offered.
So now A will be
marketing helps build long-term relationships with customers. Through marketing, a company can build long-term relationship with its customers.
So the
For
value
example,
of B
by
should
meeting
be
expectations and offering, say, after-sales support, firms create
77
satisfied customers who remain loyal and make what we call repeat
7.
purchases.
So your equation that is straight line in nature
So through marketing,
B
customers get
is equals to
satisfied,
that 177
and that leads to customer
5467
loyalty. That's why marketing is critical.
7.16
You understand?
1 2 of who?
7.
Of X.
Marketing supports economic development.
That is how you form a cost estimator equation.
And how does marketing support economic development?
High-low.
Now, marketing contributes to overall economic growth because it creates demand for goods and services, leading to increased production, and increase in production leads to increased employment. It leads to income generation. Increased production may also lead to tax revenue.
One of the main disadvantages of the high-low method,
for example, it manifested because of the introduction of online educational classes or services that has created jobs for
another disadvantage
lecturers,
of this method,
it has
you
created
cannot
jobs
use it when you have more than one
video editors, it has created jobs for
dependent or
support
independent
staff,
variable X.
and that
You cannot use
in
it
itself
where you have
increases
more
what
than
we
one
call
independent variable X. You can
supports
only use
economic
it when you have one
development.
X.
We have IT support staff, we have
The other
content
method,
creators
the other
who
disadvantage
are
of
then
this method
graphic
is that
designers who
the validity and reliability of this
contribute
equation
towards
cannot be done
economic development.
determined.
So these are
You cannot
7
interpret
reasons
and say that this
why
method or this
marketing
regression
is
equation we
important.
formed
Today
is
we've studied
accurate
the
or is
importance
not
of
accurate.
marketing.
Or
One
if it is
is that
accurate, to which level
marketing
is it accurate,
identifies
and so on and so
customer
forth. So those are some of the
needs.
challenges of
Through
the
marketing,
high-low method.
the
And
consumers
these
get
challenges
to know
of high-low
about the
method,
existence of
these
products, the
challenges of
features of the
high-low method
products,
can
and so
be
on.
done
Number 3, marketing
can be
promotes
mitigated
profitability and sales.
using the ordinary
Number
least
4,
squares what?
marketing
So I
facilitates
want to talk
exchange
about the
of
second
value
method,
between the
ordinary
producers and the
least
consumers.
squares
Number 5,
method.
marketing encourages innovation, and this innovation is made possible as a result of receiving feedback from the market. When companies receive feedback from the market, from customer complaints, from
Hello,
customer
candidates,
suggestions,
and welcome to the
that drives
Advanced Financial
innovation.
Management Learning
Then
session.
6,
The
marketing enhances
topic
satisfaction
is mergers
and loyalty of
acquisitions.
customers.
In our today's
And lastly,
lesson, we're going to
marketing
discuss
supports
the
economic
regulatory framework
development.
for
So these are
mergers
7 reasons
and
why
acquisitions.
marketing is important.
Regulatory
Thank you
framework
for attending the
for
lesson.
mergers
In our next
and
session, we continue
acquisitions.
with
And in
our
this
lesson
lesson, we're
on
going
marketing
to
and communication.
highlight some of the
Bye-bye.
regulatory bodies and legislation govern mergers and acquisitions in Kenya.
Learner,
Welcome
the
to Manifest, the
regulatory
e-learning platform.
framework
My
for
name is
mergers and
Emmanuel,
acquisitions in
and
Kenya
today, ladies and gentlemen, we are discussing
is
business and
designed
data analytics,
to
December
ensure
2024.
fair
and
competition
focus will be
and
on
also
question
to
21.
protect the interests
Let's
of
read through together.
various stakeholders.
Workwe Limited
Where
is a public entity which has
companies
grown
choose
in
to
recent
merge,
years
or
by
when
acquiring
a company
established
decides
business
to
entities.
acquire another one,
The directors of Workwe
that
Limited
decision
have identified
is
two potential
likely to
entities
affect many
targeted
stakeholders, like the
for
employees,
a takeover.
the management,
The directors
the
believe
shareholders,
that the shareholders
the
of the two
investors,
target companies
the members of
would
the
be
public, and so on. And
receptive
therefore,
to
it's
a takeover.
important that
As a
these
prerequisite
transactions are
to the
regulated.
takeover decision, the directors have tasked
That's why
a
we
firm
have
of
regulatory
consultants
bodies in
to
Kenya
carry out a
that
cross-sectional
help
analysis
in
of
ensuring
the
that
financial
the
statements
interests
of the two potential
of
target
the
companies
various stakeholders
which operate in
are
the same
protected.
industry sector. The financial statements
So,
of the two entities
first
as of
regulatory
30th
body
September
is
2024
the
are shown below.
Competition
The statement of profit or loss for the
Authority
year
of
ended
Kenya.
30th September 2024, you can see for the two companies, and this is
Competition
an abridged profit or loss statement for Remy Limited
Authority
and Pepino Limited.
of
We also have an abridged
Kenya.
statement of financial position
The
as at 30th
Competition
September 2024 for
Authority
both
of
Remy
Kenya
and Pepino Limited.
is the primary regulatory body
So we have
that
the
is
assets,
responsible for
current assets,
overseeing mergers and
the total assets.
acquisition
You
activities
obviously
in
know
Kenya.
that the total assets should equal to the total
And
equity and
the
liabilities.
mandate
We also
of
have now
the
equity, non-current
CAK
liabilities, current liabilities, and
is
total equity and
derived
liabilities.
from the Competition
You are required
Act.
A.
It is derived
Common
from
size statements of profit
the
or loss
competition.
for the two entities for the year ended 30th September 2024.
This is
B.
an
Common
act of
size
parliament,
statement for the financial position as at 30th
that,
September 2024. And C.
stipulates that
Advise the
there ought to
directors
be
of
a
Workwe Limited
competition
on
authority
the
of
best
Kenya, which
company
has been put in
for
place since
takeover.
the year 2010.
And just as the way we've been doing,
It is the principal
we've been
legislation
doing
governing
in terms of the developing solutions, we will
mergers
move
and
towards the right
acquisitions.
over here, so that
Right?
now we can be able to develop the solutions
the
together.
Competition Authority
And so right over here,
of
I
Kenya.
can be able to just talk about
is
Remy
the
Limited
principal
percent over here. So I can just
governing
pick this
body.
component like
And
that.
the
Remy
role
Limited,
of the
of course, I will maybe perhaps just need
Competition
to move
Authority
towards
of
the right
Kenya
here so that
is
you
to
can
prevent
visualize it better.
anti-competitive
And we talk about
practices
the
that may
percent.
arise from mergers and acquisitions.
Percent.
Do you understand? That is the primary role
Percent.
of the CAK. Is to do what? Is to prevent anti-competitive practices.
So once we have that, then
that may
you can
arise
bold in
during
this,
these
it will
transactions, the mergers
and then
acquisitions.
on the right over here, we are saying because we
The
have
second
both
body
Remy
is the
and Pepino Limited like that
Market
given to us over
Authority.
here. They can just maybe perhaps
Capital.
squeeze it right over here through. I hope you don't mind
Market
like that, because we can be able to see everything given to us right over here.
Authority.
So we just push this.
CMA.
Or rather, excuse me for that. We just push this
CMA,
one.
the Capital
to
Market
somewhere there,
Authority,
like that.
regulates mergers.
So what we'll do, we will,
and
because we're
acquisitions
conducting what is called a
involving
common size
companies that are
statements for
listed
profit or
on
loss,
the Securities
the two
Exchange.
entities, we are going to hold
Companies
the
that are
revenue
listed on the
constant.
Nairobi Securities
Meaning that
Exchange.
if I pick
So if the
revenue
companies that are
and
listed on
divide
the Nairobi
that
Securities
against
Exchange
the revenue,
choose to
which is going to be
merge
common
or
size
to
statement
acquire
over here,
or to
and we lock the denominator,
take over other companies, the
F4,
Capital Market
like
Authority
we
has
are
to
going to be
involved.
realizing a percent. So here
The
we are saying if I can just
CMA
allow me to maybe perhaps put it
has
as a percentage like that, now it
developed
shows me 100%,
regulations,
because it's
what
following
we
side
call
by side to each other.
takeovers and
Remy and
mergers.
Pepino Limited. I can just
That is
then
Capital
drag it. Wait for that plus sign like that. You see, this is the white plus sign.
Market
The bottom right hand.
Takeovers
Until you get that plus sign that looks like that, you can
and
just drag it
mergers.
across like that. But you see, is one thing that you need to change, because you're seeing we are holding this one constant. So we will need
These
then
are
to drag
regulations
this one
that guide
part right over
the
there. So it can be C17 over
acquisitions
$C
and mergers
$17
involving
so that can represent
companies that are listed
100%.
on the Nairobi Securities
And
Exchange.
if we drag now this going down like so, you can be able to see
understand?
what happens right
These
there
regulations provide the
up to
framework.
that point. So this part is the profit for the year. Profit for the year divided
Such
by the
activities.
revenue over there gives us
And the
40%.
CMA ensures that
And even right over here, we are saying
There is
that if you
transparency.
divide
The
for
CMA also
Pepino,
protects
profit for the year divided by
investor
the revenue
interests
gives us
and
that percent like that.
so on, particularly the
And that's
interests
what we are
of,
required to do
the
for
companies
part A.
that are
So statement of profit or loss
listed
in percent,
on the Nairobi
rather the
Securities
common size
Exchange.
statement for profit or loss.
You understand? So
Part
the
B,
Capital
so we can
Market
just
Authority,
right over here, A,
through the
A,
takeovers
put
and
it
mergers
something like
regulations,
that. And then now we move on to B over here, B.
ensures that there is
So,
transparency, ensures that
and
the
we are
interests
saying
of the public,
that with
the
part
interests
B,
of the
we are
various
supposed to do the
stakeholders
same
are
common size
protected.
statement
So this is the
for
second
financial
body,
position,
the
for the
Capital
statement of financial
Market
position,
Authority.
the
The third
as
body
at
is the
30th
Central
September 2024.
Bank
So now in this case, what we are going to do, we are
of
going to
Kenya.
hold the total assets
The Central Bank
as
of Kenya,
our
the Central Bank
reference
of Kenya
point now. So we're going to base it
mergers and
on
acquisitions
the total assets here.
in the banking.
So we do the
and
same, we just
the
pick
financial
Revenue
services
Limited,
sector.
like that, copy from
Banking,
there, wait for that plus sign that looks black, like that, drag it like that. And then we also
and
drag, when we wait for it
financial
to be black,
services
this is white,
sector.
our cross should be black, just drag it down like that, so percent. So we can be able
Mergers
perhaps
and
to put it to
acquisitions
merge
that
to
occur
center
in
it,
the banking
like that.
and
And even
financial
this can also
services
be
sector
centered,
are regulated
can center it
by
like that.
the Central
And we can
Bank
bolden it, Control
of
B.
Kenya.
That.
And the Banking
So for
Act
part
also
B then,
requires that
we are saying since we know that now we
financial
are holding
institutions
the
should
total
obtain
assets as our constant right
the
over here,
Central Bank
we can start
approval
by looking
for
at
mergers and acquisitions.
maybe
So we
perhaps
have again
just
here
for completeness sake
the
over here,
Banking
we can put in these values
Act
right
as
here.
another
So
piece
it's
of
always good to
legislation
be complete. We're preparing
that
this
guide
financial
mergers
statement
and
for
acquisitions
the second
in the
person
banking
in
and
mind.
financial services sector.
That.
So the companies that
So
operate in
the
the
revenue,
banking and
we are
financial
basing it
services
as a
sector
percent like that. So even if we
that
move it
would
towards
wish to merge,
at least you can
or
even
to,
see that the revenue percent is
engage
given
in
over here. The
acquisition
cost of sales is
activities,
given to us
they
over here like
must
that.
seek approval
Gross profit
from
as
the
a percentage
Central
of
Bank
revenue, you can see
of
24%, and so on and so forth.
Central Bank
But the way it was before, like so, no
Number
one would
4,
know exactly what we're talking about over
we
here. We're
are
preparing
currently
this, and
discussing
I emphasize on
various
this for the second person
bodies
in mind. So let's do that also
that regulate
for
mergers and
this
acquisitions. And the
statement of
third one
financial
here is
position.
the communications.
And so I'll do
Authority
the
of
same.
Kenya.
First of all, let me get the ratios over here like
Communications.
this. I pick the ratio right over here. Which ratio am I talking about? I'm picking the
Authority
property, plant and equipment. So that value, picking the PPE, and I divide
Kenya.
that against the total
Communications
assets right here. The
Authority
figure is right over here.
of
Like that.
Kenya.
And I lock that value. So
regulates
F4
mergers
for some
and
laptops
acquisitions
or some
of
PCs,
companies
you
within
will
the
need to press
communication
function
sector.
button. FN, F4.
Within
I've
the
always
communication
emphasized
sector.
on that. So you can see it's
The
29%
fifth
right there.
body is the insurance
And if we were to
regulatory
drag
authority.
it, or we were to do the
Insurance
same for Pepino Limited, right over here, we'd pick the one for Pepino Limited, we'd pick this one right over
Regulatory
here, Pepino, and divide that against
Authority.
the total assets, which you can be able to see is right over here.
Insurance regulatory
Excuse me,
authority,
and
the
this is not
IRA,
that one. I'll need to pick the
regulates
correct
mergers and
value,
acquisitions
saying
of
we're talking
companies within
about
the insurance sector.
this value here, the property, plant and equipment. It's that value there, and we divide
Go on
that
and mention
against
such bodies,
these total
or
assets
such,
right over here, and we lock that.
and mention other
That.
acts of parliament like the Companies
Getting
Act,
16%.
Companies
So now that we have that,
Act,
allow me to,
the Companies Act
just pick the entire
of
values,
2015
these values right over here. We talk about property, plant and
Provide
equipment right over here like this.
the general regulations. They provide what we call general
Up to this
regulations
part,
for
right
companies within
here.
Kenya,
So copy,
and
drag
it
down
impacts
like so.
how mergers and acquisitions are carried out.
So these
How
are the
mergers
total non-current
and
assets.
acquisitions
Right
are
here we're going to
carried
talk
out.
about, so I'll drag it
Understand
just
carried is?
moving down like so.
Regulatory
See
framework
0%.
for
And
mergers and acquisitions.
over here we can
in Kenya.
put total non-current
These are
assets.
5 bodies
Total non-current
and
assets.
the Companies Act. And in this lesson we've learned that the
Assets.
regulatory framework for mergers and acquisitions is designed to ensure
That.
fair competition. It's also designed to
And then,
protect the interests of
Of course,
various
we bolden
stakeholders.
this control B like
like
that,
the
and then once
Competition
you drag
Authority
it down,
of
it will
Kenya
obviously
say
pick.
this is the principal
We pick what? We pick the percentages like that.
principal
If you double click it,
body
you can see the total non-current assets. It's
Competition Authority of Kenya is the
we do the
primary
same
regulatory body
for the inventory.
that is responsible for
So
seeing
we'll pick
mergers and acquisitions.
the values right over here, just
And
down
we
below.
mentioned that
Down
its
below over here.
mandate
So you can talk about current
derived
assets.
from the
So non-current assets.
Competition Act,
Let's go to complete.
which is the principal legislation governing
assets.
competition
This, of course, will be the
and
values there.
mergers
So
and
down over
acquisitions.
here, we pick the
Stated
current
here
assets,
again that the
like that. Enter, and because it's
Competition
picking from
Authority
there,
of
so
Kenya,
you can just drag it sort of.
the role
that
of
total,
this authority is to
total
prevent
assets.
anti-competitive practices that
And then
may
we'll pick
arise
the
from
values.
mergers.
So we start with
and
inventory, so
acquisitions.
control B.
So this is the
pick the
principal
values.
body.
We pick the inventory percent. So
Principal
this is the
legislation
inventory right
is
over
the
here. We
principal
divide
body,
that
and the principal
against
legislation is
this
the
total assets
Competition
figure
Act.
that is right over here. And we lock
The
it.
second body is the Capital Markets
That
Authority.
17%.
The Capital Markets Authority,
And we
we've
pick
said, regulates
So as you can see, it's 100%. So this is
mergers
100% over here
and
because
acquisitions of
you're basing
companies
the
that are
PPE,
listed
the
on the
owned
Nairobi
plant, the
Securities
rights of
Exchange.
asset, trade receivables,
And the
whatever
Capital Markets
that is
Authority
there
has
under the
developed
non-current assets
regulations
section,
that are
the current
referred
assets
to as
section,
the Capital
divided by
Market
the total
Takeovers
assets. So this should
and
naturally
mergers,
be 100%.
takeovers and mergers.
Even
Takeovers
if I'm to do
and
the
mergers
same
which
for
provide the
here,
framework
for the inventory, now for Pepino Limited, right over here,
mergers and
it's the
acquisition
inventory, and I divide
transactions.
by the total assets right over here, and I lock it. F4.
Number
It's
3 is the
18%.
Central Bank of Kenya, we've said,
Then we drag it
regulates
down.
mergers and acquisitions
So
in the
you can be
banking
able to see
and financial services sector.
100%.
And we've
So
stated
this
that
is
the Banking
the part
Act,
where we need to
which
put
is an
double
act of
underline. We
parliament
need to
in
double
Kenya,
underline the must
the
true
Banking
accountants. We
Act.
need to do that.
The
And
Banking
also
Act requires
this value
financial
right over here
institutions to seek approval
for
from the capital, from the central bank.
for the total assets
Okay.
right over here. I need to put
Requires that companies
as
within the
we
banking and
put,
financial sector seek approval
bottom
from the Central
border.
Bank of Kenya before
that, so that
merging.
you can show that that is coming to be a total like that.
The number 4, we
Total assets
have
control
the
B.
Communications Authority
Now we do the
of
same
Kenya,
for
which regulates mergers and acquisitions
the
in the communication sector.
equity and
We've gone
liability
ahead
section.
to identify
It will
also
always be based
the
on
Insurance
total
Regulatory
assets.
Authority of Kenya, which you've said
we are
regulates
saying
mergers and acquisitions
that
of companies within
because
the
it's
insurance
based
sector.
on the total assets.
So that
Because of
marks
course
the end
total
of the
assets will
lesson,
have to balance. This
where we
value has to
discussed
balance with that
briefly
value there.
the
So
regulatory
for this
framework
part,
for
I can be able
mergers
to just
and
calm down
acquisitions in Kenya.
and come to equity and liabilities.
Here is today's
So
assignment.
just come
Number
to
1.
equity,
What are the key
Equity,
objectives of
yeah.
anti-competitive
this, and then I can just drag it
regulations in the
down,
context of mergers
this.
and acquisitions? And how do
Like that.
these regulations aim to protect market
And then we
competition?
proceed on to get the
Number 2.
percentages.
How do cross-border mergers and acquisitions
So
create
the percentage.
complexities
So this
in
is control
regulatory
B.
compliance?
Bold and that.
And what
So
international
getting the ordinary
frameworks
share
exist to
capital,
address these
ordinary share
challenges?
capital, I'll pick the ordinary share
I
capital,
repeat,
which is right over here for
how
Remi
do
Limited. You can see it's right over
cross-border
here. And I divide that
mergers
against, I can either
and
divide it against the
acquisitions
total equity and liabilities
create
right
complexities
down over
in
here or the total
regulatory
assets. But saying
compliance?
that the total assets is our,
Number
it has
3,
to balance with the total equity
how
and
does the
liabilities.
regulatory
So divide
framework
that against
regarding disclosure
that
requirements
component right
impact
there.
the
And I lock
transparency
it.
and fairness of the mergers
That,
and
so you can see
acquisitions
it's 10%.
process?
Drag
Thank
it
you for
down to
attending
total
the lesson.
equity, and I can see that that's what
We'll
I'm
meet
getting.
in the next
as
lesson where we
total
continue
equity.
to share knowledge in
If I'm to do the same
Advanced
now
financial
for
management.
Pepino Limited right
Bye-bye.
over here, I'll be able to just do the following right over here. We're not dealing with inventory, we're dealing now with ordinary share capital. So that value, and I divide against
Ordinary
the 66,500, and I lock it
lease
like that so that it cannot, it remains stationary.
squares
Like that. So here,
method,
I just put
sometimes also known as
sort of the
regression
bottom border like that.
firsts of ordinary
So that's
least
the total
squares,
equity.
which is simple,
And then
linear,
I'll need then to now analyze
regression
the
method,
rest, the remainder.
which is a cost
non-current
estimation
liabilities.
method
So if
that requires
put
you
the non-current
to form
liabilities right here,
simple linear regressions of the form y is equals a plus what? bx.
like so.
Okay,
Oops,
where
excuse me.
a is
I
given
just
by the
drag
summation
it down
of y minus the
the
summation
non-current
of
liabilities.
x divided by who?
So
N. Then the value of b is n summation of
like
xy
that. So until
minus the
these
summation of
liabilities,
x
until
summation
trade,
of y
until right here.
by n X squared
So I
minus
need
the summation
to
of X,
insert
you do
here,
what? You square.
down,
You square.
so that now it can create a space.
Now the difference
These are the
between
non-current
these
liabilities,
two,
control
the
B.
difference
These are the
between
current
these two
liabilities,
is
control B,
simply
like that.
this you
The non-current liabilities,
X
we talk about the lease
individual,
liability.
but here
Lease
you
liability
first
is
get the
right
total
here.
of X, then you do what?
We're
You
talking about
square.
Remy Limited.
You first get the total of
Lease
X, then you do
liability
what? You square.
That
All right. There are
we
certain
divide that
steps
against the total assets value there. We lock it,
we can follow.
and then we drag it down.
The steps
like
using
so.
your calculator.
Here we're also seeing there's going to be
Your steps using your calculator. And the
10%
calculator I want
loans.
us to use is FX82.
So we're
MS
seeing that
is your calculator
should be
known
in
as
percentage form.
FX82
not-
MS.
we should continue
The
down like
first
that
step
and put
there
percent.
is always to switch on your
Becomes
what?
better,
Calculator.
47%.
Always
if
to
I
switch on your
drag this one
calculator.
across,
That is a
like that, of
first
course, it's not
step.
going to give us the correct values because you're saying that we've locked this one in. What I'll do, I'll
Once
just drag
we
that
have
one
switched
over
on
there
our
like that.
calculator,
And once I drag
the
it like
second
that,
step
then
is to
that will give
reset
us,
your
rather,
calc.
This one will give us the correct value because
Reset
that
the
this value over
calculator.
the blue over the
Reset
red. What
the
am I talking about? The
calculator.
blue. I'm talking about the lease liability
And
divided by the total assets.
you
for
reset your
Pepino
calculator
Limited
by
right over
pressing.
there. And
You
once
reset your
I've corrected
calculator
that,
by
if I drag
pressing
this one down, should actually
Shift
correct everything
mode
like so.
all,
So what
which is
about
given
then
by number
the
3,
current the current
then
liabilities right over here?
equals.
We
That
talk about the
is
current
second
liabilities
step.
being or the
Resetting
trade
your
payable,
calc.
specifically
Now you
the
reset
trade
your
payables.
calculator
We pick the
because
trade
you may
payables
have
right over here.
previously saved
Trade
data.
payables.
You may
we're
have
talking
previously
about
saved data.
right
That
over here.
previously saved data will affect
That value and
the
divide
results
by
of your
that
equation.
value.
So therefore,
That.
reset it
And we lock it.
so that
So
it doesn't
drag it
affect
down like so.
the results of
And here we
your
talk about
current result that you intend.
talk about the total equity and liabilities.
Uh,
right over. Of course,
the
this one should be bold and
third step is to do what?
Double underline.
Is to set
Want it
calculator
top,
in a
bottom,
regression
double
mode.
underline. So this one
Regression
will be for Pepino. This is for Pepino percent. Talking about
How do you do that?
trade payables for Pepino.
You
That
press
one
mode,
over total assets.
then
There.
regression.
We lock it. 11%.
Regression. Then
Should continue,
regression is
continue
denoted by
downwards.
number
This is
3,
like that.
then
Then I
linear
format
denoted
painter,
by
come
number
over here so it
1.
can be consistent like that.
Step 4.
Now, that is part
Step
A.
4 is
and B.
input
As
your
you can see
data.
here is B. Control B. Let me bolden that. Control B.
When you are
the examiner
inputting
wanted
your
us to
data, how do you
conduct
input
what's
it?
called a
You
common
input it
size,
in the form
analysis.
of X,
for both
comma,
statement of profit or loss,
Y,
two entities,
M
common size
plus.
statement for financial
X,
position,
comma,
30th of September.
Y,
Obviously, it has to be
M
for the
plus.
two entities
This M plus here
there. In part C, we're
simply
supposed to
means
advise the directors of Workwe Limited on the best
memory
company to take
addition.
over. And what we can see now, based on that based
M
on
plus
this
there means
common
memory
statements
addition,
right over here,
which is the same
we can
function
see that the
like
best
in your
company for
computer
takeover
known as what?
is
Save.
Remy
So
Limited.
this is known as save.
Why? Because it has a lower cost of
So
sales
you add that
ratio.
or you press M
And
plus
cost of sales
so
ratio
that you can add
is going to
data
be something
in your
good.
calculator
This
and
cost
store
of
it
sales
there.
ratio,
And store it
because
there.
it represents
Then
a cost
I want
which
us to
magnifies the gross profit.
do this December
And to some
2024
extent,
together.
even if
We do this December
we
2024
may have
together.
administrative expenses being
And I
slightly
want you
lower
how
or
to
even
show
higher,
you
the operating
how we
profit is
input
also
that
higher.
data.
And we're also
How
talking
we
about
input
profit
it.
before tax is higher than Pepino Limited.
Hope
As well,
we
we're also
have,
saying that the profit for the
reset
year
our calculator.
is much
We have
higher
set
for
up the
Remy
calculator
Limited
in
as
regression
compared
mode.
to
I want
Pepino
to show
Limited.
how now you
So in
input
part
it.
C, we can come over here and say
X is 1425. So what do? You're going to
that
press
Control B,
1425
we mentioned something right there.
in your
That the
calc.
best company for takeover,
The next to the DEL and AC
for
buttons,
takeover
next to the DEL and AC buttons,
is
you press 12185 and then M plus. M plus.
Remy
Remember,
Limited,
the comma and the M plus are slightly above the DEL and AC buttons. Slightly above the DEL and AC buttons.
lower
If you press 1425,
Lower
comma, 12,
cost to
185,
income
M plus n should give you
sales,
1.
cost of sales ratio, sorry.
N is equal to 1.
Cost
The next observation
of
is 950,
sales
comma,
ratio
9875 M plus. So that is the second observation.
as
The
compared
third observation is 1190, comma,
to
10 for 50, 10
Pepino.
10 for 50 M plus. The fourth one is
So that's the
1690,
statement that
comma,
control B.
15 to
That,
80
so
M
all I just
plus.
want to be bold and this is that one.
1006,
That's all I just want.
comma,
The best company for takeover is Remy Limited because it has got a
9915
lower
M plus.
for takeover.
834,
Is Remy Limited because it has a
comma,
lower cost
9150
of sales ratio
M plus. 982, comma,
as compared to
10133
Pepino. And you can see
M
cost
plus.
sales
1259,
ratio. This one should also
comma,
be bold and control B.
11981
Double
M
underline
plus.
like that. Because you can see the cost of sales ratio is
1385,
much
comma,
lower. That helps
12045
it to magnify
M
the gross
plus.
profit. Right over here.
1420,
And
comma,
having said that, this
13180
brings us
M
to
plus.
the end of today's
1125,
question
comma,
21, where we were discussing
11910
about
M plus.
the work we
980,
limited,
comma,
which came in
10
December 2024.
431.
We are here
M
for you,
plus.
and thank you for being with
So
Manifest
that's now
Solutions.
the last observation of 980, 10, 431. After you press M plus, N will be equal to,
We pick
12.
it up on illustration that
N
is
will
the
be equal to
taxation
12, okay?
of trustee.
Then the next
Our first
step
question comes from
is to obtain your
April
data.
2023. April
The data values which are
2023.
unknown to us. And so
Question
far, you don't know the value of all
Question
this. You also
5C.
don't know the values of
Question
all that.
5C.
But
April
since
2023,
you have
question
inputted
5C.
everything in your
We'll read
calculator,
the question.
you can be able to obtain
Malaysia
them. And how
Trust
do
was
you do
formed
that?
in the
You
year
simply
2021
press shift
for the benefit of Alex Malaysia's
1.
two
Press
children.
shift 1.
Mona and Nora.
When you press
The following
shift 1,
information was provided to
first
you
screen,
by the
there's
trustee
a
in
summation
respect of the trust
X squared,
income and
the
expense for the
summation
year
of X and who?
ended
N.
31st December
To select
2022.
any value, you press the number
Additional
below it. For
information
example,
one.
when I want this
The trustee
summation of
reported
X squared,
trading
I'm going to
profit
press
of
1, then equals.
160,000 for the
So
year.
that will give me 17.
This was after deducting the following expense:
83,
printing and stationery,
770,
1 million shillings, legal fee, out of which
press shift
legal
1
fee
again.
out
When
of
I want the
which
summation of X, I simply
1,200
press
was
2,
in respect
then
to
my equal
defending.
sign.
Out of 1,200 was in respect of
18186.
defending
Shift
one, defending
then
one
N
of
is
the
given by number
trustee
3. I remember
involved
to press my equal
in legal
sign.
business
That
deal.
will give me 12.
Then we have
Okay.
tax
That being
consultancy,
the first
a
screen,
figure of
You can go
2.4.
to the next
We have the
screen
next, that is
by
purchase and
pressing shift
installation
1
of a
and
soft
your arrow
ware,
key.
a figure of 2 million.
Shift 1 and your arrow
We
or
have
direction
trustee
key to the right.
salary,
And the
as per the
therefore
trust agreement,
buttons just
that was
top
10
of your
million.
calculator.
Then you have
Between
loan
alpha
repayment
and mode,
into bracket,
between
interest
alpha
included.
and mode, therefore
a
direction
figure,
keys there. So
a
you're pressing
figure of
shift 1 and
1.1.
moving to the right.
The total
such
was
that
8 million.
The
Then you
summation
have
of
lease
y
charges
squared
were shillings 3 million, out of which 600,000 was in
can be
respect
obtained
to
by
drafting
pressing
a 10-year
1
lease
then equals
agreement. Then we have what we call
370,
preliminary expenses in respect of the trust
811,
formation was 3.4.
shift
Then we
1.
move to the additional
The
information
summation of
number
y.
2.
Move with
The
your
trading
direction
profit
key. The
was
summation of y.
before taking into account the following capital expenditure: a warehouse, that is from 1st April 2022, a figure of 3.5 million. Then we have
135.
delivery van from 5th May 2022. We
The
have
summation
a
of
figure
XY.
of 1,750,000.
All right.
We have saloon
Now, if you
saloon
look at your formula
vehicle
for
from
B
1st
here,
January 2022.
we have
The figure is
everything
3.8
except
million. Then we
this
have
here.
the sports
This is the only
pavilion
item you
from
don't
1st
have.
September
But since we know the summation of
2022,
X, we
the figure is
simply square
1.2
it.
million.
Say
So we're being told
the
that trustee
summation of
received a
X
gross rental income
squared
from the commercial properties
will be
of 120
186
million. And the
square.
gross
Will simply be
interest
14
income from fixed deposit
186
of 20 million.
squared.
Then you're
Right,
being told that
that
fee
is
paid
when you
to
use shift
investment
1,
manager
Or that is
in
how
charge
you
of the
use
rental
shift
property
1.
was
Now, to
fixed
obtain our values
deposit
of
amount
A
of
and
12
B,
million.
we can simply use
Additional
what?
information number
Shift
4.
2.
We're being told that each beneficiary is entitled to
move
a
with the
quarter
direction key
share of the
twice to
net
the right,
distributable income.
shift to,
That
and move
each
with the
beneficiary,
direction key twice
we
to
know
the
that there are
right,
two sons, that is
starting with
Mona
A.
and Nora, is entitled to a quarter
A,
share
you're
of the
going to
net
press the number
distributable
below
income.
that, which is
Then
1,
you're being told that the
then
fixed
equals
annuity of each beneficiary
295.
was shillings 10 million.
Shift to
The figure is gross.
B,
Then say that
the number below
trustees
that is 2,
made
to press 2, then
6
equals
million to Nora and 3 million to
6.48.
Mona and 3 million to Nora
6
as discretionary payment
2.
as per the agreement.
But we know
Then
our
required.
equation should be of the form
One is that compute
y
the income
is
tax
equals A
payable
plus what?
on the trust
BX.
income for the
The
year
value
ended
of A
31st
is
December 2023.
3709.29
Then compute the amount due to each beneficiary
plus
for the year ended 31st December
6.48.
2022. We begin the analysis.
X
Malaysia Trust,
6.6869. 2 of who?
was
Of
formed in the year
X,
2021
that is how
for the benefit of
we
Alex
form
Malaysia's two sons,
equations using
that is
what?
Mona and Nora.
Simple
The following
linear
information
regression
was
method,
provided to
using
you
simple linear
by the
regression
trustee in
what?
respect of the
Method.
trust income
Right.
and expenses
The
for
next
the
thing
year
we should
ended
be doing, or I
31st
should
December
show you,
2022.
is
So
how
the first additional information, we're
you,
being told that the trustee reported a
you're going to
profit
deal
of
with multiple
160
regression,
million for the year.
So
This was after deducting
multiple
the
regression.
following
allow
expenses.
me to do away with
At that very
this.
point, we noticed that for this
we will
particular
come
question,
back to evaluation.
the method that we need to
There's a
get the
concept
taxable
there.
income is basically
So
what we
we'll
call the
need to
net
evaluate.
profit method.
I'll need
And the
to
reason
show you
that
how
underlie
to
that is because we have
evaluate
been
your
provided
regression
with
equation,
the
But before that,
accounting
let me show you
profit.
how we deal with what?
So the first expense that was
Multiple
subtracted,
regression.
we are being told that printing
Before we come to
and
the
stationery, a
evaluation,
figure
let's
of
talk
1
about
million,
multiple
that should be allowable
regression.
expenses, that should not be
Multiple
adjusted.
linear
Then however, number 2,
regression
additional
method.
information
Now just
1.2,
multiple
legal
linear
fee of 6 million,
regression.
out of
Now,
which 1.2
with
was in
multiple
respect
linear
to
regression
defending
method
one of the
here,
trustee involved in a
this
legal
is a
business.
regression method.
So there's a
where,
1.2 that we treat as
you
non-allowable.
use it when you
If you
have
have a
more than
1.2 that we used to
independent
defend
variable
a trustee
X.
that was engaged
When we
in
talked about
illegal
simple linear
business,
regression
then
here,
that should
X
be
is
what you
only
call
one.
a
Y is equals A
non-allowable
plus B,
expense.
X.
And note that we
X
say
is
that
only
for
one
this particular
independent
question,
variable.
we are
But
using
it
the
is
net
possible
profit method. It means that
you
we
have
need
more
to
than
add
one
back
factor
a
affecting
figure
your costs.
of 1.2,
Okay?
which is
So
a
where you have more than one
non-allowable
independent
expense. The
variable or
implication
factor
of
affecting your
subtracting a
cost,
non-allowable expense
you're
is that
going to
you
introduce the
understated
concept of
the net
of
profit that
multiple
was provided
linear
as
regression
160.
method, but your
So we need
equation
to
is
add
still a
back that
straight line.
figure of
It must be of
1.2
the form
to
y
get the
is
right
equals
position
A
of
plus B1
profit.
X1
Then you have what you call tax
plus
consultancy fee
B2X2
was 2.4. We
all the
say
way
from tax expenses like the tax
BNXN,
consultancy, those should be
where
non-allowable
X
expenses. By
represents
subtracting
your
that
independent
2.4,
variables.
you
How many independent
underestimated
variables
profit.
are
So the
there?
correction
So if you have
would
an
basically
independent
be to add
variable
it
for
back.
who? For
Then the next we
income,
have
you will have
purchase
it.
and
If you
installation
have
of
an
accounting software.
independent
We know that
variable
accounting
for
software
age,
that
you're
we've been
going to
told
do
that
what?
is a
To have
capital
it. So
expenditure.
either way,
So we need to
this
add
is
back
how you
that
form a
figure
regression
of
what?
2 million.
Equation.
Then you're being told that
That is the
trustee
general
salary
form
as
of
per
regression what?
the trust agreement, that's 10 million that
equation
should be allowable.
Of more
Then
than
we
one
have
independent
loan
variable,
repayment.
of more
We're
than one
told that out of that
independent
there's
what?
an interest of
Variable.
1.1. So
Right.
the loan repayment
Once
total
that
was
is done,
8 million.
I want to show you
So interest
how
on loan
you
is
do
allowable
what?
expenses.
How?
But loan
You're able
repayment
to
is a
form what?
non-allowable expense. So we
Predictor
can do our first,
equations.
our first
How
amount.
you're going to form
We get our first
predictor
working.
equations.
We say
So I want
that
us to go to last
loan
sittings
repayment.
question.
We need to get the
I
figure
want us to
of
go
the
to
loan
last sittings
repayment.
question.
Repayment.
So I want us to
Repayment.
talk about April
Loan repayment.
4B. Question
Less
4B.
interest on loan. Less interest on
April
loans.
2025.
Less interest on loans.
Question.
So we
4B.
say that loan repayment is a non-allowable expense.
The thing,
But the interest that accrue from the
Global
loan is allowable. So
Logistics
if you have
Limited has two
a
operating
figure of
segments,
8 million,
Longonot and
we need
Zoya.
to less
Longonot division
minus
orders most
1.1.
of its consignment of
So
immediate
this figure
output
of 6.9,
from Zoya
which is loan
division
repayment,
using economic order quantity
the
model.
figure of 6.9, which
The
is loan
managers
repayment,
of each
that
division
should
are
be
given
non-allowable.
considerable
So
autonomy
non-allowable, we need
in
to add it
transfer
back
pricing
to
policies.
adjust it to
Longonot
get the
division
taxable profit.
managers want
Then
to
the next
use
we're being
multiple
told that
linear
a lease
regression
charge
analysis to
was
evaluate the
3 million,
significance of the independent
out of which
variables
600,000
on
was in
material
respect to
handling
drafting
of cost
a
of
10-year
its
lease agreement.
consignments.
So when you talk about a 10-year lease agreement,
And they
when you're
also say
drafting,
the finance director of
renewing
Global
or drafting
Logistics
a
has
lease
availed
that
the
is
following
less than
data
99,
for
then that
Longonot
should be
Limited.
allowable. So the figure is
for the
allowable
past 10
expense,
months.
so we
You
do
have
not
your
need to
man,
adjust it.
your material
The next is
handling
what we
cost
call
is Y,
preliminary expenses.
number of orders is
in respect to the
X1,
transformation
number of
was
kilograms is X2.
3.4.
The computer
Expenses
output
that are
is as
incurred before
follows.
the
So
inceptions
you
of
have
the
that
trust
out number 1.
are basically
Then
an allowable
analysis
expense.
of
So the
variance
figure of
table, you also have
3.4,
it there as
that is a
number 2.
non-allowable expense.
And number 3, then
The
required,
figure of
write down the multiple
3.4
linear
is a
regression
non-allowable
function
expense. Then we have
of Y is equals to
additional
A plus
information
B1
number 2.
X1 plus B2
The trading period was
X2.
before taking
So
into
allow
the
me to copy
consideration
this table.
of the
There are
capital
2
expenditure.
tables, or rather
One
there
thing
are
that
3
we need to
tables
understand
that I
that
will
when
need
you
to
talk about
copy
the
so that
capital
I'll show you how
expenditure,
you
when
get
we
those
talk
words.
about capital expenditure,
This is called
we need to claim what we
table.
call investment allowance.
Is the one I
In
want to
taxation,
copy,
we do not have an expense called depreciation,
which is what we
but in
refer to
place
as
of
analysis of
depreciation,
who?
we claim
Variance.
what we call investment allowance. So
Analysis
being
of
told that we have
variance table.
assets, we
I'm
have a
copying
warehouse,
this so that
we
I
need to
can show
understand
you
that warehouse
you
qualify
obtain
for an
various
investment allowance
works.
called IBD, industrial building deduction, that we claim at
Various
the rate
equations,
of
when you're
10%,
given
that
an
we
ANOVA
claim
table.
at the rate of 10%,
When you're given
at
an
the rate
ANOVA
of
table, I
10%.
want to show
But
you how
mark
you do
this,
the
he said from
regression,
1st April 2022.
Equation.
I know this
So
is
you have
a
your
lot of time
regression.
based on the present rate. We
Regression
need
is also
to
known as
not to
model.
apportion. Initially, we used to apportion
Residue
wear and tear and the IBD, but don't
is
apportion.
also known
Claim
as
the whole
error,
amount. For that warehouse, we
2,
have a figure of 3.5.
7.
So we claim
Total is 9.
10% of the 3.5. I know if you look at
From
some of the areas previously based on previous question, and sometimes you'll find these ones who are being apportioned, but based on the present rate, you need to claim the whole amount. Very important for learners to understand. Then you have delivery van, delivery truck. Remember that is wear and tear because that's motor vehicle at the rate of 25%. We need to claim it at the rate of 25%. At the rate of 25%. And we also claim the whole amount. We don't apportion. Previously, it was being apportioned. Then you have saloon car. Very important, you need to understand for saloon car and SUVs. We say that for saloon cars and SUV, if the value is more than 3 million, we restrict to 3 million. So we're going to claim 3 million out of that. We are going to claim
Then
3
you have
million
your parameter
out of that.
estimate
The
table.
25% of the 3 million. Then lastly, we have what we call the sports pavilion.
You have your
Sports
variable.
pavilion in this case, that is also IBD at the rate of 10% on the
Coefficients.
straight line. So then additional
Standard
information number
error.
3. The trustee received a gross
the
rental
T ratio
income
value.
from commercial property of 120 million. That is additional taxable
your
income,
intercepts.
and a gross and what you call gross interest
variable
income
1.
from fixed deposit.
X
That is an
variable
interest
2.
income that is subjected. We call it the
5
non-qualifying
of
interest,
7.
still subjected to further taxation.
Point
Fee paid to investment
3097.
managers in charge of the rental property. We need to understand that we need to get the
7.83.
net because fee paid to investment manager, that is allowable
5160.
expense. We need to less it from what you call the gross rental income to get the net rental income. Then lastly, on additional information number 4, we are being told that each beneficiary
25.
is entitled to a quarter share
Z.
of the net distributable income. But there's a fixed
0.
annuity. Those are contributions to the beneficiary.
0037.
Who in this case is Mona and Nora. So
For
there's a fixed
2.
annuity for each beneficiary, that is Mona and Nora. Each is going to get 10 million. Then we have trustee made 6 million.
8.
Trustee made 6 million to Mona and 3 million to Nora as a discretional payment as per the agreement. That is tied to the amount that is due to the beneficiary. So we begin with our first calculation. Compute the income tax payable on trust income for the year ended 31st December 2022. So we begin it on this other part. So we begin it on that other part.
8.
So we have trustee.
86.
Trustee.
Some certain variables that are unknown.
Trustee.
This is W.
That is for
Let me use a different color pen. That
and Nora.
is Z. That is it.
Taxable income.
Okay.
Taxable.
The first part of that question
Taxable income for
is saying
2022.
write down the multiple linear regression
taxable income for
The formula is
2022.
equals A
So we say
plus B1 X1
we use the net profit
plus
method,
B2
accounting
X,
profit,
B1 X1
provided.
A plus B1
So accounting
X1
profit
plus
provided, we
B2X2.
have shillings here,
Now,
but we can round it
first
off
thing
to
you
1,000.
realize is
We
that
had a
X1
figure of 160 million.
X2
So we have it as
you
160.
must be given.
We round it off to
Okay.
1,000.
And
Then we say
also
add back.
that you must
Why are we
be given.
adding back? Because this
Well, we
accounting
know
profit was
X
already
simply
provided. What
means
do we
the
add back?
independent. Y means the
Non-allowable.
dependent. In this case, X1 is number of orders.
Allowable expenses.
Number of
Expenses in P and L.
X2 is the number
Non-allowable
of
expenses in
kilograms.
P and L, comma, taxable
You must select those two.
income,
Number of kilograms ordered.
not in the P and L. Not in the P.
Y is your material handling cost. Y is your material handling
Taxable
what?
income,
Cost,
not
eh?
in the P and L. So the first one is
So
what
Y,
you call, we say
D,
that printing and stationery,
know
that was
A
allowable.
is
We don't
normally
need to
the
adjust
what?
that. We have
The independent
what you call
variable
legal fee, 6 million, out of which
known as the
1.2,
intercept of
out of which
Y,
1.2,
and the intercept of Y is
1.2 was in respect to defending
Intercept of the
trustee
coefficients,
on
Y
illegal business.
is
Defending, that is an allowable defending.
7.309
What you call trustee? Trustee
plus
on what you call illegal
the
business.
coefficients of X1 and X2
So we add that
are
back.
the
The
ones you're going to
figure,
refer to as your what?
that
B,
figure was,
B.
we round it to thousands.
So
So if you
B1
round it
here
to
will
1,000,
be
that should be
7.8
1,200. That was 1.2.
35
Then the next we have
X1
what we call,
plus
the next we have what you call purchase of
X
purchase and installation of accounting software.
X2.
Before that, there's tax
coefficients here
consultancy. We
are
say
the ones that give you
expenses
A,
related to tax
B,
are non-allowable. Tax
and all the B's,
consultancy,
eh? All right, that is that.
tax
Part two of that
consultancy,
question,
2.4, we round it
part
to
two
1,000.
of that
That is
question.
2,400.
They were telling
Then we
us
have
suppose in the month of
The
April,
next,
longer not division
we
expected
have the
to
next,
have 350 orders
which we call
with
purchase and
17,000
installation
kgs
of
of
accounting
material
software. That's
ordered.
capital
Predict
expenditure.
the total material
Purchase
handling cost for the month of April 2025.
and
So this
installation
second part here is what we refer to as estimation or forecasting.
of
Forecasting
what you call
is
accounting.
where you use your relationship here. This relationship is cost estimation. Use this relationship to predict
Purchase and
future
installation of
cost.
accounting
So
software.
they're simply asking you
That
for
should
your
be 2
future
million.
what
But we round it
material
off to
handling
1,000.
cost
So we proceed to this at the
when you
end.
have ordered how much you have made 30 orders.
So the next one we
and
have, we're being told that
17,000
trustees' salary as
kgs,
per the trust
so you're going to
agreement,
say
that
Y when X
that is okay. Then we
X1
have
is
what you call loan repayment.
when
So loan
X1
repayment, interest on loan is
equal to
allowable,
who?
but the loan repayment
350
is not allowable. So we have loan
orders,
repayment.
and X2 is equal to who? 17
So loan repayment, that was 8
is
million.
equal to 17.
We round it off to 1,000, then we less
So you simply
1,100.
now substitute
Interest on
you
loan is allowable. That should be
the
6.
equation of Y is
9.
507.
So then we have
0.3097
lease charges worth 3
plus
million,
7.83
out of which 600 was in respect to drafting a 10-year lease that is allowable. Then we have the last one,
plus
preliminary expenses.
0.718, but you are ordering 17
Expenses.
You received
Expenses
17,000.
incurred before the formation of a
Let's
trust.
work this one out.
Those should be what you call non-allowable. So we add
507
them back.
3097
We had them back.
plus
So those are the non-allowable expenses.
83
Unfortunately, we do not have taxable income that
5160
has not been
by
included.
300
So we
plus
add 1.2
0.10
plus 24
7181 by
plus 2 million
17,000.
rounded to 1,000
so
plus 6
the total cost
plus
of
6
what?
9
of materials
plus 6
is
9
46
plus 6 9
79
then plus 3 4.
0.9353 0.9353 and
Giving
that
us a total
is how
of
you deal with what?
15,900.
How you deal
Then
with
say less,
multiple linear
Allowable.
regression on how you solve your
less
what?
allowable
The
expenses.
equation, All right, or how you form your
expenses,
equation. That is good.
not
Now,
in the P&L.
once you have formed your equation,
Allowable
the
expenses
next
not
thing you
in the
should
P&L.
do is to evaluate
We have
what
taxable,
is this equation
non-taxable,
good
what you
for
call
prediction,
non-taxable,
or is
taxable,
this equation using
operating,
the least squares or the simple linear regression,
incomes,
is it significant,
P&L.
or can it be used to predict, or
then
is
you have
used to
what you call
predict
investment,
future cost using
investment,
these two equations? Are the
incomes,
costs going to be accurate, or are
Incomes
they
in
not
P&L.
going to be accurate? So, and for you to do that, you now use
For the exam
various
scenario,
methods of what?
this is for the purpose of
Analysis
learners understanding
of
what
what?
you're doing.
The
But for an
regression
exam scenario, you just say
equation.
less. You don't need
There
to
are
write
various
the whole
methods
thing.
that we
But
tend
for the sake of
use
learning, we need to
analyze your
understand what
regression
needs to be less. We are
equation,
saying allowable expenses,
first
which are
method
essentially in the P&L,
is what we
non-taxable
refer to
operating
as
incomes in
economic
P&L,
plausibility.
and investment incomes
We refer to
that
it
are in
as
P&L.
economical
That is what we less.
plausibility.
That is what we less. We
Now,
pick our
we
paper.
introduce another
We
concept.
take our paper,
We are introducing another
and
concept
we
of
are saying,
analysis analysis and interpretation of regression.
the first one that we have
equation,
is
Analysis
investment
and
allowance.
interpretation of
Remember,
regression
investment
equation. Okay, it is still under
Investment
this.
allowances. We have the investment allowances. So the first one was
allow
non-allowable, the
me
one
to
that we
move
had as non-allowable.
The next
That was
part of the question,
that was
on CVP.
purchase of
CVP. Let's move to the next part of the
installation
question.
of accounting software.
Part C of the question reads,
Accounting
Tinga Limited
software.
manufactures
Remember that is
and
investment
sells
allowance at the rate
a
of
single
25%.
product named
So 25% times 2
T140.
times 2,000.
The following
That
information
should be
relates
500.
to the product.
That should be
Selling price per unit
500.
is 180.
Then we have the next,
Variable
which
cost
is
per unit
warehouse.
is 80.
Warehouse.
Shillings. Fixed cost per annum 5 million.
So
Required.
warehouse, those are buildings.
Roman 1.
IBD.
Break-even point is
That is
shillings
IBD.
and units. Romax.
IBD.
Roman 2.
IBD.
The total
That
number
should be
of units.
10%.
The number of
So
units
10%.
to be produced to earn
10%.
a
The figure is
profit
10%
of
times
135.
35.
1.2 million.
Initially, we used
That
to
is the
apportion
question.
this
You
figure
need to calculate
based
first of
before the
all
rate changes.
break-even
We
point
used to
in-
apportion this figure.
in-
For example, for
in
the
units, then
IBED,
the
if it was
break-even
April,
point in
would have looked for about 9
This
months.
is
So
part.
April, May, June to April to December, that should be 9 months, and say times 9 over 12. But with the present rate, we don't apportion, so we have it as
The break-even
350.
point in
So when you
units,
get somewhere,
we
it's
know the
apportion.
formula is
Notice that
fixed
with the
cost
changes that were effected, we don't apportion.
over
Then we have what you call delivery track. We have the
fixed cost
delivery
over contribution margin.
track.
So what is the fixed
Remember, these are motor vehicles again
cost in
at
this
the rate
question?
of 25%. So 25%
Cost here
times
is
1750.
5 million.
25% times 1750.
What is the
25%
contribution margin? We know the
0.25
contribution is equal
times
to selling price
1750
minus variable cost.
times 1750.
Contribution margin is equal
So that
to
should be,
selling price minus variable
we have
cost.
it
So
as
selling price here
437.5.
is 180.
We have it as 437.5. We
The
have the
variable
next
cost from
that
the
we
question
call
is
saloon car.
80.
Saloon car.
So that will give us the
Saloon car. Remember, this is
break-even
restricted.
point
Saloon car is restricted.
in
If the value is more than 3 million, you restrict to 3
break-even
million. So
point
we have
in units.
that
This
is
will be equal to
25%,
5
times-
million divided
and that should give us
180 minus 80 is just
750. That should be 750. Then lastly,
100. This is
we
equal to
have what you call
50,000.
sports pavilion.
Now, this
Sports
is the
pavilion.
break-even point in units. That means that if
So
the
sports
company is to
pavilion, that's
produce
also
50,000
IBD, that should
units,
be
the company
10%,
will
but
not
I
make
have
any profit
emphasized
because at
that
break-even
based on the
point,
present rates, you
profit
don't
is equal to zero,
apportion
which means that
this
the
figure, you
total cost
claim the whole amount.
equals,
Previously, these
the,
figures were being apportioned,
total revenue.
but with the changes that were effected,
At
you
break-even
claim
point, total
the
revenue
whole
is equal to total
amount.
cost. And we
So
know
times
profit is equal
what
to
you call
total revenue
1.2.
minus total
Remember,
cost.
the
So
figures are
total
rounded to thousands.
profit
The
is
figures
equal to,
are rounded to
revenue
thousand.
minus
So that
the
should be
cost, which will be equal to
120.
0. If the company
So these ones
produces
will
50
less.
units,
There's not any
50,000 units, there is
investment
no
income that were
profit at
included.
this point.
The investment
This
that
is
were
the
there
break-even
are
point.
treated separately. So what do
First,
we less? The total that we less.
shilling
So we have
of profit will
500
be made
plus 350
after the 50,000
plus 437.5
units. That will be 50,001
plus
units.
750 plus
That's a break-even point
120.
in units. Then to
So this
calculate the
should be
break-even
21.
point, break-even
57.5.
point in shillings.
So the only allowable expense were investment allowance
Break-even
that
point
were
in shillings, that will
essentially
be
not
equal to the
included
fixed cost
in
over
getting
contribution
the
margin
accounting
ratio.
income, which is 160. So we have net
Contribution margin
operating,
ratio. So we are going to have it at 5 million
operating,
minus the
operating
contribution
incomes.
margin ratio. How do you calculate the contribution margin ratio? Contribution margin ratio
So
is
we have the
equal to
160
the selling price minus variable cost. That gives us the contribution.
Plus
Then we divide by
15,900.
the selling price. So this
then
is
minus
equal to
180
minus
0.5.
80 over
So that gives us a figure
180.
of
That will
173,
be the contribution margin ratio.
742.
So 180
0.5.
minus 80 is equal
That
to
gives us
100.
173,
100 divided by
742.5.
180.
Then you add
This is equal to
what you call other
the contribution
taxable.
is 0
taxable income.
point
Add other taxable
0
income.
point
We proceed and have
55555. So we divide the 5 million.
add other taxable income. So
5
we read the
million
additional information number
gives me
number 3.
0.55555.
Trustee received the gross rental income from commercial
I'm going to
property.
divide
So
the
other
5
taxable
million
income,
by that ratio.
we have the gross
5 million
rental income,
divide 0.55555.
gross rental income. So that should be
So
a
roughly
figure.
I'm getting
That was
9
120 million. So that
When
we
I
have
round off
120
shillings, this would be
at that.
9.
Then we also have what you call
The contribution
gross
margin. And
interest
the
from fixed
break-even
deposit.
point in
Gross
shillings. The break-even point in shillings
interest.
is equal to 9 million shillings. So
interest
that is how candidates to calculate the
from
break-even
what you
point
call
in
from the fixed.
shillings and in units. Then the second part of the
Deposit.
question reads, look at the question. The
So if it
number,
was net, we
this
get
is
the
from
gross.
1,
So that is the
1.
figure of
T2, we are to calculate the
20
number
million,
of
so we
units
have
to be
20,000.
produced to
Round
earn
it to
a
thousands.
profit of 1.
Then you're being told lastly
number
that
of
fees paid to
units
investment manager in charge of the
earn
rental.
a profit
We need to less that fee paid. That should be
profit
to get that fee paid.
of shillings
Fee paid
1.2 million.
to
Now
investment
this will be determined. The formula
investment
to
managers
the number of units. You have to calculate the number
Managers
of units to earn a profit
in charge of
1.2
rentals,
million.
in charge
This will be equal to
of what you call the
fixed
rental.
cost. You remember the formula we gave in our class? This will be equal to the fixed cost
So we
plus
less
the
that
target
figure.
profit.
That is a figure of 12 million.
We get the fixed cost
So we
plus the
have
target
it
profit.
as 1,000.
Then we divide by
So what is the net
contribution.
operating
Divide
income?
by the
Net operating
contribution.
income, we had a figure of 173,
Divide by the
742.5.
So we
Then you
know
had plus
the fixed
120,
cost is
1,000.
5 million.
Plus
No,
20,
the target profit is 1.2 million. This 1.2 million.
then minus
1.2
12.
million. We know the
So
contribution
this should
margin.
be,
Cost is supposed to be
this
used.
is a
The
figure
contribution margin,
of,
we had calculated.
we
it.
have total taxable
Contribution margin
income,
is 100.
total
This is
taxable.
the contribution margin 180
taxable
minus
income.
80, which is equal to
So we
100.
have the total taxable income,
So this
that is
equal to
301.5.
5 million plus 1.2, 6.2 million. That will be equal to
That is
6.2
what you have as the
million.
total taxable income.
6.2
But if you look keenly to that question,
million divided by
income tax
100.
payable, after getting that, we get the income
This is
tax
62,000.
payable, the income tax
62,000.
payable, the income tax
So if the
payable.
company
So the income
intends
tax
to
payable, we
earn
say
a
that the
profit
tax
of
at the
1.2
rate.
million, then
So
the
tax
company must
payable, we
produce
have it
62,000.
at the rate of 30%. Tax
And you can
payable,
see 62,000
we
units
have the
is
tax
greater
payable.
than the 5,000
Tax
units
payable in
at
this case, we
break-even
have
cost. So profit is
30%
made
times
after
301.
1,000 units. At 50,000 units, there is no
742.5,
profit. If the company
we round
make
it now
a
to the
profit
whole
of 1.2
figure.
million,
So we
then the
multiply by
company has to
1,000,
produce
so that is 500.
62,000.
So that is
That is
301
the meaning. So
million.
it's possible to
The essence of
calculate
this is, remember, we're rounded
the
to 1,000.
number
So when I
of
come here,
units
use the old
at
figure,
a
that will
given
basically
target
be
cost.
301
That's it,
million,
candidates, for today's lesson.
742,
We've answered
500. We
the
get
question that was
30% of that.
posted in
So 301,
2020,
742,
3.
500
On our
times
website, we
0.3.
have provided more
So what
questions.
do we have? We
Our
have a
intention is
figure
to
of
answer
90,
all questions that have been
95,
If
22,
you go to our website, you'll find all these
750.
questions have answered, and we subsequently
Then we less what? We
revise
less
our
tax
content
credit,
to ensure
tax
that we capture
credit.
all present.
So the tax credit is
If you have any
on
question, please
gross
feel
interest
free
from fixed
to
deposit.
get us directly.
Withholding
We have our numbers online. If you have questions, if
from
you need special attention, please call us. And
what
we
you call
are
interest
ready to help you
on
pass
fixed
exams
deposit.
and to gather knowledge that will be useful. As you
So the key
build
thing
your
is not the
career.
answer, but the key thing
Bye-bye.
is a learner being able to understand that what is being checked there is the ability to understand that we tax them at 30%.
Let's now
So
talk
we
about
get
number E,
that.
or the fifth
So the gross
method
dividend that was
of dealing with
15%
CVP,
times 20,
where you are uncertain, which
20
is
million.
probability tree diagram.
So 15% of 20 million,
tree diagram.
0.15.
So you will allow me to do away with this, your probability tree diagram.
so that should be
your
around
probability
a
tree
figure of 3 million.
diagram, yeah, is where you simply draw a tree diagram.
So we have the
almost
net
similar to when you're
tax
dealing with probability
tax payable.
trees. You know, with
So the net tax
from your
payable,
mathematics, you must
So we
have done
have
probabilities. So we'll
90,
be drawing a similar
5 to
tree.
2.
We'll be drawing a similar tree.
So that should be
And for us
87.
to be able to draw that or to illustrate that, there are certain items you must be given. One of the items
So that is the net
that you
taxable
must be given
for the
is your
trustee.
probability.
That is how we sort part one.
You
of
must
that
be
particular
given
question.
your who?
So very
Probability.
important, just
And you must be
recap of
given
what you
your
did,
variables.
that one
You
of the
must
most
be
important
given your
things as we
probabilities and
do
your
these questions is to
variables.
focus. The
The
focus is
variables
essentially
here
on the entries that
may be
emanate
labor,
from these particular questions. So at the end of the
cost
day,
may be
we got
material
the
cost.
tax payable.
Maybe
So we
direct
move to what you
expenses,
call
variable overheads, maybe the
complete amount
variable
due
cost,
to
maybe the fixed
beneficiary
cost,
for the
maybe
year
the
ended
units to be
December
produced
22.
and sold.
So say
But they
amount
must give you some variable that you're going
Amount
to represent in your tree diagram
due to
so that it can help you
beneficiaries.
to get a what? A decision.
Amount
For
due to
example, if
beneficiaries.
they're asking you to
Amount
draw
due to
a tree diagram to
beneficiaries.
determine your contribution,
amount due to beneficiaries.
you know your contribution
Amount
is the
due to
difference between your
beneficiaries.
selling price and your
So we
variable
have
cost. So one of
Mona.
the items that they must provide
One of the beneficiaries
is
is
your
Mona,
selling price. The other
Nora.
item they must provide is your variable cost.
and we have the total.
They must also provide your what? Quantity
Remember, we round
sold.
these figures to
If they
thousands.
ask you to
Then we
represent
don't have a huge figure.
or to determine
We round those
profit
figures to,
using probability
2000s.
distribution again, they
So
will
we
give you
look
selling
at,
price that they must
additional
provide in the
information number
probabilities.
4.
They must
Each beneficiary
also
is
give you
entitled to a quarter of
variable
the net
cost with the
distributable
probabilities.
income. We need
The
to get that
units
net distributable
sold,
income.
the fixed cost.
So we have a fixed
So we're
annuity to
saying
each beneficiary.
when
So we
you're
have the
dealing
first
with a
one
probability
is
tree
fixed.
diagram,
What
there
is
is some certain
distributable
information
fixed?
you must be done
What you call fixed
given that
annuity.
is uncertain, and that is where you're going to be drawing a what?
Fixed
A tree
annuity for each.
diagram. And I want
That
us
was
to
10
look
million,
at
so
an
round it up to
illustration
thousands.
on
That
the
is
same
10.
on a
So that
tree
should be
diagram.
20.
And the question I want us to talk
have
about
20. Then we have the
specifically
next, we have
is on April 2024. Let's go to
discretion
April
of payments. Trustee made 6 million to Mona and 3
April
million to Nora
2024.
as discretion of payment.
The
So we have
question
discretional
we want to tackle is question 2A.
payment.
And the company name is what? Joe.
So for Nora, that was 6 million.
That is the name of that company.
So this should be 9.
The Joe
then we get
Munzi,
what
the
called the
management accountant of Vera Enterprises that makes and sells products alloy,
distributable.
has made the following estimates. You have your sales, you have 3 conditions, which is the worst,
income.
the most likely, and the
So net
best.
distributable.
You have your probability of the
What you call the
sales.
net
You also have your
distributable
variable cost
income.
under the
We have the net
conditions
distributable
that are
income.
worst,
So
most
being told
likely,
that
and
the net
best.
distributable income,
You have your
each
costs
beneficiary is entitled to
of
a
variable
quarter share of
cost
the
per
net
unit under
distributable
those
income.
conditions.
So what is the
And you
total
also
taxable
have the
income?
probability
The
of
total
variable
was
cost under
301,
those conditions.
742,
Additional information.
742.5.
The
minus
selling
to get the
price
net
of
distributable,
alloy product
that is 20.
1,000 per unit.
20
Fixed cost attributable to
minus
alloy
9,000
product is 24
in order
million.
to get that net
Vera
distributable.
Enterprises
So saying to get
intends
the
to
total
achieve
taxable
a
income
target
was
profit of 6
301
million.
million.
Using a probability tree, compute
500.
the
So that when you
expected
less,
profit
the
of
fixed
Vera
annuity and the
Enterprises.
discretion of payment,
Number
we
2,
get what you call the net
compute the
distributable
probability
income.
that
So on
Vera
that net
Enterprises
distributable
will
income,
fail to
the examiner tells us
break
that each
even.
beneficiary
Number
is
3,
entitled to a quarter
determine
share
the
of
probability
the net
that
distributable
Vera
income. So we get the net
Enterprises
distributable
will
income,
not
then we
achieve
get a
the
quarter for each.
target.
So that is
profit.
301,
The target profit.
301,
So they're telling
742,
us to determine your expected
742.5
profit using
minus
your
20
3-watt diagram. Remember,
minus
from the
9,000.
previous working, we know how do you
So
get
that is
expected values.
742.5.
You simply
Then
take
you
your
multiply
variable,
a quarter,
you
we get a
multiply by
quarter.
your what?
Each was entitled to
Probability.
a
So
quarter.
even in this
So a
particular
quarter of that,
circumstance, to
that
get
should be
our
68.
expected profit,
That should be
we will
68.
take our profit,
have 68.
you multiply by your what? Probability.
68.
But you know, how do you determine your profit? Class?
185.
Your profit, we've talked about it so many times. It is determined
0.63.
by
So 68,
your
185.6.
selling price minus
The total for
variable
that.
costs.
We have
You multiply
total
by
for
your
the two.
units,
the total for the two
and then you subtract your what? Fixed cost. You subtract your fixed cost.
times.
They are telling us that the selling price
So that
is
should be about
100.
136.
Your variable cost
136.
has been provided, and various costs have been provided with various what?
370.
Probabilities. So it basically means you are uncertain of the true cost of the variable
So
cost.
the total amount
The
due.
units to be sold
Total
after production,
amount due.
you have been given under various conditions and
person.
their probabilities. And so this is how you're
Total
going
amount
to
that is due to each person.
draw this tree
Total amount that is
diagram.
due to
This
each
is how
person.
you're going to draw
So
this
we
tree
have-
diagram. Let's
we
start
have-
by determining the units. There. There.
Just have
And
it
there.
as it is.
Your units.
So total amount due
you
to
have
each. So that is 10
45,000 units with a probability of 0.3, and those are the worst conditions.
plus 68.
That is worst condition.
0.625. So that should be 84.
The next condition is when it is most
185.
likely.
0.625.
Most likely. And most likely, your
should be
probability
81.
is 0.6.
That is for Mona.
Then you have the best condition.
We have it there, sorry.
The best condition,
So we have
you
it
have
1,
a probability of
185.
0.1. Of
0.6.
0.1. 0.1. How many units are this of most likely? 50,000.
So that should
And
be
best conditions is
165.
how much? 55,000 units. 55,000 what?
So that is
units.
amount that
We
is
have
due to each.
represented
That is amount that is essentially due to each.
the units
each
to be
beneficiary,
produced
which is
and
Mona
sold.
Nora.
So these are your
The
who?
figure that
Units.
they get. So
These
that is
are
how we
your
essentially
units.
get
The other uncertain
the amount that is
item that we don't know
actually due
about
to the
is your
beneficiary.
variable
So that
cost.
marks the end
Your
of that
variable
question.
what? Cost.
we pick it on our next
And your variable
illustration.
cost, have it in 3 market conditions. 3 market conditions.
Greetings, candidates, and welcome back to the Advanced Financial Management class. Today we continue with the topic mergers
Let's draw it
and
nicely.
acquisitions. So far, we've studied the
3
nature
market conditions.
of mergers and acquisitions. We
The
discussed the
first
arguments
market condition
for and against the use of mergers.
is 0.3,
Went ahead to
which is what?
highlight
The
some of
worst.
the evaluation
Is
models,
here the worst.
the
The worst condition
defense
with a probability
tactics
of
against hostile
0.3,
takeovers. Today
and
we
your
move
cost
on to
is
the next subtopic,
350.
which is financing of mergers
Most likely
and
is the next
acquisitions.
market condition
Now, after the evaluation of a target, the company has to
with a
figure
price
out
with a
which
probability
method
of
to use
0.5,
to finance
but a cost of
the
how much?
acquisition.
400.
And there are various ways the company can choose to do what we call
You have the
outright
best
purchase
condition
using cash. There could be share for
With a probability
share
of
exchange,
0.1,
share
with a
debenture
price of how
exchange,
much? 5,
share preference
50.
exchange.
You repeat
In
this
lesson, we're going to
worst,
discuss
the probability
the various
is
methods that can be
0.3,
used in
most
financing
likely
mergers
the probability
and
is
acquisitions.
0.55,
first
the best
method
condition,
is outright
your probability is
purchase using cash.
0.15,
Outright
0.15. Then we also need to analyze what?
purchase
Worst, 0.3,
using
most likely
cash. The second
0.55,
method is
the
share
best is
for share
0.15.
exchange.
The prices are
Number 3,
350,
we have the share debenture
400,
exchange. Share
550,
debenture
350,
exchange. 4 is the
400,
share preference
550.
exchange.
That is your variable who?
Outright
Cost.
purchase using
These
cash.
are the units.
Number 1.
These are
Number
your
2,
variable
share
costs.
to share exchange. Number 3, share debenture exchange.
Very
Number 4,
important
share preference
that you capture
exchange.
that.
In this
That is your
lesson,
variable
we're going
cost
to
there.
highlight
Okay.
the
Then
advantages and disadvantages of these methods. We're going to
we can then
also
determine your contribution
discuss
margin.
how
Your contribution
the methods
margin
can be used. First of all, let's
multiplied by
begin
the
with the
units
share purchase using
will give us what we
outright
refer to as total
share
contribution.
purchase.
Remember,
using
how do you get your
outright
contribution
cash.
margin?
After
It is
valuation
simply
of
the
a target,
difference between your selling
the
price.
acquirer
And remember, your selling price was set as what? 1,000.
may
Your
decide
selling price
to
was set
pay
at 1,000.
or
So to
purchase
get
the
your
target
contribution margin,
using
you simply take your
cash.
selling price
So when
minus your
discussing the
variable
financing
cost. Minus your
of
variable
mergers and
cost.
acquisitions, an
And how will
outright
that be? You're going to take 1,000
purchase
minus
using cash
350
refers to the
1,000
straightforward
minus 350,
transaction where
1,000
the acquiring
minus
company pays
350.
for the target
say
company
1,000
entirely
minus
with
350.
cash. Entirely.
Then you
cash.
multiply by
If
the
the
units.
agreement
And
is,
how many
say,
units were
100
you selling? 45,000.
The acquirer pays
So please confirm that
the
that is
100 million transaction in cash. Straightforward.
45 million
Do you understand? So
times
the target company shareholders
650.
receive immediate cash. They receive
This is 29.
immediate cash payment for the shares.
to 50.
They receive
1,000.
immediate
So my values
cash
are in
for their
thousands.
shares.
My values are in thousands.
So
Then
shareholders
again, determine your contribution margin by taking your selling
of
price
the
1,000
target
minus 400. Believe now
company
you have understood that.
receive immediate cash
Times your units, and your units were 45,000.
for their shares. They receive
1,000
immediate cash for their shares.
minus 550.
So that is one.
How many units again are you
feature
selling?
of outright
45,000.
purchase using cash. It is a very simplified transaction.
1,000 minus
Compared to other financing
350.
methods like
Yeah.
stock
The selling price is
swaps
not
or
changing.
cash acquisitions, and cash acquisitions tend to
You multiply by
be
who?
simpler.
Your
compared
units
to
now,
share to
for
share,
the most likely
compared to
scenario,
share
are
debenture
50,000.
exchange compared to share preference exchange. This one is
1,000
simpler. It is a simpler transaction.
Minus 400. Again, your units are 50,000. 1,000
It's like going
minus
to a yard and
550.
just paying for a car, or going to a
you
market,
multiply
paying
by
for a commodity. It is
50,000.
simple.
That will give you your
pay the
contribution.
seller, and
1,000
the transaction ends
minus
there. There are very
350.
few complexities related to
Your
valuations and
units
potential
under
fluctuations
the
in
best
prices.
scenario is selling
Another
55,000
aspect here is control and
1,000
ownership.
minus 400
Control
by
and
who?
ownership.
By
The
55,000.
acquiring company gains full control,
1,000
full and immediate control
minus
of the target company,
550
and there is no dilution
by
of
who?
ownership. There is
By
no dilution of
55.
ownership for the acquiring.
Then we now get our who?
companies,
Totals. We
existing
then now
shareholders.
get our who? Totals. We need to
control
get our
and
totals.
ownership is immediate.
We get our totals.
Financial
600.
resources. This method requires
545,000.
financial resources for the
That must be 27
target
million.
company.
1,000
effect this
minus
transaction,
550
I mean, for the
by
acquirer to effect this
45,000.
transaction, then the acquirer has to have
That must be 20
financial
to
resources.
50,000
Financial resources. The
times
method requires
50,000.
the acquiring company to
That
have
must be
substantial
32.
cash reserves.
500.
Or the company should have the ability to raise
That must
significant
be
capital.
30 million.
You understand?
1,000
So this
minus
method comes with
550
advantages, what we call
by
pros,
50,000.
and
That
disadvantages,
is
what we are calling
22.
cons.
500.
Now the first
1,000
advantage of
minus
financing
350
of mergers
times
and acquisitions using outright
55,000.
outright purchase using cash is
35,
certainty for the seller.
750 million.
Certainty.
1,000 minus
Certainty
400
is an advantage for the seller.
by 55
The
is
target
33
company
what?
shareholders
Million.
receive immediate and guaranteed
1,000
payment.
minus 550
Immediate and guaranteed
times
payments,
55,000.
which then eliminates uncertainties
24
associated with stock
750.
fluctuations.
That will give you your
There is
who?
that element of certainty.
Contribution.
Simplicity.
That will give you your
Speed
total
and
who?
simplicity is another advantage.
Contribution.
Speed
Which
and
is your contribution margin times your
simplicity. Here we
units.
say that is a
Then you then
simple
subtract your
transaction.
who? Fixed costs. So let's
Cash
have
transactions
our
tend
who?
to be quicker
Fixed costs.
and less complex.
And I will have my fixed
than
costs
those
in thousands of
involving
what?
stock
Shillings.
exchanges like the share-to-share
So you
exchange,
need to
the
indicate
debenture,
that.
share debenture exchange, and so on.
Your fixed
Simple
cost, what were
and
they saying?
Quick. Speed and
Note number 2.
simplicity.
The fixed cost
Clear
attributable will be how much? 24 million.
Clear
so this should give you
valuations.
24,000.
Now, how is clear valuation an
24,000.
advantage associated with the outright purchase
24,000.
using cash?
24
Now, the
again.
price is clearly defined.
24.
Before the payment is done, the price
24.
is clearly defined. Clearly
24.
defined, which reducing valuation, which
24.
reduces then valuation disputes.
And lastly, who?
Clear valuations
24.
reduces valuation.
Now with that, we
disputes.
then need to get our who? Profit. Remember they wanted us to get our what?
Maintains
Expected
control.
profit, which we know
Is also an advantage associated with control.
for us to get our expected
Control.
profit, we
The
need to get
acquiring
our
company
profit, we multiply by our
retains full
probability.
ownership and
So
avoid
let's start by
diluting
getting our
its
profit.
existing shareholding
29 to
or
50,
its existing
which is your
shareholders' equity.
contribution, minus your fixed cost
Another
of
advantage is
24
positive
million.
market, positive
This will be 52,
market
50,
perception.
27 million
Positive
minus 24
market
million.
perception.
That
Positive
will give you
market
3
perception.
million.
How is positive market perception an
20
advantage?
to 50
Positive market perception. How is it an advantage?
minus
Now, candidates'
24
cash
million.
needs can often
That will give you a
signal
negative
financial
profit of
strength
37, 50,
to the market. When the market hears that company A has acquired
32,
company
500
B with an outright purchase
minus
using
24
cash, then it signals, it sends a signal,
million.
an indicator that
That is
company A is doing
8,500.
well, and investors would want to be
That is
associated with
6
companies
million.
that have strong financial muscle.
22,
So these are
500.
5
Is that
advantages.
1500?
But you also have
Yes, it is.
disadvantages.
Minus 24 is
There are
1500.
some disadvantages that are associated
750
with the
minus
financing of
24
mergers
million.
using outright cash.
That must be 11,
One is financial strain,
750,
can lead to financial
33 million
strain,
minus 24 million.
particularly where
That
the
is
target
9,000.
is overvalued. Large cash
9,000 or
outlays
9 million.
can
24,
deplete the acquiring
750
company's
minus
financial
24
reserves,
million.
which then
That
potentially
is how
hinders
much?
future
7.
investments or operations.
750.
Opportunity cost.
We then will introduce our joint probability. Our
Opportunity
joint
cost.
probability.
Using cash for acquiring a company means that those funds are
which we simply
unavailable
denote
for
as
other
JPO.
potential uses, such as
Why are we
research and
doing that?
development
We are doing that so that we now take our profit by our joint probability to get our expected profit. Expected profit. Your joint probability will simply take the probability of units
company lacks significant cash.
you multiply by the probability of your variable cost. For example, 0.3 by 0.9.
Need to increase debt.
0.3
then that leads
by
to what
0
we
should
call
be
debt load.
0.3, yeah?
And debt
Other
load
one
we
is
know
what?
associated with the
0.3.
interest
You
expenses
multiply by
which
who?
are fixed. That is
0.55.
a disadvantage. The
I'm
company
indicating
lacks
this
money
because it is
from its
necessary,
internal sources. Then the company,
so that
the acquiring company, may be
together
forced to borrow,
0.3 by
and that
0.15.
increases
Very
its
nice.
debt load, and it
Let's
increases
indicate
the
this.
interest charges
0.6
that are
by
associated
0.3.
with debt. Funding
0.6
requirements.
you multiply by who?
There could also be tax
0.55.
tax implications. Tax implications.
That was 0.6 by
For the seller
0.55.
candidates receiving cash,
0.6 by 0.15.
creates an
Best
immediate
0.1
taxable event.
by 0.3.
Okay, there is an immediate taxable
0.1
event, and that
by
will lead to
0.5.
capital gains taxes
0.1
due to the
by
sale.
0.15.
So this
about that.
that
We
is
then get
all
our
we
joint
can say about
probabilities now.
outright
Our joint
purchase
probabilities.
using
0.3 by
cash when
0.3
financing mergers
is
and
0.09.
acquisitions. So this is the first
Then
method. And the second
0.3
method
by
is
0.55.
share-to-share exchange.
0.165.
B
0.3
share
times 0.15.
to
0.045. 0.6 by 0.3.
exchange.
0.18.
Share-to-share
0.6 by
exchange.
0.55. 0.33.
Exchange. Share
0.6 by
share
0.15.
is another method
0.0.
that a company
9,
may use to finance
0.1 by
mergers and acquisitions.
0.33.
Now, when discussing the
0.30.
financing of mergers and acquisitions,
0.03.
a share-for-share exchange
0.055.
is a crucial method
0.015.
to understand before
Wonderful.
settling on
Let's
which
then
method
get
to
our
use. Companies have
expected
to consider the
profit.
share-for-share
Our
exchange
expected
method.
profit by taking
And in
your
this sense,
probability, you multiply by your who?
Share-for-share
Profit. The probability,
exchange
you multiply by your profit.
is a transaction
So 52,
where
50, and this was in
the
thousands of
acquiring
shillings.
company
Yeah?
offers
Remember that
its
is in
own
thousands of
shares
shillings.
to
52,
the shareholders
50
of the target
by
company in
0.09.
exchange for their existing shares.
5250 by 0.09.
Share
That
for
is
share exchange.
472.5.
It's self-explanatory, is it not?
3000
The acquiring company offers its own
by
to the
0.16.
shareholders
5,
of the target company
495. 3750 by
in exchange for their
0.045.
existing shares.
This will
So
be
if company A
168.7.
is
5
acquiring company B, so this
8500
is the acquirer and this is
by
the target,
0.18.
the predator.
1530
This company has shareholders.
is very,
This
very
company has
necessary.
shareholders.
As much as it looks
This company is
exhausting
buying
and very involving,
company B. This company B
you
is
need to
owned
do
by
this.
existing shareholders. So instead of
1500
paying the existing shareholders cash, as we saw in the
5.09.
first case, this company can
130
offer its own shares to
11750
company B. Because once company B is acquired, this company
by
ceases
who?
to exist.
0.0
So instead of these shareholders being granted or given cash, they become shareholders of
352.5
company A.
9,000
by virtue of
5
the shareholding that they receive in exchange to their existing shares. So they have to relinquish their own shares in company B,
750
and for them to relinquish these
by
shares in company B, they are given
11.25
company A shares.
Once you've gotten the product
The acquiring company
of your
offers its own
probabilities
shares to the
and your
shareholders
what?
of the
Your
target
profit
company.
to determine your expected profit, you then
And
now
that is in
get your
exchange
totals.
for their existing shares.
You must get your what?
So they are not given cash, they are
This,
given shares
remember,
of company.
is your
they
expected
acquire.
who? Profits. Expected profit.
And that means
So
that
you now simply
instead
add
of receiving cash,
472.5
instead of receiving cash,
plus
the
495
target
plus
company's
168
shareholders
plus
become
0.75
shareholders of
plus
the acquiring
1530
company. To put it
plus
differently.
1980 plus
And a
135
critical
plus
element
352.5
here
plus
is
495
the exchange ratio.
plus 11.25,
Okay, there has
which
to
will
be
give you
a ratio.
56.
A critical element
56
in
what?
share
40.
for share
56,
exchange
40.
is the exchange ratio,
So therefore, we can
which is the
say that
which determines the
this
target
was a
company.
loss. This was a loss.
You understand?
22 minus 24.
The
That is a
exchange
negative profit.
ratio, which we will be
Same
learning
case
how
with
to
this one.
calculate later on.
Have
But
left out
you
those
have to get that
negatives.
understanding.
Is there
You to
any
understand
other
what is a
negative?
share for share exchange.
That's a profit.
Now, one of the
Profit,
key features of
a
share to share
loss,
exchange is that
a
it is
profit,
equity
a profit,
based. This method
and a
is
profit. So let's compute this
equity-based.
answer again because of the what?
We are talking about
Of the
share
negatives
to
of
share
the negative
exchange.
profits.
It
We
is
left out
equity
that.
based. It's
But the
based
good
on
thing is that
equity.
we have captured
The
it.
method primarily involves
So let's add again.
the exchange of equity
472.5
rather than
plus
the exchange of cash
495
or debt. Another feature associated with
minus
is dilution.
168.7
Another feature associated with the exchange, the share to share exchange
plus
is dilution.
1530
Now, the acquiring company
plus
issues new shares,
1980
which then
minus,
dilutes
this is a negative,
the ownership percentage of its existing shareholders.
135 plus
If, for example, there were only
352.5, which was a
10
positive,
shareholders.
plus 495
When new shareholders are introduced, say 20 shareholders are introduced, then there is
5032.5.
dilution of shares.
That will give you your expected what?
The
Profit.
existing company,
That
after
will give
issuing
you
new
your
shares,
expected profit.
dilutes
That
the
is the
ownership
first
percentage
part
of
of
its
that
existing
question.
shareholders.
First part of
This
that
was
question,
holding
saying
equally.
using
Say
a probability tree,
equal. Maybe each
compute the
is a 10
expected profit of what?
of the shareholding.
Vera.
When you
The
have
next
20,
part of
then
that
this,
question,
they will no longer
part
be
2, that was part 1.
controlling, each shareholder will no longer be controlling 10%.
Part
The
2 of
percentage
that
will be
question,
diluted
compute the
by
probability
virtue of
that
having
Vera
many
Enterprises will fail
shareholders
to
in the
break
company.
even.
Dilution.
Compute probability that
Another feature associated
Vera
with the
will
share
fail
to share
to break
exchange
even.
is the aspect of valuation.
To break even.
Valuation.
The probability that Vera will
Valuation.
fail to break even
Accurate
is
valuation
here.
of both companies
0.045
in order to
plus
determine a fair exchange ratio.
0.09. Why?
The
At
companies
break
must be
even
properly-
point,
must be
your
properly
profit
valued in order to
is
have
equal
a
to
proper,
your
a fair
is equal to
exchange
0.
ratio.
Okay, so anything
Could
less
also be tax
than
implications
0
in some jurisdictions.
basically means your company is not
This
able
type
to
of,
break even. And as you can
exchange
see,
can
with a
be
probability
captured
of 0.45,
deferred.
yeah, your profit is negative. With a
which can be a
probability of
significant
0.09, your profit is negative.
Now,
So
why
you have
would
not
a
been
company
able to
then
cover your
prefer
costs. So this will
share
be
to share
given by
exchange
0.045
and not
plus
outright cash or
0
share to debenture exchange?
0
Why do we have some companies preferring share to share exchange?
0.09. It should
That
be
is a question that we may want to
0.045 No, 0.09.
Companies use
0.13.
share-to-share exchange
You're not able
in
to
mergers and
break even
acquisitions for
from here.
various strategic reasons.
That part of that question,
Reasons are
lastly,
structured
the
around
last part of that
financial
question,
flexibility.
determine the probability
They are
that
structured
Vera
around
Limited will not
alignment
achieve a
of
target
interests
profit.
and also
Compute
tax
probability
advantages.
that Vera
One reason
will not
is to conserve
achieve. How much is your
cash.
target profit? Your target profit, they were
Companies
saying,
would prefer share-to-share exchange
was 6 million.
as opposed to
6
outright
million. So
purchases in cash in order
will
to
you not be
conserve
able
cash.
to achieve your target profit of
That
6
is the
million?
primary reason.
That first
The
you're not
primary
achieving.
reason
You're also not achieving
company
that.
opt for share-to-share
That you have
exchange is to
achieved, that
conserve
you have
cash.
achieved, that you have not, that you have, that you have, that you have not. So we take the joint probabilities.
Instead
The
of
first
paying
one is
cash for the target
0.0.
company, the acquiring
9.
company offers its own
Yeah.
stock.
The second one is plus
And that is especially important for companies that want
0.165.
to preserve their financial
The third one is already a loss,
resources.
plus 0.045.
So that instead of paying
Plus
the target company,
that
money
is a
can be
profit of
invested.
more than 6. That is also okay. That is a loss with a probability of 0.09.
That's one reason.
That is a profit of more than 6
Another
is okay.
reason
That is
is
a profit of more than 6 is
large
okay.
acquisitions.
That is less than 6 million.
Large
So 0.015.
acquisitions. Another reason.
So then what do? We simply
Large
now get the
acquisitions, a cash purchase
total.
might be prohibitively expensive, which makes
So for the company not to be able to break, to achieve a target
if you have a large acquisition
of what?
if the target
Of
company
6 million profit,
is to pay
the
large sums of
probability
money
is
to the
0.40.
only viable solution would be share-to-share exchange.
0.405. And that is all that is required
Yet
in
another
that
reason is
particular
aligning of interest
question. That is all that is required
Aligning
in that particular question. All right.
of
That is
interest.
how you deal with probability tree
Aligning
diagram.
of interest.
So as far as your conditions of uncertainty is concerned,
shares in
in the
acquiring
next
company,
lesson,
they become
we're going to talk
shareholders
about continuous
in the
or
combined
normal distribution method.
entity.
Continuous
And that
or
aligns
normal
their interest
distribution
with
method.
the acquiring
And
company's
I would like
interests, which then
for
encourages
us
them to
to
support
attempt
the
a
integration
question.
process.
And from your previous illustration questions,
Yes.
you can attempt November
Because they are now part
2017.
of ownership.
So your
of the
assignment,
acquiring
this is
company.
an assignment.
To align
This
the
is your
interests of
homework.
both the
And this
target
is an
company
assignment.
and the acquiring company.
So
the
you can
share
attempt
to share
a question
exchange
of
method
November
is
2017.
preferred.
November 2017. And the specific question
advantages.
is question 4A.
Now,
BPO.
candidates in some jurisdictions, a share for share
BPO Limited.
exchange
BPO.
can be structured as
Right. So
a tax
thank you so
deferred
much.
transaction.
We can call it a
can
day.
be structured
And
as a
have
tax deferred
good
transaction, which means that the target company shareholders do not have to pay capital gains taxes
Welcome
until
to Manifested
they
Publishers.
eventually
My
sell the
names
shares
are
of the
Mr.
acquiring
Mariga.
company.
I'll be
Deferred.
teaching
That's why I referred
advanced
it as
management accounting, and
It is
today
a
we
tax
will
deferred
continue with the
transaction.
topic of
Tax
planning and decision making
deferred
technique. Specifically, I want us to talk
transaction.
about the various applications of
Because it
marginal
is a share
costing. The various
share
applications
exchange.
of marginal costing. Now, marginal costing is a method of costing,
shareholders
or
of
is
the
a
target,
costing method
as opposed
that
to
requires the user to
cash
determine variable costs,
method,
such that your variable
they
costs
are not required, may not be required to pay capital tax
will
gains.
comprise of direct materials,
They may be required to sell off, to pay
labor,
tax gains
direct expenses,
after selling the shares that they receive from the acquiring
and
company.
variable
So that is another reason. They are not tax
overheads.
capital
variable overheads.
taxes, capital gains taxes that are paid when
This
transaction
method, known
is
as
being carried
marginal
out.
costing, is also known as
That is a tax advantage. That tax advantage
contribution
is attractive to the
costing.
shareholders. It makes the deal more attractive to the target company
Contribution
shareholders
or
because it allows them
variable
to be paying
costing,
taxes on their gains. They
or
gain by joining
direct
the acquiring
costing,
company without
or
making
direct
any taxes,
costing.
without paying taxes.
It is referred to the above
So that's
names
an
because
advantage.
you consider
That is a
both,
reason.
you
One
consider
is
direct
conservation of cash.
cost as part of your
Number
production
two,
cost.
we've said it aligns
You
the
also
interest
consider
of
variable
the interest of
cost when you determining your production
the shareholders.
cost, your
Number three,
production
we've seen
cost.
it
So
has tax
therefore,
advantages.
using
Number
marginal
four, the
costing,
fourth reason
your
why
variable
share-to-share
production
exchange is attractive
cost
is
variable
flexibility
production
in
cost
negotiations. There is flexibility
will be made up of direct materials,
in
direct labor,
negotiations. Offering shares can be a
direct
flexible transaction
expenses.
tool, allowing companies to structure deals that
Then
meet
you're
their
also
needs
going to
of,
add
the needs
your
of both
variable
parties.
production overheads.
Because using shares can help
Also going
them
to add your variable
help
production
when there are disagreements on valuations.
Apart from that,
If there are any
apart from
disagreements on valuations of both the companies,
how you determine your production
disagreements can be
cost
resolved
using marginal what?
when
Costing.
financing
It is
using
also important
share-to-share
that we remind
exchange
ourselves
method.
how we determine
understand?
contribution.
It
So
allows for
contribution
flexibility in
is the
negotiations
difference between
because the target company
your selling
shareholders
price
are not being paid off and they go
and
away. No,
your
they
variable
still become
costs.
part of the new entity.
And your variable
They become part of the
costs. So
shareholders,
it is the
the owners
difference
of the acquiring
between
company.
selling
So it
price
becomes
and
very
variable
easy to negotiate
cost.
or to
This
iron out any
particular
disagreement that may arise
concept
during valuation.
was covered when we were talking about
Understand?
cost volume profit analysis, both
There is also
in
another reason
intermediate level,
maintains
and we have also covered it in advanced level.
financial
However, today I want us to
stability.
talk about the various applications of
Financial
marginal
stability is maintained.
costing. So today I want us to talk about the
understand?
various
Share
applications
for share
of
exchange.
marginal costing. So the
Prevent the acquiring
applications of
company
marginal
from having
costing
to take
is what I
on
want us
large
to do
amounts
what?
of debt.
To talk about.
So
The
these are
applications of marginal
the advantages.
Remember we've said marginal costing
These are the
is
reasons
also known
why
as
share-to-share
direct
exchange
costing.
is preferred. Or may
There
be
is also
preferred.
known as what? Contribution
But does
costing.
that not
It
mean
is
that
also
this
known
method
as
does
direct
not have
as a
disadvantages? There are
variable
also some
costing.
disadvantages
It is
that are
also known as
associated
variable costing.
with,
Why?
or
Because
challenges
you
that are
normally
associated
calculate your
with
production
the
cost by considering
method.
only variable
So what are the
production
disadvantages?
cost. Only variable production cost.
Now the first
All right. The first
challenge
application of marginal costing,
of share-to-share
application number
exchange
one
method
that we will talk about is
is
what we refer to
dilution
as limiting,
ownership.
factor.
Dilution.
Is known as limiting
Obvious.
what? Factor
Dilution of
analysis.
ownership.
We have a second
Issuing
application
new shares
known as
dilutes the
throughput
ownership stake of the acquiring
analysis.
company's existing shareholders. That is obvious.
Throughput
There could
analysis
also be
is the
valuation
second
challenges
application. You have make
to
or buy,
valuation challenges.
make or buy
Valuation challenges.
decisions.
Determining a fair exchange
Number
ratio
four,
can be complex
you have special
and
offer
contentious
decisions.
because it requires
Special
accurate
offer
valuations of both
decisions.
companies.
Number
And there
five,
could also be
you
fluctuations in
have
stock
drop
prices which
or
can further complicate the
continue
process.
decisions. Drop or continue
Market volatility
decisions. Drop or continue decisions. Let me start
is
by highlighting the first
disadvantage.
application
Market
of
volatility.
marginal
The value of the
costing. Let
shares
me highlight or
received by
talk
the
about the
target
first
company shareholders
application
can
of
fluctuate,
marginal.
which creates
And the
uncertainty
first
and potential
application
losses.
is limiting factor. Limiting factor
Complexity
analysis. Limiting factor is
a
what
challenge.
is
How
referred
is
to
complexity
as
a
a
challenge?
scarce resource. So a
Share for
limiting
share exchange
factor is a
can
resource
be
that
a
is
complex
not
transaction
enough,
which requires
such that
careful legal
it will
and
normally
financial planning.
prevent the company
There
from
is
meeting
dependence again
its
on stock
demand.
performance.
So limiting
E,
factor is a scarce what?
dependence
Resource. This is a
on stock
scarce resource.
performance.
Scarce resource. A resource
Dependence on stock
that
performance. The value of the deal is
is
tied
not enough,
to the
i.e.
performance of
a
the
resource
acquiring
that
company's
is not what?
stock.
Enough,
And if the stock
or is
performs
limited
poorly,
in its
then the deal
availability.
becomes less
In
valuable
its
to the
availability. In
the
its
shareholders of
availability.
the target company.
It is limited in its what?
So candidates, that's all you
Availability.
can say about the share to share
i.e.
exchange.
it is not what?
You highlighted
Enough.
the features,
That
the
resource
advantages,
that is not
and
enough, it
disadvantages.
may be
Let's move on
materials,
to the
it may
fourth
be
or the third
labor,
method.
it may be production
method.
capacity, it may
That
be
is
even what?
C.
Space. Okay? As an organization, when you are faced with
Share
a limiting factor, or when you don't have enough resources, you are going to maximize
exchange.
the contribution per
Share
limiting
debenture
what?
exchange
Factor.
is yet
So
another method
when you
that,
don't have
can be used
enough
in financing
resources,
mergers and acquisitions. Now, a share
you as
debenture
an organization
exchange refers to
should
a
decide
financial transaction often
on
occurring
the
during
units
mergers
and the product of the
and acquisitions where a
product
company
you're going
offers
to
a
do what?
combination of
Produce,
its own shares and
such that
debentures
these products
to the
that you're
existing
going to produce
shareholders of
are
another
the
company.
ones that are going to generate the maximum
And at
contribution.
this stage
Now,
in
for
your
us to be
professional,
able to do
journey,
the question on limiting
have,
factor, or for us to be able
fully
to
grasp
identify the product
the
that
meaning
will
of a share.
maximize the contribution per
Shares
limiting
will not
factor,
represent
we must always
ownership
start
in a
by
company.
identifying the what?
When you hold
The
shares,
limiting factor.
you own a
So the
portion
step
of that
that
company.
we follow when you want
So
to
shareholders
identify
may
your
receive
limiting factor
dividends,
units to produce,
which is a
steps to
portion of
follow.
the company's
Number one,
profits.
start
And
by
may have
identifying your
voting
limiting
rights.
what?
That is the meaning
Factor.
of
You
share.
determine
A
limiting what?
debenture, on the other hand, these are
Once you've
debt
determined the
instruments.
limiting factor, the
They are
second
essentially
step
loans
is
that are issued
determine
by a
your
company.
contribution. You
And
must
debenture holders
determine
are
your
creditors
contribution
and not
per
owners,
unit, per product.
like the shareholders. They are not
You
owners.
determine
They
your
are creditors to the
contribution per
company.
unit, per who?
And they receive
Per product.
fixed interest
Number 4
payments.
is you're going to
Debentures,
determine
something
your
to note again here,
contribution,
are essentially
determine your
unsecured.
contribution per limiting
They are typically
factor,
unsecured, meaning that
per who? Per
they are
unit,
not backed
per
by
who?
specific
Per
assets.
product.
And therefore,
Per
a
unit, per who?
share
Per
debenture
product.
exchange involves
Next step
providing the
that
target
is to
company
determine
shareholders with a
your
mix of
to rank,
ownership
or to determine the rank of
and
your products.
debt
And the rank here, or the products that you're
in
going to
acquiring
rank, will be ranks
company.
that the product with the highest contribution per
in the
limiting
acquiring
factor
company, that is.
will be ranked first.
So the existing
Will be
shareholders
ranked
of the
what?
target
First.
after
And remember
the
that
deal,
the
they
contribution
are given
per
a
limiting
mix
factor
of ownership
per what?
and debt
Per
in the
unit
existing
will have been
acquiring company.
computed by note number 4.
You understand?
Will have been computed by step number 3, not number 4, by step number 3. So we are saying you
The
rank according to
share
the highest
debenture
contribution,
I
according to
repeat,
the highest contribution per
involves
limiting factor
providing
per
target
unit.
company
That should
shareholders
be your
with
order
a
of
mix
what?
of
Rank.
ownership, which is represented by shares,
Then step number 5, you determine
and
your
debt,
optimal who?
which is represented by
Output.
debentures
And this optimal
in
output
the
will
acquiring
be
company.
according to the rank above.
And this strategy candidates
According
can
to the rank what?
be
Above
particularly
in step
useful
what?
in mergers and transactions
In
because
step who? D.
it offers
This
a
step here
blend
above. Right.
of
That
a blend of, it
are
offers a
the
blend
basic
of
steps, or those are the steps that
potential for
are
capital
going to be used
appreciation through
when
shares
an organization is
and
faced with a
stable
limiting
income
what?
stream
Factor,
through
a scarce resource. And we can
debentures.
have an illustration. We can have an illustration.
By having a mix
In our first
of shares and
illustration, the
debentures in the
illustration I
acquiring
want us to
company,
talk about
the
is a
shareholders
question
of
of
the target company
April
can
2022.
enjoy the
April
benefits come with
2020,
capital appreciation, but they also enjoy
April
some
2020.
level of fixed interest payments
Question 2A.
because of the
April
debentures.
2022. Question 2A. The question
So
states,
the question we need to ask,
Zinc Limited is a
why
local manufacturer
companies use
of
this
3
method.
products, namely X, Y,
We know
and
companies
Z.
use
The management of the
share
company is
debenture
unhappy
exchange
with the current production mix
for
and
various
is
strategic
seeking
reasons.
advice on the most optimal
And one main
arrangement.
reason is to offer
The
a
current
more
production
appealing
is 10,000 units
and
of
flexible
X,
deal
5,000
structure.
units of Y, and 6,000 units of Z.
So one reason
The management accountant
or advantage
has
is to
provided
attract a wide
the
range
following
of
information
investors.
relating to the 3 products.
Attract
You have your details,
wide range
you have the product X and Y.
of
The selling
investors.
price per unit of X is 1,200,
Attract a
of
large
Y is 2,000,
or
of Z
wide
is
range of
2,250.
investors.
Your production cost
This
of
method
materials
appeals
is
to investors
300,
who-
of Y is
investors
900,
varying
of Z
risk
is 600.
appetites.
Your variable
Flexible
overheads of
debentures
X is
offer a stable
150,
income
of
stream
Y
from
is 400,
interest payments,
of
while shares provide the
Z
potential
is
for capital
450.
appreciation.
Additional
We have
information.
people,
Each
investors
type
who are
of
looking
product
for
passes through 3 departments in
capital
which a
appreciation
different type
and
of
the
labor is
potential
used.
for
The labor requirements
fixed
in each
interest
department
payments.
are given below. Department
Flexible
1,
financing.
your rate per hour is 20 shillings
It
per
is a
hour,
flexible
where
financing
X is
method.
requires 3 hours per
This
unit, Y
flexibility.
4 hours per unit, Z 6 hours
The
per
share
unit.
debenture
Department
exchange
2,
allows for
the rate per hour
a
is
greater
40
flexibility in
shillings per
structuring
hour.
the mergers
Your
and
labor
acquisitions
requirements are
because
1
companies
hour
can
per
tailor
unit
the
in
mix of
X,
shares
2.5 hours per unit in Y, 4 hours per unit in Z.
3.
Department 3, your rate per hour is 30 shillings.
A reason in relation
Your
to
labor requirements
the
per
lowering
unit of X is
of
5, Y is 7,
interest
and
cost,
Z is 9.
interest,
Number 2, if there is a shortage of
lowering
labor
interest
in
costs, lowering
Department
interest
2,
costs, lowering
and it
interest
is not
costs.
possible to increase labor
Often
input
candidates,
hours beyond
the
the fully
debentures
utilized
offered are
utilized
the
current
debentures
hours.
that are offered to
Fixed
the
overheads are
shareholders of
budgeted
the
at
target
5 million
company are
shillings per
convertible
annum and
debentures,
are
meaning
expected
that
to
over some
remain
time, the
constant.
debentures are
A
transferred
recent
into
market
shares.
survey
They
disclosed
can be
that the maximum sales
exchanged for
potential
shares
for the
at a later
company
date.
is
That's the meaning of convertible.
12,500
The
units
debentures
of
that are
X,
mostly used in this transaction are
7,500 units
convertible
of Y,
debentures.
and 8,000 units
And
of
this
Z.
conversion feature
Advise the
can make
management of
debentures
Zinc
more
Limited
attractive to investors,
on the
which
most
allows the
profitable
acquiring company
production
lower
mix
interest
and the
rates.
optimal profit using limiting factor. So
Deferred
I want us
equity
to tackle
dilution.
this question of April 2022.
Deferred
Question what? 2A. Let me
equity
have
dilution.
that here.
Deferred equity
We will
dilution. What does
follow
that
the
mean?
steps as I have indicated.
Now, the equity
Is
dilution
limiting
from
factor, remember. Okay. So the
issuing
first
new
step
shares
is your
occurs
first
only
determine the
upon
limiting what?
conversion of
Factor.
the
That is step
debentures.
number 1. So we even
So if
write here.
debentures
Step 1.
are converted
Okay.
after 10
Determine
years
limiting what?
into
Factor.
share,
I'm going to guide you through this
then
slowly.
the
So that you
dilution
see what
is deferred.
happening. So determine
Dilution can only
limiting what?
happen
That is the
after
first step.
10 years.
The
That's
limiting
an advantage.
factor will be determined by comparing
an
the
advantage.
available
Deferred
resources
equity dilution.
with
And
the
that
required
allows the
what?
acquiring company to
Resource.
manage
So
the
here
dilution
we
over
compare our available what? Resource with your required
Next.
resource. They are saying
Bridging
currently, note number 2, that there is
valuation
a
gap.
shortage of labor in
Another
department
reason why
2. So
This
here
method is
you're going to
attractive
say
is the
your
aspect of
available
bridging
labor
valuation gap.
hours
Bridging
in
valuation
department
gaps.
what? 2. Your available hours in department
In
2,
situations where, for example, there
you're
is
going
a
to
disagreement on
have to calculate them now that you've not been given
on,
how many hours are available. But
on
additional information
there could be a
number 1,
disagreement on
additional
the valuation
information
of
number
the
1,
target company.
each type of product passes
But you
through
see,
3
this method is
departments
offering a
in
mix
which
of
a
shares and
different
debentures
type of
which can
labor
serve
is.
as a
Yes, the labor requirements in each
compromise.
department are given below. The labor requirements
6
per unit of X in
is
department 2 is
provides
1 hour.
income and growth
But
potential.
for you to produce
Provides
X,
income
X,
and growth.
yeah, you currently
potential.
are
This
producing
method
how many
provides
units?
income and
10,000.
growth
Currently are
potential.
producing
Income
10,000
and
units.
growth
Therefore,
potential.
for you,
And it's more
the
appealing
normal
to investors.
for
So
the available labor hours will be
this
dedicated to
aspect
produce X are how
provides
many
income,
hours? 10,000 hours.
via
Why?
the debentures and growth
Your
potential
labor
via the
requirements per
shares
unit is how
or the
much?
conversion of the
2.5,
debentures into shares.
and your current
So a
production is how many units? 5,000 units. Therefore,
debenture
the
exchange
labor requirements of what?
The advantage
Of Y
one attracts
will be
wide
what?
range of investors. Number
2.5
two is flexible
by
financing.
who?
Number four is lower
By
service cost.
5,000,
There is the
which in this
deferred
case will be
equity
how much?
dilution, bridges valuation gaps.
12,500 what?
It also provides
Hours.
income.
The
and
third
growth
product
potential.
is
There is
who?
potential for
Z.
income
And to produce Z,
through
you will
the
use 4 hours
debenture
per
interest
unit.
payments and
You
the potential
multiply
for
that
growth
by your
through
current
the,
production, which is
shares that are
6,000 what?
offered
Units.
to the shareholders.
So for you
of
to
the
produce
target company.
Z, you require 24,000 what? Labor
let's
hours
move on
in
to the
department what? 2.
method,
Then after that,
which
you
is
now
the
determine
share
all your total
preference.
labor
The
hours
share
that the current department
share
2 has.
preference
All the
share
labor
exchange.
hours that are available in department 2
Share
for zinc limited. And how many hours do you have
preference
available?
share
46,500
exchange.
who? Once
The
you've
share,
determined
this is the
your
ordinary
available
share,
labor
this is the
hours,
preference
what do
share.
you then need to
The
do?
share
To
preference
determine
share
your who?
exchange.
You will need to determine
Share
your
preference
required
share exchange.
labor hours.
Now, share preference
Required
share
labor hours
exchange,
in department who?
context of mergers
In department
and
who?
acquisitions.
Again,
In the
you need
context
to
of
produce
mergers and
X.
acquisition,
You will
the
need
share
to produce Y.
preference share exchange.
And you will
What
also
does
need
that
to
mean?
produce who? Z. For you to produce a single
What does
unit
it
of
mean?
X,
Or what does it
you need
involve?
1 hour per
This
unit.
one currently involves
But
offering preference
the
shares
market
of the acquiring
demand,
company
according to a survey
to the
that was
shareholders
conducted,
of the target
is that you
company
have a potential
in
to sell
exchange of the
12,500
existing
what?
shares.
Units. Therefore, you will require 12,500
So the acquiring company
hours to be
offers
able
its
to fulfill
preference
that
shares
particular what? Demand.
to the target company shareholders
Why?
in
You have
exchange
2.5
for
hours
their
per
common
unit,
shares
but the
in
market
the target company.
demands that you produce
And this
7,500
exchange provides the target
units.
company shareholders
Therefore,
with a more
you require how many
stable and
hours?
predictable income stream, because we know preference shares.
You require
may,
18,750.
the preference shareholders are paid
Then Z,
fixed
Z,
dividends.
you require 4 hours per
Right.
unit, or you'll be using 4 hours to produce a single unit. But your demand in the
And
market
if
is
the
of 8.
preference shares are
1,000
convertible, there's also the ability to convert
Therefore,
the
your
preference
total
shares that are later
required
made into
labor hours are 32.
common shares of the
So you add this
acquiring company.
12,500 plus 18,750 plus
And there are very many
32.
reasons why companies also prefer
Here you will
share
need, or you
preference share
require,
exchange.
63,250
Companies
hours.
use the share
63,
preference
250
exchange
hours
in
in which
mergers and
department?
acquisitions for various
In department
strategic
2.
reasons. And the main reason is to appeal
And let's see
to
how much deficit
specific
we
investors.
have. Let's see the deficit.
specific investor
You
preferences
available
and to
labor
achieve
hours are
certain
46,500
financial
labor
objectives.
hours, but what you currently
One
require
reason
is 63
is
what? 250. Therefore, you have a deficit
attract
or a shortage
conservative
or
investors.
a shortfall
One reason
of
is to attract
46,500, 63 to 50.
attract conservative
Therefore,
investors.
you have a shortage of
Now, preference shares
16,700 and
offer
what?
a fixed dividend,
50 skilled labor
providing
hours in
a
department what?
predictable income
2.
stream.
Labor hours in
And
department.
this is
Now,
attractive to investors
because you don't have
prioritize
enough hours
stability
here
over
to
high
produce
growth
all these
potential,
units of
such
what?
as
X, Y, and
refineries
Z, you
or
must
risk
decide
averse
of the 3
individuals.
products, which one am I going to produce first?
It may also
Which one am I
reduce
going to
risk.
produce
Preference
last?
shares,
Apart from deciding the
have
the
a
order
higher
of
claim.
the
The
products
preference
you're going to
shareholders have a higher
produce,
claim
you
on
also will need
dividends and assets in
determine
liquidation than common shareholders.
the units of each
So
product that you are
reduces
going
risk.
to produce
Reduce risk.
in that particular what period. For us to do
the
that,
investors
now
of
that
the
we've
market.
determined our limiting factor, we will determine our
may also
contribution per
facilitate
unit per who? Per product. But before we determine that,
M
let
and
us
A
therefore here say,
deal
therefore,
or transaction.
your labor hours
Understand?
in
Offering
skilled,
different
in
shares
department 2 rather, in
can
department 2,
The
it is the
M&A
limiting what?
transaction more
Factor. The
appealing to
limiting
target
who?
company
That
shareholders
is a
who
limiting factor.
are maybe
How do we know?
hesitant
Because
about
here we have a what?
volatility of the common
Shortfall
stock
or a deficit. You
desire
require
a
for
more stable
63,
income.
but you only have what? 46. You can only use what
There's
you
the
have,
aspect
okay?
again of bridging
So
valuation
therefore,
gaps.
your limiting factor
Bridging
per unit
valuation gaps, which I explained earlier.
X is who? 1
This method can
our
help
per
bridge
unit.
valuation gaps.
Y
Right?
is who? Is
Bridging valuation
2.5
gaps.
hours per unit.
Another point is related to
And Z,
capital restructuring.
lastly, is 4 hours per who?
Capital
per unit.
restructuring.
4 hours per
This method can be very essential in
That
capital restructuring.
is the limiting factor per
Adjusting
who?
capital structure.
Units. And that
A
is also
company
how
may
you
use
determine your
share
limiting
preference,
factor.
share exchange
Remember, we said the limiting
to
factor is a
adjust its
scarce
capital structure,
resource. Those hours
potentially
of
reducing the number of
16,750
outstanding common
represents
shares
the
or even
scarce
altering
hours you
its
don't have.
dividend,
Step number 2.
obligations.
Step number 2 here is to determine your contribution
There could
per
also
unit
be
per
tax
who? Per
considerations.
product. So let's determine our
As
contribution per
explained
unit
earlier,
per product.
tax
Contribution
considerations. Depending on the jurisdiction, there may be tax
determine
advantages
contribution
associated
per
with
who?
the preference shares that
Per
make
unit.
them
Let's determine
attractive to
contribution
certain,
per unit.
uh,
How do you
M&A
determine contribution per
scenarios.
unit? The contribution per unit is normally
So
calculated
there are many reasons,
by taking the
candidates,
difference of your
why share
selling price per unit
preference share exchange
and
may be
your
preferred
total variable cost.
mergers
So we
and
can start with the
acquisitions.
first product.
So in
The
this
first
lesson,
product
we
is known
discussed
as what?
4 methods.
Again, we're going
One
to take
is
your selling
outright
price per
purchase
unit.
using cash. These are methods in financing mergers
The
and
selling
acquisitions.
price per unit of X is
The second
1200.
one is share
You less your
share
variable
exchange.
cost, and the first variable
The third one is
cost
share
is the cost of direct
debenture
materials.
exchange. And lastly,
And
we
your material
discussed
cost is how much?
share preference
300.
share exchange.
You have another variable
for attending
overhead
the lesson.
cost is your
We
other
continue to learn
variable
more
cost,
about mergers
which
and
is
acquisition in our
150.
next session.
Then you also have a cost known as direct labor cost. And your labor cost was in department 1, department 2, and
Greetings
department
to you all and welcome to the lesson.
Department 1,
The subject is business and data analytics.
1, you are using 3 hours.
We've been
Analytics,
studying
how much?
the first topic, Introduction to Data Analytics. So
labor
far,
cost is
we've
how
done
much?
the
60.
CRISP,
Department
which is an acronym for the
same.
Cross-Industry Standard
Department 1 is
Processing
being
for
paid
Data
how
Mining
much?
Framework.
20 shillings per hour.
Under that
per
subtopic,
hour. So if
we
you work for 3 hours,
discuss the
you're going to
data
pay 60
concepts,
shillings.
the conceptual concept,
Department
logical concept,
2, you're
physical,
being
and
paid
also
at 40
physical
shillings
data
per hour. And
models.
department 2, they work
We
for
went
how
through
many
the
hours?
stages
1
in
hour.
data life
Therefore, they
cycle.
were entitled
Then in the
how
second
much?
subtopic,
40.
we've began
Department
looking
3,
at big
you're
data
working for 30
and
shillings
data
per hour.
analytics. We,
And they
in
work
our
for
last
how many
lesson,
hours?
defined
5.
big
So
data.
30
In our today's
by 5
session, we're
must
going
be
to
100
describe the 5 V's of big data. The 5
Then we determine our
V's
contribution
of
per who?
big
Per unit.
data. And to remind
So the
you,
contribution per unit is
candidates,
the
big
difference
data,
between your selling price
as the name
and all your
suggests,
variable work
is
costs.
data that is
Let's
very
go to
large. Big data
Your selling
is
price
defined
per unit
as
ni ngapi?
very large data sets having large, varied,
cost is
and complex structure
900.
with difficulties of storing,
Variable overhead is what?
analyzing, and visualizing for further processes or
Your labor
results.
cost. in
So big
department
data
one,
is a
which was paid at
combination
20 shillings
of the
per hour, but
unstructured
worked for 4
data,
hours. So
the
20 by
semi-structured
50.
data, and the structured data.
Department 2, they worked for 2.5
Alright.
hours.
Big data is a
They worked
combination
for
of data that
2.5
is
hours,
unstructured,
but each
semi-structured,
hour is being paid
and
at how much?
structured.
40. So therefore, you will be paid how much? 100 shillings.
Unstructured, semi-structured,
Department 3,
and
they worked for
structured.
7 hours, and each hour is being paid at 30. So that
Do you understand?
will be paid how much? 10.
And big data
The other department
can
is
be
department
mined to gain insights,
the selling price 22.50,
leading to
material cost,
predictive modeling
variable overhead
and
cost,
other advanced analytics applications.
labor cost of 6 by 20.
Big data can also
120.
be used to improve operations. Big
Department
data can be
2,
used to provide customer
40
service.
hours per hour.
Big
and
data
4
can be used to
hours is
create
160.
personalized marketing campaigns. And all that
30 hours,
increases
30
value.
shillings per hour by 9 must be 270.
Okay?
Then we now get our country.
And as an
Difference
example,
between
big data
what?
can provide companies
Selling
with
price and all your
valuable
variable costs
insights
and
into
all
their
variable
customers
costs.
that can then
Okay.
be used to refine marketing
calculate
techniques
it
to
now.
increase
Let's
customer
calculate it.
engagement
Remember, we are
and
determining our
conversion
contribution per
rates.
per unit.
And organizations that
1200
use big data have
minus
a
300
potential competitive
minus
advantage
150
over those that don't have, since
minus
they make
60
faster and more
minus
informed
40
business decisions
minus
as
100
provided
what?
by the data.
The contribution per unit of X.
So in our today's lesson, we are going to describe the 5 V's of big data.
Minus 9.
So by the end of the lesson, we should be able to describe the 5
minus
V's of
80
big
minus
data.
100
And these V's
minus
also
200
help us to understand characteristics of big data.
200
The V's are 1.
250
Volume.
minus 600
2.
minus 450
Variety.
minus 120 minus 160 minus 270.
Velocity.
That must be 600.
4. Veracity.
Step number 2 is
5.
done. So let's go to step
Value. Value.
Step number 3.
Value.
We
Value.
are together.
5
We have
V's.
successfully determined
1
the
V,
contribution
2, 3, 4, 5.
The next
5
step,
V's.
the next step,
The first one is
dealing
volume.
with limiting factor.
Volume. Volume refers to
Your
the
contribution
quantity
per who?
of
Per
data.
limiting factor per
Volume refers to the quantity of data.
factor.
It refers to the amount of data that exists.
Determine contribution per limiting factor per
And volume is like the base of big data,
X.
as it is the initial size
Y.
and amount of data that a company can collect.
To determine the
And if
contribution
the
per
volume is
factor
large
per
enough,
unit,
it can be considered
we're going to take
big
the
data.
contribution.
But we know what is considered to be big data
You
is
divide
relative.
that by your limiting
What is
factor.
big data to company
And the
A may
limiting
be small
factor,
data to
remember we
company
said, is
B.
your labor who? hours.
and may
So
also
we're going to
change
divide
depending
this by
on the
labor who?
available computing power that's on the
Going to
market.
divide that by your labor what?
So volume refers to the quantity of data. Number 2,
Units
variety.
X
Variety.
Y.
Variety, on the other hand, refers to data types.
The contribution per
Types.
unit is as per step
Refers
2,
to data
500,
types.
310 and 650.
Because we have diverse
500.
types of data. We have diversity of data types.
And lastly, how much?
An organization may
600.
obtain data from a number of different data sources,
You
which
divide that
may vary in
by
value.
that by
Data
your
can
labor
be
hours per
obtained from
unit.
outside an enterprise,
That is
or
the
data can be
limiting
obtained
factor.
from within
Remember,
the
these labor
enterprise.
hours per unit were the limiting factor.
We
X
saw
is 1
earlier we
hour,
have
Y
unstructured
is
data,
2.5, Z is 4
which we know is data that is unorganized
hour per unit.
and comes in different files or
2.5 hours
formats,
per unit.
such as text,
Hours per who?
audio
Per unit.
data, we have
This
video
will
format,
give you
log files, and so on.
contribution
We have data that is semi-structured.
per labor hour per unit.
This is data that may not
hour.
have been properly organized into specialized repository, but it may have
by 1
associated information. And it makes it easier to process it as compared to the unstructured data.
divide by 2.5.
But structured data, meanwhile, is data
must
that has been organized into formatted repository,
6
meaning that such data
divide
is
by
made more addressable for effective data
Must be
processing and
162.
analysis.
Point
So there are various data types
62.
depending on data that is received from different sources.
We have determined
Data may
the
be in form of
contribution
text,
limiting
it may
factor
be verbal, it may be written,
simply
it may
doing
be
what?
in
By
video
taking the
format,
contribution,
data may be
you
in
divide
audio
by your
format,
limiting what?
data may be obtained
Remember
from
your limiting
without
factor was
the
the labor
organization,
what?
data can be
Hours,
obtained from within the
was
organization.
the labor
So this is a characteristic
fourth
of big data.
step. The fourth
And I've
step.
said data that it is structured is easier to process and analyze
Or
such
to
data
simply
as
be
compared to
known
data
as
that is
priority
unstructured.
ranks. When we say priority rank of product,
Then thirdly,
it is basically you
we
want to
have
identify
velocity as
of the
the
three
third
products you
V
want to
of
produce.
big data.
Which one will you produce
Velocity.
first? Which one will you produce second?
Now
Which one will
velocity
you produce
refers to the time that is
third and
taken
last one?
to process and
You want to
analyze
produce
data.
X, Y, and who?
It refers to how quickly data is generated and how quickly data moves
Here is normally
from
based
point A to point B.
on what? It is
And
based
velocity is an important aspect for companies that need data to move quickly.
by the maximum.
There may be need to have
or you
quick
consider
data
your
flow
maximum contribution
so that
per
such
limiting
data
factor.
is available
So once
at the
you
right time
determine
to make the best
contribution per
business
limiting factor,
decisions
you're going to
possible.
look at the one with the maximum what?
And an organization that uses big data will have large and continuous
Then
flow of
second
data
is
that
going to rank
is
it as
being
number
created
two, and so on and so forth.
and
Our
sent
contribution per limiting factor,
to different destinations.
which is your contribution per labor hour
All right? Big data being
per
generated quickly.
unit,
Big data being processed quickly
was how much?
or sent
Or
to
X,
different
124
destinations
for
for processing.
Y, and 162.5 for who?
And we say that data
Then you
could flow
do what?
from
Rank.
sources such as
According to the
machines,
contribution
such
per
as
unit
networks,
factor above,
such as
first rank should
smartphones.
be product.
Data can flow
One.
from sources such as social media,
One which
and
is
such
what?
data
X.
needs to be digested and analyzed quickly.
Product 1,
And at times, such data ought to be analyzed real time.
Z. Then product 3 is
And I can also say that it may be better
one
to
with
have
the highest
limited
contributing
set
per
of
limiting factor
collected
is X.
data
Then
than to collect
next
more
highest
data
is
that an organization can
Z.
handle.
Then the least highest is what?
Why? Because that
That
can
is
lead
step
to
number.
slower data
Step
velocities.
number 5 is now to determine
For what is the point
units
of having big
output
data
of each
that is
product
not
that you're going to do
analyzed
what? That
or
you're
that
going
is
to
not processed?
produce.
So it's rather you
Refer
have
to
a
as
limited
optimal
amount of data that can be
production.
processed, that can be digested, that can be quickly analyzed, if possible real time, because at times
production
information
what?
may be required,
So
decisions
here
may be
we
required to
want
be
to
made real
identify
time. Therefore, data has
according
to be
the
made
ranks
available
here,
for making
and
such
now that we only
decisions.
have 46,500 hours,
Velocity
how
refers
many
to
products of each product are we
how
going
quickly
to
data is generated
how many units of each
and
product
how quickly data
are we going
is
to produce. So you're going to
moved
start
or
here
flows from
by
point A
identifying
to point B.
the products
The fourth
according to the rank here.
V is
Then have
veracity.
your available limiting
Veracity.
factor, and we know what is the
Veracity
available
refers to
limiting
the
factor.
accuracy
The available
of
limiting
data.
factor is your labor who
The accuracy
hours,
of data, the
hours
correctness
of the
of
limiting
data,
factor.
the quality of data
Then you require
that is gathered. So gathered data could have sometimes missing
labor
pieces.
hours, which is now your
Data gathered could also be inaccurate,
limiting factor. Then lastly,
and it may also not be able to provide real valuable insight.
and your output is in what? Units.
So veracity refers to the level
In
of trust that a leader has in the collected
the
data.
first product we want to produce,
Because you know sometimes data can be messy.
so here
Data can be messy, data can be difficult to use.
the
And a
available
large
hours
amount of data
that
can cause
organization
more
currently
confusion
have
than insights,
is 46,500 hours,
especially if such data is not
46,500
complete.
hours.
So
For you to
veracity
produce product
refers to
X,
accuracy, refers to the quality, refers
required
to
labor
the
hours,
trust
yeah,
that
how
the
many
leader
hours?
has in the information
12,500,
that is gathered.
500.
The correctness of data. So data that has missing,
And then now we need to identify our who.
that is not accurate, that is data
But remember
that cannot be
that
relied upon in making
X,
decisions.
for you to
So
produce a single unit,
veracity
you
is
are
a
using how
very
many hours?
important
1 hour.
feature of
So
big
if you
data.
have 12,500 labor hours, how many units are you going to do what? To
Then we have value.
produce. So what will you do?
Value.
Simply going to take your required hours,
Value
1,500,
refers to
divide by the
the
labor
value
hours
that
per unit.
big
In this
data
case
can
was how
provide.
much? 1.
The added value
So
that
at the
big
end
data
of
can
each
provide,
you will need
and
to
it relates
produce
directly to what
12,500
organizations can do with the collected data.
12,500 units. The next product according to our rank is product who?
Because big data is only relevant or important if
Z.
it has value.
Now your available hours will have to do what? To change. Why? Before
Being able to
production of
pull
X,
value from big data
6,500
is a
labor
requirement.
hours, but you have used how many labor
As
hours?
the value of big data increases
12,500.
significantly depending
So for you
on
to
the
produce Z,
insights that can be gained from them.
and why you only have how many labor hours now available?
So it's not enough to have big data.
34.
It's not enough to just gather data and have data. The question is
Simply 46
such data
500
valuable
minus
to the organization?
500.
And organizations can use
Forward.
the same big data
Then we
tools
ask ourselves, for us to
to
produce
gather
Z,
and
how
analyze
many labor
the data,
hours do we
but how they
require?
derive
How many
value
labor hours of Z?
from that data
32,000.
should be unique
Here,
to
I'm
them.
going to write how many hours? 32,000. Then let's
All right.
identify.
So here data
units we want
refers to
do
the
what? Produce
quality of
who?
data.
Z. For you to produce a single unit of Z, You
the
require how
value.
many
This
hours?
we said
4 hours per
refers to
unit
the
here.
quality of data.
If you currently have
This is
32,000
value
labor hours, how many units
added.
are you going to use to produce? So you'll take that.
Veracity refers to the quality of
by
data.
4.
The quality of
how many
data.
units?
The accuracy of data.
8,000.
So, candidates, these are the 5 V's of big data. 5 V's of big data. The first V, volume.
Why? Because it is the one that was ranked
Volume.
number.
The second V, variety. The third V,
for you,
velocity.
Before you
The
produced
fourth
them,
V,
you had 34,000
veracity.
hours, but you
Then
have
lastly,
32,000. So
value.
therefore, how many hours are remaining?
We've said volume refers to the
For
quantity.
you to produce Y, you
The
require
amount
how
of
many
data.
hours? 18,750.
Variety refers to the data
Now that
types,
you don't have
which could be
18,750, how
unstructured,
many hours are you going to
semi-structured,
use? 2,000.
or
Remember,
structured.
you can only use what you
We
have.
say that data comes in different
here,
types,
even if you
could be
you
in
require
different formats,
18,750
audio
hours
format,
to
text
produce
format,
Y,
video format,
what do you currently have
log
available?
files,
2,000.
and so on.
These 2,000 labor hours are
Velocity
the ones
refers to
you're
the
going
time
use
that
to
the organization takes to generate big data
a certain
and
number
to
of
process
units
or
of
analyze big data.
Y. And how many units are you going
Veracity,
to use?
on the other
You're going
hand,
to take your
refers
hours
to the accuracy
required,
or
2,000
quality
hours,
of
then you
big
divide that
data.
by how many
Veracity.
hours each unit is producing.
Then lastly, value,
For Z,
which
for Y, which
we've
is how
said
much? 2
refers to the value that big data can
divide
provide.
this by 2.
We've said that it relates directly to what organizations can do with the data that is collected. We said collecting data is not enough. What is important is what value do you derive from the data that has been collected?
800.
And that brings the lesson to an end. The objective of this lesson was that by the end of this lesson, you, the learner, should be able to describe the 5 V's of big data, and that will form the basis of our today's assignment.
We'll utilize our contribute.
Describe the 5 V's of big data. Thank you for attending this lesson. I hope to meet you in our next lesson. We'll continue to share knowledge in business and data analytics. Thank you. God bless you. Bye.
Now, your profit here, we know, is given how? How do you determine your profit? Your profit is determined by taking P minus V. You multiply by the units.
If you have gotten
minus your what? Fixed costs. Minus your fixed cost. But remember, P minus V is your contribution what? Margin. You multiply by your units minus your fixed cost. Minus your fixed cost.
The heading, I think here.
So let's determine our contribution.
Insert the title. New Day Motors,
our contribution,
September
which you know it
import.
is your
So
contribution margin. You
here.
multiply by your units. But now,
we have the cost.
These units here, we are going to use the optimal what? Output units. Because they are asking us for the optimal profit. Therefore, the optimal output units here are the ones we are going to multiply by the contribution of each product to determine our total contribution. To determine our total contribution. How is that we're going to do? Let's start with
we had not discussed this before, but I'm sure probably there's someone amongst us who will know how to do this.
Product X, your contribution margin of X is how much? 500 per unit.
Option. So just click that, you get a new row.
You multiply that by the units of X that are optimal. And the units of X that are optimal is how much? 12,500. So you multiply here by who?
What we want to do is insert that heading. Let's see.
The next product is who? Y. And Y, your contribution margin is how much? 310. Then 310, you multiply by your who? Optimal output, which is 800. 100
Format this,
here.
we will, of course,
So what?
highlight it, then
310
go to the home tab and click on
by
bold. Then they
800.
want it size 30, we change that
The
here.
next product is who?
Sometimes you will
Z.
find that the size you want to put is not listed. Like
Your
size
contribution
30
per
is
unit
one.
is
So what do we do?
650.
Just type it
You
directly.
multiply by the
Get a size
optimal
30.
output of Z of 8000.
So that's size 30.
So
Then they
650.
want the cells merged.
You multiply
in the
by who?
range A1 to G1. Right?
8,000.
You
You
can
multiply
see
by
this
8.
font is already quite big.
1,000.
Maybe I should adjust
So let's
the
determine
size.
that.
So let's see.
500
this
by
to merge the
12,500.
title, to merge the
That should be
cells. You highlight
6250.
the range from A1 to H1. Then I will go to the home tab and click on this merge
10
and center.
by
So it
800.
merges it within that range. The only issue right now
240,000.
is that it doesn't fit, so I can adjust a bit. What I've done is drag this
650
the whole of the
by
title
8,000.
shows. Okay, I hope we're together up to that point. So that is formatting. Let's
We
see.
now get the
There's
total,
one more formatting here. We're supposed to
6250,000
apply
plus
visible
248,000 plus
borders on the spreadsheet. We want
5,200.
some visible borders. So this part is going to be visible. So to apply borders,
11,
highlight the whole range where you want to
6,
apply the borders.
8.
Then you can again use the home tab and borders
This
again.
will give you your
So
total
there is this font group, this
contribution.
ribbon, font group, borders, and click on borders, and you have borders.
But then we need to subtract
clear.
our who?
So
Fixed
let's
costs.
try do some calculations now. We are applying some of what we have been learning. And this is where I want to get some
Your
interactivity
fixed
out of you.
cost. And how much was your fixed
We have been
cost?
told to calculate
Your
the duty.
fixed cost
The duty, the rate for the duty is
was given by
40%
note
for
number
cars
3,
that
and your
cost,
fixed cost by note number 3 is saying
$5,000
fixed
US
overheads are
and below,
budgeted to remain at
and
how much?
55% for the rest.
Constant
That
value
means
of
for
5
vehicles that cost
million.
above
So we are going to
5,000,
subtract 5 who?
the duty is higher. It's 55%. So if
So
anyone can
hapo
recall
here
from our
your net
discussions,
profit,
what do we need to do
your
here?
net
What will we be using a formula
profit,
or a function? And if it's a
your
function,
net
what function
profit
should we
will
use?
be how much?
Okay, let me review this one for you.
6.
Now we talked about the
98.
if function. The if function is a conditional function. Remember here the condition
So
is
for
the duty
your
changes
optimal
according to
profit,
the amount, the cost of the vehicle. So if the vehicle is above 5,000
is how
USD,
much?
duty is this. If not, it is
66.98
this other one.
what?
So it just sounds like an English sentence. So
6898
we have
thousand.
equals.
6898.
Start at the if function. If
That is how we
then
deal
we'll
with
click
limiting
this.
what? Factor with
It should
limiting.
read like an English
Now,
sentence.
in
If
case they had asked
the cost
us,
is
let me just
above
highlight this.
equal
In case they had
to
asked
5,000.
us for your maximum profit,
So if the cost is
sometimes
above
they may also
equal
ask
to
for your
5,000,
maximum profit.
then what happens?
In case they ask for the maximum
So we have
profit,
to have
yeah,
a then clause.
you're
This
going
is
to
called the
determine
condition.
your
If that
maximum
condition
profit
is
here
true, then
by taking your
we have started with a
contribution
greater
margin
actually,
or your contribution
because here it says 5,000 and below, so we need to change this
CM
to
by your units of Q.
less
But
than
now
or equal
these
to. And
units
notice the
here
order
are
of these
Q
symbols.
are
You
the
have to start
units
with
that
the less than
correspond
sign
to
followed
maximum
by
what?
the equal sign.
Sales or
Sometimes
maximum what?
students mix them up. You
Output.
start with equal,
So these
then
Q units
less
here,
than, and it doesn't
sorry,
work. So you put them
should
in
be
the order
what
in which you
units?
say
Your maximum
less than or
units
5,000.
sold.
Then the
Your
duty is
maximum what?
40%. If you
Sales
recall
demand.
from our last lesson,
Yeah.
I remember we did a bit of a function.
And the
You
optimal
have to say
production
40%
mix,
of what?
when they
If I
ask for
just wrote
optimal
40%,
profit, I hope you've realized,
then
and I know you've noticed,
I'll
that
get the wrong
these
answer.
units are the
Or
optimal
rather, I'll
units.
just get 0.4 because 40%
Optimal
is 40
units
out of 100.
produced.
I need to say 40% of what?
Here.
40%
And these are these
of
units here.
cost.
But now,
Okay.
when they
So the
say
duty
what?
is 40%
Determine
of
maximum
cost.
profit, your
Else,
contribution will be
so
a product
if
of your
this
contribution
value
margin.
does not
But
meet
now the
the
units are
condition,
the maximum
volume
available
doesn't
what?
meet
Sales.
that condition,
Let me even use this
then
question to
the
show you
duty
how,
is
what I mean by that.
5%
We can start with X.
of
No changes
cost.
to the contribution margin,
Very
500.
important.
Then your maximum sales demand, your
Some
maximum
cases
sales
where
demand was given by
student will work
additional
out
information
this,
number
the
who?
40%
Number
will not
4,
meet the value.
where
Let's just
X,
see what
your
will happen.
maximum sales is
If you input
12,500.
40% of what
Y,
you're trying to get, you
your
get
contribution
this.
margin
Then
is
you
what?
wonder,
310.
what is the formula that
With the maximum sales demand of who?
because you've not said 40%
7,500.
or 55% of what.
Z
So you can use this to actually
is
also check what
650.
rates are being used for the duty.
With a
Anything
maximum
above
sales demand of how
5,000,
much?
you see it is 0.55.
8,000.
This one is 0.55, which is
8,000.
55%. So we need to specify.
So let's calculate this.
or
Let us calculate this.
cost. That is how we do it.
500 by
Remember,
12,500.
times about
That
clicking
is
on
6250.
the options rather than typing them. Then when you click, that is when you're able to out of feel
310
that. You can
by
also try the next one.
7,500.
Shipping is again
23.
straightforward. It is 15%
25,000.
cost for all vehicles. So that one should be a straightforward calculation. Equals
650 by that is
15%.
5.2 million.
Okay, we said you use a percent sign. The percent sign is shift and
Your
5.
total contribution.
There are those people who will do 15 over 100 times the cost, which will still work, but there's no need to do that when you have the
6250
percent sign. So
plus
the tools that are available
2325 plus 5.2.
of the shipping or rather the
13,
cost. Then we drag this down,
775.
and then we have the shipping cost.
Then you less
right?
the fixed
Then the
cost.
total cost, as you would guess, will be the sum of all this.
And your fixed cost, remember,
so
do not change with
how do I get the
output.
total here using
So therefore,
one function that we have
they will
learned
be how
so
much?
far.
They'll remain a constant of
So
5
select
million.
everything, including the cell where you want the solution. Then we can click on this auto sum sign. In fact, you can do all of them at the same time. So if I undid that and did this,
Your net
then click on the auto sum, then you get
profit
the answers.
is
Correct.
87.75.
It shows we are learning. Okay. So what we want to do is, so we have answered all that, we've calculated the total cost. What we want to do is also fill out this section here. We want to do a bit of analysis. Okay. So this analysis,
profit is
I
how
want
much?
to get the number
75
based on every make.
87.75.
Okay, so I want to get, say,
that
the number of Subarus,
is
the number
how
of
we deal with limiting what? Factor. With
Toyotas and so forth. So there are different types of cars here. So I want to use the make field and get the number. So what I actually need to do here is to adjust this.
Done with limiting factor, or we have covered the limiting factor successfully and exhausted that. In the next session, I want us to cover throughput.
I can move this around.
Counting, throughput analysis. And throughput analysis is very, very close to limiting what? Is very, very close. So they are more or less related. Still, you want to determine the number of units that you want to produce, and you don't have enough what? Resources. Right. So thank you. See you next time.
So that one is getting the number based on the make.
Welcome to Manifested Publishers. My name is Mr. Mariga, and I'll be teaching you advanced management accounting. Today, I want us to discuss on the concept of short-term planning and decision making, specifically one of the applications of marginal costing, which is make or buy decisions. Now, Make or buy decisions are those decisions that are made by the management of a company when the company or when that company is faced with two decisions. Number one, either they will make a component internally, make a product internally. So this basically means that the company is what? Manufacturing their own goods. Manufacturing their own goods or what? Products. And when they manufacture, they will incur all variable what? Costs. So they must incur variable who? Costs. Variable cost of what? Direct materials, variable cost of direct labor, variable cost of direct expenses, and variable cost of fixed who? Overheads. The second option is the decision to buy a what? A product. When they are buying a product here, it basically means that what are they doing? They are outsourcing a finished product. They are outsourcing a finished who? Product or component. And when they outsource that finished good, it basically means that they are not going to incur the cost of production unless there is something else they will increase to it, but instead they are going to incur a buying cost. A buying cost. The cost of buying that product from a who? A supplier. Okay? In most cases, when you outsource, the only cost you incur is a buying cost. But however, you may find that you're buying a product, yes, but you need also to manufacture it further. So you may also find yourself doing what? Incurring what? Additional production cost. You may also find yourself in these decisions of make or buy that your fixed overheads are being done what? Affected. But the fixed overheads that are normally affected here are the specific fixed overheads. So in these decisions, the specific overheads, the specific fixed overheads or incremental fixed overheads or fixed costs will need to be analyzed. Will need to be analyzed and carefully done what? Analyzed. What are incremental or specific fixed overheads? They are those fixed overhead costs that are incurred as a result of the decision that is made. They are incurred as a result of a decision that is made, and therefore they change with a decision. So these ones here change with decision made. These ones change with the decision what? Made. You may incur them when you make a product, but when you buy it, you don't incur them. You may also find yourself incurring when you buy that product, but when you make that product, you do not do what? Incur them. Okay? So we say you'll analyze all the what? The costs that are relevant for decision making. That are relevant for decision making. And what costs are those? All the variable costs, fixed overheads, and the buying cost when you buy a certain what? Product. Okay? Now with that in mind, I want us to do a question of May 2021. May 2021. Question 3A. Question 3A.
But this range
May 2021
to C14. So it
question
has from
3A.
here to here.
All right. Question
Here
3A.
and it can't find any
The saying,
right, and you'll even get a
Ulanda Limited is a manufacturing company based in the western part of the country.
While we are still here,
It has two divisions. One of the divisions within Ulanda Limited is currently negotiating with other suppliers regarding outsourcing a component A that it manufactures. The division currently manufactures 10,000 units of the component per annum. You have the total cost of producing the 10,000 components. Material Z is 1,200 at a unit cost of 120. Direct labor is 1 million at a unit cost of 100. Variable manufacturing overhead cost is the total cost of 100,000 with a unit cost of 10. Fixed manufacturing overhead cost, the total cost is 800,000 with a unit cost of 80. Share of non-manufacturing overheads is 500,000 and the unit cost of how much? 50. The total cost of producing the 10,000 components is 3.6 million. The unit cost of one unit is 360. Additional information number 1. The above costs are expected to remain unchanged in the foreseeable future if Ulanda's division continues to manufacture the what? The components. The supplier has offered to supply 10,000 components per annum at a price of 300 shillings per unit, guaranteed for a minimum of 3 years. If Ulanda outsources component A, the direct labor force currently employed in producing the components will be made redundant. No redundancy cost will be incurred. Direct materials and variable overheads are avoidable if component A is outsourced.
I can still use a range.
Fixed manufacturing overheads would be reduced by 100,000 per annum, but non-manufacturing cost would remain unchanged. Assume initially that the capacity that is required for this component has no alternative use, required. Advise the management of Ulanda Limited on whether the component should be bought or made. So part 1 of that question is saying we analyze whether we should make the component. Advice
on across like that, then I will be able to feel directly. So because this is referring to
component
L14 now, so that
A
L14 where Subaru is
should be made
I can
or
feel
bought.
this. And you see the numbers.
So this is a case of make or buy
this one has
decisions.
Subaru.
Let's analyze this.
To the next one,
We'll have our analysis here.
Toyota.
The first option is when you make, and when you do what, and when you buy. When you make and when you buy.
Nissan. So that's one way to do
right.
Unless this is, I don't think it's very confusing. Sometimes it saves you a few
when you make, you expect to incur a cost of direct materials. And the material cost is known as what? Z.
Give you the same result. Right?
The material cost of Z will be how much?
Let's try to apply the
120.
same
120. But when you buy that component A, you're buying a finished good, so you're not going to incur the material cost. So here will be 0. Zero. The other cost will be the cost of labor. So we say direct labor. And direct labor, they are saying,
this time I'm using this range.
Note number 3,
then I'll press
if Ulanda Limited outsources component A, the direct labor force currently employed in producing the components will be made redundant. No redundancy cost will be incurred. So the labor cost can only be incurred when you make that component, and when we make it, the cost of labor is 100. But when we buy that product, we will not incur the cost of what? Labor, because the cost of labor is a production cost that is only incurred when you produce. And there is also no redundancy cost, so that will be 0. In case there was a redundancy cost as a result of buying, we would have added it to the cost of buying, or that will be the cost of labor for buying.
3. In the next category is sedan.
The other cost is the cost of variable manufacturing overheads. Variable manufacturing overheads.
SUV
And your variable manufacturing overheads, those are production costs,
So we have
which will
used
be
the count
incurred when you
formula.
make.
Remember, we have used
How
that
much?
formula in
10.
very
When
many
you
different
buy, you
scenarios.
not incur them.
Point
When you
is
buy, you'll not incur them.
presented with different scenarios. You should be able to
Then
choose the
let's talk
correct
about
function
fixed
and
manufacturing.
apply it. Okay, so what we have done so far is we've kind of gone
The
around
fixed
the same
manufacturing
functions
is given by note
in
number
different
5,
scenarios,
where they're
to just
saying
make sure that
fixed manufacturing overheads would be reduced by 100,000 per annum,
Okay.
but
So let's talk
non-manufacturing
about
costs would
average
remain
cost.
the same.
We want to
So
get
if you make
average
this
cost of
component,
buying it.
if you make this component,
cost of a
the
Subaru,
fixed manufacturing cost per
cost of a
unit
Toyota,
is
the average cost of
80.
Volkswagen and so forth, the
But
average
when you
cost of
buy
a
that
Subaru,
component,
the average
when you
cost of
buy
US,
that component, the
average
cost that is fixed in nature is going to reduce by 100,000 per annum.
So average
Therefore,
then we have a
your new
criteria.
manufacturing
We want
cost
to get the
that is
average
fixed in nature,
cost.
you're going to
So we
take
use this dot cost. So
800,000
where are we looking for Subaru? We select
minus
range,
the drop in that
then lock
cost.
it. So not go
You
to
divide by
what
how
we
many
do.
components are you
Then
making?
what is the criteria we are
10,000
looking for a
components.
Subaru?
That means your new
So
manufacturing buying
this
cost
Let me lock that Subaru.
will include fixed manufacturing overhead cost of how much? 70. So your new manufacturing overhead cost of buying is 70 because of the drop in the components, because in the drop of 100,000 of the fixed manufacturing overheads. Then you have a share of non-manufacturing.
Average cost.
Non-manufacturing.
It looks like a very long formula, especially when you have the absolute signs.
The non-manufacturing overheads, we are told, they would remain what? Unchanged. The non-manufacturing overheads will remain unchanged. So if they remain unchanged, you can simply ignore them. They were 50 per unit, so you can simply ignore them, or you even indicate them. The choice is yours, but they will not change our what? Our decision. Whether you write here 50 or you write here what? 50, our decision will not do what? Change.
So this is where
but now
the value that it is working.
There is an extra cost of buying.
So there's
Buying price.
This is a function.
There is an extra cost we must incur when we buy that component. And note number 2, the supplier is willing to supply at a price of how much? 300. 300. So therefore, your relevant costs. You now get our relevant costs. This is 370. This is 370. $120 plus 100 plus 10 plus 80. That will have a relevant cost of how much? 310. That's your relevant what? Costs. Then after we've determined now the cost we will incur, we then need to advise. So our advice. The advice we will give here will be the one that corresponds to the minimum cost. And I can see the minimum cost is the cost of making that component. So you will advise them to make component make component A. Why? Because it is cheaper. Remember class, as a decision maker, you want to minimize the costs incurred and to maximize your what? Revenues. So you minimize your cost, maximize your revenues. All right. Let's go to the second part of that question. Second part of that question, where they're saying, but 2, assume now that the extra capacity that will be made available from outsourcing component A can be used to manufacture and sell 10,000 units of component B at a price of 340 per unit. All of the labor force required to manufacture component A will be used to make component B. The variable manufacturing overheads, fixed manufacturing overheads, and non-manufacturing overheads will be the same as the cost incurred for manufacturing component A. Materials required to manufacture component A would not be required, but additional material Y required for making component B would cost 130 required. Assess whether the division of Ulanda should outsource component A. All right. So let's analyze here. Our option again, here now, what do you want? You want to either make component A, that is the first decision, or you buy component A but make component B with the spare capacity. With the spare what? Capacity as a result of buying component what? A. Okay, so let's start with the first option. When we make A, when we make A. When we make A, we have already analyzed it. It is here. You must incur the cost of direct materials, and our material cost was for Z, which is how much? 120. Direct labor is how much? 100. Variable manufacturing overheads is how much? 10. Your fixed manufacturing overheads, they're saying as far as fixed manufacturing overheads are concerned, will be the same as the cost incurred for manufacturing component A. This is, so we can ignore them, but let's just indicate them there. Then non-manufacturing overheads, they are the same. Can choose to ignore. Let's just ignore them. They are not going to change our decision. They are not going to change our decision whether we make or not. That is that. They will not change our decision. Okay, let's go to the second option. We buy. What's the buying price here? There. We buy what? A, and make component and make component B, and make component B. The first cost we will incur is the cost of direct materials. We must incur material cost, but in this case, what material cost are you using? They're saying the material Z required to manufacture component A would not be required, but additional material Y. So here you're buying Y. For making component B at a cost of how much? 130. And then we will also incur direct what? Labor. We will need to incur direct labor costs, and the saying all the labor cost required to manufacture A will be used to make B, and the labor cost was how much per unit? 100. Then your variable manufacturing overheads are the same. variable manufacturing overheads, the thing will remain the same. So you can even ignore. That is also true for your fixed manufacturing overheads. They are remaining the same. Whether you make A only or whether you make B, they are remaining the same. So we can ignore them. They are not going to affect our decision. They are not going to affect our decision at all. They are irrelevant for decision making. We normally say they are irrelevant for decision making. But now, we have to buy component what? A. Why? For the only way we can make component B is when we buy A. So when we buy A, there is a cost we will have to do what? To incur. And what was the buying cost? The buying cost of A was 300. That is not going to be incurred. So buying price 300. So that now we determine our total relevant costs. Our total relevant costs, that is 200 and 30. Then let's get these costs. 130 plus 100 is 230 plus 10 240 plus 300 500 and what? 40. That is your relevant what? Costs. But this particular component, what? B, can be sold. And when it is sold, it will generate a revenue to the to the organization. Therefore, it will effectively reduce the relevant cost here. So let us less our our selling price of of B. When you sell component B, you're going to sell it at 340. So therefore, your net costs, so your net relevant costs, is how much? 200. Once we have determined our relevant cost, let's then do what? Advise that company. Let's advise that company. Okay. Now, when we make component A only, we are going to incur cost of 230 as our relevant cost. When we buy A at 300 but make and sell component B, our relevant cost is how much? 200. So what will we do? We are going to tell them buy what? A, and you make component what? You make component B. You buy A and make component B. Right. That is what we refer to as make or buy decisions, where a company is faced with the decision to either manufacture a component itself or to buy a component or a product from outside suppliers. Okay. There are certain factors we consider. Factors considered in decision making. In decision what? Making. What are some of the factors you want to consider? The first factor there is the effect on selling price, effect on current selling price, in case you have a special what? In case you have a special offer. Number 2 is the effect on fixed cost or fixed overheads. Effect on fixed overhead costs. The decision you make, is it going to affect your fixed overhead costs? Number 3, any legal obligations you may have. Obligations and contracts. And contracts that you may have. Are they going to affect your production? And number 4 is alternative use of spare capacity. Use of spare capacity. If you don't produce a product, that spare capacity, what will you do with it? Then the quality of product to be outsourced. Product to be outsourced. Is it of the required standard, or is it acceptable to the what? To the management? Then you also need guarantee of long-term supply. Guarantee of long-term what? Supply. Where you don't want to buy a component today, then after a few days, when you want to buy again, they tell you they don't have that component. So when you decide to buy from a supplier, you expect that they will be able to handle your order in the long term. So these are some of the factors you consider when you're making what? Decisions. All right. And that means we have come to the end of our topic 3, which is planning and decision making techniques. Planning and decision making techniques, where we talked about cost, volume, profit analysis. We also talked about the various decision making environments under risk and uncertainty. We also talked about the expected value of perfect information, and we have finalized by talking about applications of marginal costing. Applications of marginal costing. All right. So without further ado, I wish you all the best, and goodbye.
Hello and welcome back to the lesson. The subject is finance for decision making. We continue with the topic budgeting and budgetary control. In our last session, we discussed the nature and purpose of budgets. Today we are going to discuss the limitations of budgeting, and we saw that while we can now say that while budgeting is essential for financial planning and control, it may also have drawbacks. It has its own drawbacks, which we are calling limitations of budgeting. And these limitations can be categorized into issues like inflexibility, behavioral problems, technical difficulties, and so on. That is our focus for our today's lesson. We're going to discuss the limitations of budgeting. And the first limitation is in relation to inflexibility. Inflexibility and rigidity, from the word rigid. Okay. It may be difficult in adapting to change after preparing a budget. Difficulty adapting. It may be difficult to adapt to change after a budget has been drafted. Budgets are typically prepared for a period. It could be 1 year, it could be a month, and so on. And if economic conditions or market demands or technology or even government policy changes within that period, a static budget can then become obsolete and lead to poor decision making or even missed opportunities. That's what we mean by inflexibility. Budgets also encourages short-term focus. Short-term focus. Managers may concentrate only on meeting the current year's budget targets, potentially neglecting important long-term strategic goals such as new product development, maintenance, and even staff training. And they may do that in order to cut on costs and so on. So that is one drawback. There are also behavioral and human factors. Behavioral and human factors as limitations of budget. Behavioral factors It could be budgetary slack. This could be budgetary. It could be budgetary slack. What do we mean by budgetary slack? Now, managers may deliberately overestimate expenses or underestimate revenues to create an easier target which they can achieve, or easier target to hit. Okay, and this slack provides a cushion against poor performance and ensures favorable variances, but it results in an inefficient allocation of resources for the company as a whole. That is a behavioral and human factor. There is also the spend it or lose it mentality. Spend it or lose it mentality. That is another disadvantage. Near the end of the budget period, a department with the unspent funds may rush to spend it on unnecessary items, for example, buying new furniture or just excessive supplies. And the manager may fear that an underspent budget will lead to a lower allocation in the next period. That mainly happens towards the end of the financial year, when the manager discovers that they have money that has not been spent throughout the accounting period. That is one disadvantage. It may also lead to departmental conflict or rivalry. Departmental rivalry. Departmental conflict, rivalry. Okay? Departmental rivalry. Now, the process of allocating limited resources can lead to intense competition and conflict between different departments, which may damage interdepartmental collaboration, and it may also determine the overall organizational harmony. That is a human or departmental factor as a limitation of. There is a point on demotivation as a behavioral and human factor. This is demotivation from imposed or from unrealistic targets. Okay, if a budget is imposed on a lower level managers without their input, or if the targets are too high or too tight and are perceived as unattainable, that can lead to frustration. It can lower morale and also lack of commitment to achieve such high goals. Demotivation. Do you understand? Another category of limitation is technical and practical difficulties. Technical and practical difficulties. How is that a limitation? Now, budgets rely heavily on forecasts for future conditions. And if these underlying assumptions are inaccurate, the entire budget becomes unreliable as a tool for planning and control. Okay? So that is a limitation which is based on estimates. Based on estimates or assumptions. Budgets are futuristic. Budgets are projections. They rely heavily on forecasts of future conditions like sales, costs, prices, and so on. And if these underlying assumptions are not accurate, then the entire budget becomes not unreliable for planning and also for the purposes of control. 2, time-consuming and costly. Budgets can be time-consuming and costly. The process of preparing, coordinating, and also revising budgets, especially in large and complex organizations, can be a highly time-intensive and expensive exercise, which consumes significant management time. It may also consume significant effort. The budgets also focus on financial aspects only. Focus on financial aspects only. Budgets focus on financial aspects only. That is a limitation. Traditional budgeting primarily focuses on financial outcomes like revenues and costs and may overlook critical non-financial or qualitative factors like customer satisfaction, product quality, employee morale, things like innovation, which are crucial for long-term success. Then lastly, we have preparation, or let me just say inefficiencies. We have inefficiencies, perpetuation of inefficiencies, perpetuation inefficiencies, perpetuation of inefficiencies. Now, if a company uses an incremental budgeting approach, which is based on the new budget, that means basing the new budget on the previous one, because sometimes the current year's budget may be based on the previous year's budget. That's what we call incremental budgeting. If that happens, then any inefficiencies or waste built into the prior budget will be carried upon or carried forward and perpetuated in the subsequent budgets. So there could be perpetuation of inefficiencies, especially where we have incremental budgeting. This happens in case of incremental budgeting. So candidates, these are the limitations of budgeting. We have categorized the limitations into 3: inflexibility and rigidity, behavioral and human factors. Then we have technical and practical difficulties. And that's the end of our today's lesson. Thank you. In our next session, we continue to discuss more in relation to budgeting and budgetary control. Bye-bye. Hello and welcome back to the lesson. Today we are going to discuss mergers and acquisitions in the Kenyan, regional and global context. Mergers and acquisitions in the context, in the Kenyan, regional and global context. Those are 3 things. First, we have the Kenyan context. And Kenya candidates has seen a rise in mergers and acquisitions, which are driven by various factors like economic growth, like market consolidation. And one reason for mergers and acquisitions is increased foreign investment. You understand? Kenyan context. Let's first briefly analyze mergers and acquisition in the Kenyan context. Here in Kenya, we've seen companies merging, we've seen companies acquiring others, and the reason has been because of the economic growth in the country, because of market consolidation. We've had also increase in foreign investments. And there has been mergers and acquisitions in various sectors, various industries. We've seen banks merging, that is the finance sector. We have telecommunications, we have areas to do with the consumer goods and so on. So one reason for the mergers and acquisitions in the Kenyan context is a growing market, because market has been growing. Growth in the general market. Now, in trying to understand mergers and acquisitions in the Kenyan context, you may also need to look at the regulatory framework. The regulatory framework, for example, we have the Competition Authority of Kenya, which plays a crucial role in ensuring fair competition. We also have other regulatory bodies such as the Capital Markets Authority, the Central Bank, and so on. These bodies oversee mergers and acquisitions in the respective sectors. So again, we have regulatory framework. Kenya has put in place regulatory framework that oversee mergers and acquisitions. That's why we've had successful mergers and acquisitions in the Kenyan context. In understanding mergers and acquisitions in the Kenyan context, you may also have to maybe discuss something to do with strategic drivers. Companies pursue mergers and acquisitions to expand their market share, to diversify their operations, and also gain access to new technologies. All right, we have strategic drivers, which I've mentioned. Strategic drivers. Mergers and acquisitions are driven by certain factors. You understand? Mergers and acquisitions in the Kenyan context. Then you have regional context. Mergers and acquisitions in the regional context. And regional context, here we are referring to the East African integration or community. The East Africa community promotes regional integration, leading to increased cross-border mergers and acquisition activities. And Kenyan companies are actively expanding into neighboring countries, and also companies in neighboring countries are also expanding their operations into the Kenyan market. So we have the East Africa integration, East Africa community. We also have COMESA, the common market for Eastern and Southern Africa. COMESA also influences mergers and acquisition activities. COMESA also has regulations that apply to transactions in multiple member states. You understand? Then we have also regional banking expansion. Kenyan banks have been particularly active in regional expansion through mergers and acquisitions. An effort which seeks to tap into the larger Eastern African market. Global context, mergers and acquisitions in global context. Mergers and acquisitions in global context. These mergers are influenced by global trends. Global trends. Global trends. What do we mean by global trends? Now, the global mergers and acquisition trends influence activities in Kenya and even the region. Factors like technological advancements. We have factors like the economic conditions, the geopolitical events. Such factors play a significant role in mergers and acquisitions in a global context. You understand? So global trends are influenced by technological factors, technological advancements. We have factors like the geopolitical events, the geopolitical events which influence mergers and acquisitions in the global context. Economic conditions also play a crucial role. Global economic conditions. Global economic conditions. You understand? So, apart from what we've discussed, we also have cross-border deals. All right? Cross-border deals. Kenya is increasingly involved in cross-border mergers and acquisitions
both foreign companies acquiring Kenyan businesses and Kenyan companies acquiring foreign businesses. I've talked about also the technological influences. We have global technological advancements which are driving mergers and acquisition activities. Companies are merging to gain access to new technologies and also digital platforms. So do you understand, candidates? So that's what we can say about mergers and acquisitions in the Kenyan, regional, and global context. Kenyan, regional, and global context. In this lesson, we've learned that Kenya has seen a rise in mergers and acquisition activities, which are driven by many factors. I've mentioned growing market. Kenya has put in place regulatory framework. We also have certain other strategic drivers where companies pursue mergers to expand market share, to diversify their operations, and also to gain access to new technologies. We've gone ahead to discuss mergers and acquisitions in the regional context. In the regional context, here we are referring to the East Africa Community or East Africa Integration. The East Africa Integration and COMESA. Right? The East Africa Community we know promotes regional integration, which to some extent has led to increase in cross-border mergers and acquisition. We have Kenyan companies now operating in Rwanda, others are operating in Uganda. We have banks that have opened branches in Tanzania, and so on. Then we have COMESA also, which promotes regional integration. COMESA, the Common Market for Eastern and Southern Africa. It influences mergers and acquisitions. COMESA has regulations that apply to transactions involving multiple member states. We've seen Kenyan banks which have been particularly very active in regional expansion through mergers and acquisitions. You understand? Then you have the mergers and acquisitions in the global context. Global context, we have global trends, which influence activities in Kenya and even the region. Due to factors like technological advancements, we have geopolitical events and economic conditions. All these influence mergers and acquisitions. So candidates, that marks the end of today's lesson. We've briefly discussed mergers and acquisitions in the Kenyan, regional, and global context. Thank you. I'll meet you in another lesson where we continue to share knowledge in advanced financial management. Bye-bye.
Hello and welcome to the Manifested e-learning platform. Today we are going to work out an illustrative example on CVP analysis. The example is from the KASNEB past papers. This is the sitting that was done in August 2024. Question 3 has 3 parts, A, B, and C. Part C is the part that we are interested in, but for the sake of revision, we will still solve or answer question A and B. Question A of the question reads, explain the following theories of valuation. 1. Technical theory, 2 marks. 2. Fundamental theory, 2 marks. 3. Random walk theory, 2 marks. That is part A of the question. So let's answer part A, then we'll answer part B, then C, one section at a time. Now, these are 3 theories of valuation of stock. These are stock valuation theories. The first one is technical theory. What do we mean by technical theory? So we are answering August 2024. August theory. Just 2 marks. Technical theory is one of the 3 stock valuation theories. It may also be referred to as technical analysis, and it asserts that stocks value and future price movements can be predicted by analyzing historical market data, primarily the price and volume. That is the technical theory in brief. Of course, here you are just to say that, then you earn the 2 marks. It is stock valuation theory that asserts that a stock's value, the value of a share, and future movements can be predicted by analyzing historical market data. This theory asserts that. What does it assert? It asserts that a stock's value, a stock's or a share's value and price movements can be predicted by analyzing historical market data. By analyzing historical market, primarily price and volume. Primarily price and volume. By analyzing the historical market prices and volume of stocks or shares, then one can predict the value and price of a share. One can value. Do you understand? Technical analysis. The value of a share and future price movements can be predicted. It's possible to predict what will be the price of a share in future by just analyzing historical market data of the share, primarily analyzing the past price of the share and the past volumes of the share. That is the meaning of technical. And candidates can go further for the sake of understanding this concept and state that it operates on the belief that prices move in trends which repeat over time, reflecting the collective psychological behavior of investors. This theory ignores the intrinsic value, okay, and use tools like charts, moving averages, indicators to identify patterns, to forecast short-term price direction and make trading decisions. So that is a technical theory. 2 marks. Part 2, we have fundamental theory. Fundamental theory. 2. Fundamental theory is another stock valuation theory. Holds that a stock's true value or its intrinsic value is determined by the underlying economic, financial, and management factors of the company. Do you get it? It holds that a stock's true value. It holds that a stock's true value, this theory holds that a stock's or a share's true value, the true value of a share is also known as intrinsic value. This theory holds that a stock's true value or intrinsic value is determined by the underlying number 1, we have economic, financial, and management factors. And management, you don't determine, when dealing with this theory, you don't determine the value of a share by predicting, by studying the past historical market data. No, you look at the underlying economic, financial, and management factors of the company. It involves a deep dive into a company's financial statements, like the income statement, the balance sheet, the cash flow statement, right? Its industry, its competition, and the overall economy. The goal here is to estimate the intrinsic value using methods like the discounted cash flow, and then compare it to the current market price. And if the market price is lower than the intrinsic value, then the stock is considered undervalued and a good buy. You can buy such a share. Fundamental, you go to the fundamentals. You analyze the fundamentals, the balance sheet, the income statement, the cash flow. You look at the economic factors. That's what we mean by financial. Then we have economic factors. You analyze the industry within which the company operates. You analyze the competition and the entire overall economy. By doing so, you'll be estimating the intrinsic value of a share. Then once that is done, when you get that intrinsic value of a share, you then compare that share with the market price of the share or stock. Now, the market price, we know, is determined by the forces of demand and supply. If it is the company that is listed on the stock exchange, then what is listed on the stock exchange, that will be the market price. So that market price is then compared with the intrinsic value. And if the market price is lower, than the intrinsic value, then the stock is considered undervalued and vice versa. And if it is undervalued, then that is the right stock to buy. That's the meaning of fundamental theory. Then we have random walk theory. Number 3, random theory is yet another stock valuation theory. Posits that stock price changes are random and unpredictable. Stock prices. It posits that stock price changes are random. Price changes are random and unpredictable. They are random and unpredictable. They are what? Random, predictable. This theory argues that the current stock price already reflects all the available information, both public and historical, due to the rapid and rational actions of countless investors. And therefore, no form of analysis, neither technical or fundamental, can consistently predict future price movements to gain an abnormal profit. That is to mean that the theory implies that an investor's best strategy is often to hold a diversified, passively managed portfolio. This theory posits that it's not possible to predict the future value of a share, whether you are using the technical analysis method or fundamental method. The stock price changes are random. That means they are not predictable. You understand what it is? Yes, that is what was required to earn the 2 marks for each part of the question. Technical analysis, 2 marks. Fundamental theory, 2 marks. Random walk theory, 2 marks. Now let's move to the second part of the question. The second part of this question reads that Lima Limited paid a dividend of 15 shillings per share in the last accounting year. The dividends are expected to grow at the rate of 10% for the first 4 years and at the rate of 12% thereafter in perpetuity. The investor's expected rate of return is 15%. Required, determine the intrinsic value of Lima Limited's ordinary share. 6 marks. 6 marks. This is part B. Part B. Part B. Part B, we are required to do what? Determine the intrinsic value of the Lima Limited's ordinary share. Value of the share. That is what you are required to do. Now, to determine the intrinsic value of these share candidates, we will look at the question again. You can see we are told that the dividend, the value of the dividend is 15 shillings. 15 shillings. So, to determine the intrinsic value, we will first of all grow the dividend at 10% for the 4 years. We grow that dividend because we are told the dividend will be growing. Okay. After growing this dividend for the 4 years, we then discount the dividends by multiplying the value of the dividend with the present value interest factor at 15% and the number of periods. We discount, then get the present value. Then we are going to get the sum of the discounted values. That is what we are going to do in order to determine the intrinsic value. Then at the end of the 4th year, we know that we will also do a discounting. So we have this table, but we are going to have a table. Column 2, we have dividend. So for example, year 1, look at the question. Year 1, that dividend of 15 shillings will grow at 10%. So we are going to multiply this 15 by 1.1. We raise to 1. Value of this dividend at the end of year 1. Then at the end of year 2, we'll again multiply 15, 1.12. Year 3 will be 15, 1.1, we raise to 3. Year 4, 15 into 1.1 raised to 4. So these will be the values of the dividends for the 4 years. We are growing it. 1.1 means candidates. It will grow at 10%. That will be 100% plus 10%, which means that will be equal to 110%. If you are to convert 110% into decimal, it will be 100. It will be 110 over 100, which is equal to 1.1. That's how I get 1.1. It is 110%. It is growing by 10%. So it will be 100% plus 10%, giving us 110%, which we convert into decimal to get 1.1%. Then that's how you grow it. So I'll take my calculator and grow the dividend. That will be 15 times 1.1. I'm getting here 16.5. Then I have 15 times 1.1 raised to 2. 18.15. Then I have 15 times 1.1 raised to 3. This is 19.965. Then lastly I have 15 times 1.1 raised to 4. 21.9615, 21.9615. This is these are dividends. Then we multiply these values with the present value interest factor at 15%. The values here, the present value interest factors, we read directly from the table. The present value table. If you look at the present value table, at 15%, 1 year. Period is 1 year. It gives you 0.8696. Now, if you don't have a table, then there's an alternative way of getting the interest factor. There's an alternative way of getting this interest factor. Okay? If you don't have a table, that will be 1 over 1.15 raised to 1. So that will be 1 divided by 1.15. Yes, 8696. This is how you get it. Then for year 2, it will be, if you are not using the table, this is how to determine the present value interest factors. For year 2, it's going to be 1 over 1.15 raised to 2. Okay, so that will be 1 divided by 1.15 raised to 2. 7561. This is 0.7561. Then just reading from the table, I will give you an alternative way candidates, but this can be read directly from the table. If you are in the exam room, you don't have it this way. Unless you are given a rate that cannot be read from the table, then you use this formula. But for the purposes of exam and time management, you don't have to go this long route. Just read directly from the table. You can read the present value interest factors directly from the table. Third year read from the table is 0.6575. 0.6575. Then year 3, year 4, 0.5718. Are you following, candidates? Yes. So these are the present value interest factors. Then you recall, candidates, in year 4, again, in year 4, apart from this dividend growing, this dividend, we also need to discount the value of the dividend P0. To get the value of P0, we know this is equal to D0 at year 4 into 1 plus G over KE minus G. So our P0 here will be equal to D0. D0 is the 21. This will be 21.9615. We grow it at 1.1, 1 plus G. The growth rate. We have the growth rate from the question. Do we have the growth rate? Do we have G, the growth rate? Do we have the growth rate? Look at the question again. Look at the question. Are we given the growth rate? The growth rate. We have the growth rate. Yes, we are told. Look at the question. We are told that the dividends are expected to grow at the rate of 10% for the first 4 years. So we have grown this dividend. Look at the board. We've grown this dividend for the first 4 years. Then after 4 years, we read, and the rate of 12% thereafter. After growing this dividend at 10%, thereafter it will be growing at the rate of 12% in perpetuity. So it's going to be 1.12 and not 1.1. Okay, so it's growing at that rate. So we divide by KE. KE is the cost of equity, which is 15%. 15% converted into decimal will be 0.15. Then the growth rate of 12% converted into decimal will be 0.12. Are you following, candidates? Yes. So there are two growth rates, 10%, 12%. The first 4 years, 10%. The last year, 12%. So that will give us the value of this dividend, P0. So we go to the machine, calculator, get the calculator, punch in these figures. Punch in the figures, what are we getting? This is 21.96 into 1.12, divide by 0.15 minus 0.12. This is equal to 819.896. So the discounting, because it's 4 years, the discounting factor is going to be 0.5718. So that's it. So the last column here is to calculate the present value. Then after calculating the present value at each period, we get the total here. That will be the value of this dividend. So we multiply the present value interest factor with the dividend to get the present value. This is called discounting, because this 16.50 is the value of the dividend after 1 year. This is the future value. To determine the present value, we multiply it with the present value interest factor. So year 1 is 16.5 times 0.8696. This is equal to 14.3484. 14.3484. Year 2, we multiply 18.15 times 0.7561. Give us, this is 13, these are many, this is 13.723215. Next we have 19.965 times 0.6575. This will be equal to 13.1269.875. Then we have 21.9615 times 0.5718. 12.557. Then lastly, we multiply 819.896 times 0.5718. This gives me 5328. So with that, we have all the present values. So we sum all the present values to get the value of this dividend. So we're going to get the intrinsic value here by adding all these present values. So this gives me 522.816. This is 0.57 many decimals, 5727. So this is the intrinsic value. That is how to determine the intrinsic value of a share. So the intrinsic value is equal to shillings 522 and 60 cents. That is intrinsic value. That is the intrinsic value. So that is the intrinsic value. And that is part B of the question, August 2024, question 3. Now allow me to move to the next part of the question, which is on CVP. CVP. Let's move to the next part of the question. Part C of the question reads, Tinga Limited manufactures and sells a single product named T140. The following information relates to the product. Selling price per unit is 180. Variable cost per unit is 80 shillings. Fixed cost per annum 5 million. Required Roman 1, break-even point in shillings and in units for marks. Roman 2, the total number of units, the number of units to be produced to earn a profit of 1.2 million. That is the question. We need to calculate, first of all, the break-even point in units, then the break-even point in shillings. So this is part C. We are to calculate the break-even point in units. To calculate the break-even point in units, we know the formula is fixed cost over contribution margin. Just fixed cost over contribution margin. So what is the fixed cost in this question? 5 million. The fixed cost here is 5 million shillings. What is the contribution margin? We know the contribution is equal to selling price minus variable cost. Contribution margin is equal to selling price minus variable cost. The selling price here is 180. The variable cost from the question is 80. So that will give us the break-even point in units. This will be equal to 5 million divide 180 minus 80 is just 100. It's just 100. This is equal to 50,000 units. Now this is the break-even point in units. That means that if the company is to produce 50,000 units, the company will not make any profit, because at break-even point, profit is equal to 0, which means that the total cost equal the total revenue. At break-even point, total revenue is equal to total cost, and we know profit is equal to total revenue minus total cost. So total profit is equal to revenue minus the cost, which will be equal to 0. If the company produces 50,000 units, there is no profit at this point. This is the break-even point. The first shilling of profit will be made after the 50,000th unit. That will be 50,001 unit. So that's the break-even point in units. Then to calculate the break-even point in shillings, break-even point in shillings, that will be equal to the fixed cost over contribution margin ratio. Contribution margin ratio. So we are going to have it at 5 million minus the contribution margin ratio. How do you calculate the contribution margin ratio? Contribution margin ratio is equal to the selling price minus variable cost. That gives us the contribution. Then we divide by the selling price. So this will be equal to 180 minus 80 over 180. So that will be the contribution margin ratio. So 180 minus 80 is equal to 100. 100 divided by 180. This is equal to, the contribution is 0 0.555555. So we divide the 5 million. This gives me 0.55555. So I'm going to divide the 5 million by that ratio. 5 million divide 0.55555. So roughly I'm getting 9 million. When I round off in shillings, this will be 9. That is the contribution margin. I mean the break-even point in shillings. The break-even point in shillings is equal to 9 million shillings. So that is how candidates should calculate the break-even point in shillings and in units. Then the second part of the question reads, look at the question. The number, this is Roman 1, C1, C2, we are to calculate the number of units to be produced to earn a profit of 1.2 million. Number of units to earn a profit of shillings 1.2 million. Now this will be determined, the formula to the number of units. You have to calculate the number of units to earn a profit of 1.2 million. This will be equal to the fixed cost. You remember the formula we gave in our class. This will be equal to the fixed cost plus the target profit. We get the fixed cost plus the target profit. Then we divide by the contribution. We divide by the contribution margin. We divide by the contribution margin. So we know the fixed cost is 5 million. We know the target profit is 1.2 million. This 1.2 million, 1.2 million. We know the contribution margin. Of course, it's supposed to be units. The contribution margin, we had calculated it. Contribution margin is 100. This is the contribution margin, 180 minus 80, which is equal to 1. So this will be equal to 5 million plus 1.2 million, that's 6.2 million. That will be equal to 6.2 million. 6.2 million divided by 100. This is 62,000 units. 62,000. So if the company intends to earn a profit of 1.2 million, then the company must produce 62,000 units. And you can see 62,000 units is greater than the 5,000 units at break-even point. So profit is made after 1,000 units. At 50,000 units, there is no profit. If the company is to make a profit of 1.2 million, then the company has to produce 62,000 units. That is the meaning. So it's possible to calculate the number of units at a given target profit. So that's it, candidates, for today's lesson. We've answered the question that was tested in August 2024, question 3. On our website, we have provided more questions. Our intention is to answer all questions that have been tested before. If you go to our website, you'll find all these questions have answered, and we subsequently revise our content to ensure that we capture all present sittings. If you have any questions, please feel free. You can get us directly. We have our numbers online. If you have questions, if you need special attention, please call us, and we are ready to help you pass your exams and to gather knowledge that will be useful as you build your career. Bye-bye.
So the second concept here, still on basic certainty models, is number 2, multiple product CVP. Multiple product CVP. Where we've said it is where you're producing more than one what? Product. More than one product. When you're producing more than one product, you introduce the concept of weights. You introduce the concept of what? Weights. That is what you introduce. The weights here may be the current sales ratio of the product you are selling or any other. So the weights is what you introduce. Otherwise, the formulas tend to be there. They tend to be the same. Apart from this introduction of what? Weights. For example, to determine your weighted contribution margin ratio, or your contribution margin, so your weighted contribution margin here, which is going to be used to determine break-even point in shillings. And it is also going to be used to determine your profit in shillings and also your target profit, your target profit in units, your BEP in units. You determine it by taking the weight, the summation of the weight, times the contribution margin. The summation of weight by contribution margin. The summation of weight by contribution margin. Let me write this. It is the summation of weight times your contribution what? Margin. The weight of each product times the contribution margin of each product, then you get the the totals. Sorry, or excuse me. The other item we want to introduce is your weighted average contribution sales ratio, contribution margin sales ratio. Which is given by the weight contribution margin sales ratio. Again, the weight of each product by the contribution margin sales ratio of each what? Product. Number 1, to get your break-even point in units, you simply say it is your fixed cost, but now you're going to use your weighted average contribution margin to determine your break-even point in shillings. You're going to determine it as your fixed cost divide by your weighted average contribution margin sales ratio. Then that is number 1. Number 2, if you want your profit, you can say it is simply your contribution margin of your first product by the units of your first product times the contribution of your second product by the units of your second product, all the way to the contribution of all the products that you are producing, minus your fixed costs. minus your fixed cost, or you use the contribution margin sales ratio, of your first product by the revenue of your first product plus contribution margin sales ratio of your second product by the revenue of your second product plus the contribution margin sales ratio of all the products by the revenue of those total products minus your what? Fixed cost, minus your fixed cost. Number 3 is that margin of safety is not changing. Margin of safety is not going to change. You're simply going to say it is your current sales minus your break-even point. Number 4, sales, target sales to earn a given profit. To earn a given what? Profit. To earn a given profit. To earn a given profit, what will you do? You're going to say, if you want it in units, it is going to be your fixed cost plus your target profit divide by your weighted average contribution margin. If you want it in units, in shillings, in units we have already written, it is going to be your fixed cost plus your target profit divide by weighted average contribution margin sales ratio. Divide by weighted average contribution margin sales ratio. We then can now do a question. December 2024. Question 4. Agrovet Group. The question states, Agrovet Group is a multi-divisional agrochemical firm that deals in multiple products. Delta Division, one of its subsidiaries, makes 3 products branded Betax, Zite, and Alpha. The management is contemplating changing the sales mix in scenario 1 to a new sales mix in scenario 2 in order to maximize the net profit. The 2 scenarios are envisaged as below. Scenario 1, the sales costs and output data for the original sales mix for the year 2024 for the 3 products is as follows. You have your sales mix, your selling price per unit, your variable cost, your total fixed cost, and your total sales revenue. Scenario 2, Agrovet Group sales, estimated sales cost and new sales mix as follows. Your sales mix, your selling price, your variable cost, your total cost, and your total sales. Management performance measures are based on cost volume